So I declare open this meeting of the Senate Economics Legislation Committee into the 2025-2026 supplementary budget estimates. I begin by acknowledging the traditional custodians of the land on which we meet today and pay my respects to their elders past and present. I extend that respect to Aboriginal and Torres Strait Islander peoples here today. The committee has set 11th of December 2025 as the date by which senators are to submit written questions on notice, and 29th of January 2026 as the date for return of answers to questions taken on notice for today's proceedings. The committee's proceedings today will begin with Treasury. The committee will be conducting today's hearing via video conference and in person. Under Standing Order 26, the committee must take all evidence in public session. This includes answers to questions on notice. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence. The Senate has endorsed the following test of relevance of questions at estimates hearings. Any questions going to the operations or financial positions of the departments and agencies which are seeking funds in estimates are relevant questions for the purpose of estimates hearings. I remind officers that the Senate has resolved that there are no areas in connection with the expenditure of public funds where any person has a discretion to withhold details or explanations from the Parliament or its committees unless the Parliament has expressly provided otherwise. The Senate has resolved also that an officer of a department of the Commonwealth shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution does not preclude questions asking for explanations of policy or factual questions about when and how policies were adopted. Witnesses are reminded of the Senate order specifying the process by which a claim of public interest immunity should be raised. I incorporate the public immunity statement into Hansard. I remind senators of their obligations under the Behaviour Code for Australian parliamentarians to treat witnesses with dignity, courtesy, fairness and respect. An officer called to answer a question for the first time should state their full name and the capacity in which they appear. I remind committee members and witnesses who are appearing via video conference and who are not speaking to mute their microphones. I now welcome Senator the Honourable Tim Ayres, Minister for Industry and Innovation and Minister for Science, representing the Treasurer. Minister, do you wish to make an opening statement?
Good morning, everybody, and no, thank you.
Thank you. The committee welcomes representatives from the Department of Treasury, Macroeconomic Group and International and Foreign and Investment Group. I welcome Ms Jenny Wilkinson to the Treasury. Secretary to the Treasury, Ms Wilkins, do you wish to make an opening statement?
I do. I believe it's been circulated to the committee.
We have it. Thank you.
So good morning, Chair, and thank you to the committee for the opportunity to make an opening statement. I'll focus my remarks on what's changed in the macroeconomy since my last appearance 8 weeks ago. There have been significant developments in the global economy since I last appeared before this committee. In China, economic conditions have continued to ease, and the Chinese economy is expected to grow by around 5% this year. GDP growth was lower in the September quarter as a result of weaker consumer demand and investment. Data for October points to ongoing broad-based weakness in fixed asset investments. Exports had been holding steady despite the significant contraction in trade with the US. However, more recent data suggests exports may be beginning to ease. The recent 43-day government shutdown in the US is expected to weigh on economic growth in the US. Estimates from the Congressional Budget Office suggest that the shutdown would reduce GDP growth by roughly 0.4 percentage points in the December quarter and raise the unemployment rate by 0.4 percentage points during the shutdown period. The effect of the shutdown on the unemployment rate is expected to be unwound, but the loss in GDP will take longer to be fully recovered. Elevated inflation in a number of advanced economies, including the US, New Zealand and the UK, alongside the easing in labour market conditions, has many central banks confronting a more difficult balance between their inflation objective and their employment objective. There remains heightened uncertainty in the global trading environment. Recent trade and investment agreements between the US and key partners, including the European Union and Japan, have provided some clarity on trade settings. These deals provide lower tariff rates than those initially proposed in April this year. Following renewed escalation in trade tensions between China and the US in late October, agreement was reached to reduce a range of tariffs and to enable trade to resume between the two countries for products such as soybeans and rare earths. Although it's positive to see the US and China working together, trade tensions remain elevated and it's unclear how these will ultimately be resolved. There is also a broader question over the legality of elements of the tariff regime, with the United States Supreme Court yet to deliver a decision after hearing arguments in November. Turning to the domestic economy, yesterday's national accounts reported that the Australian economy grew by 0.4% in the September quarter and by 2.1% through the year. There continues to be underlying positive momentum in the economy and a shift in growth from public to private demand. Over the past year, private final demand has grown at twice the rate of public demand, and its contribution to growth has been more than 4 times that of public demand. Of particular note was the strength in private business investment. There was a sharp pickup in machinery and equipment investment, which is partly related to the building of data centres. Investment in equipment for information, media and telecommunications has increased by around 150% over the past year. Accompanying this investment has been a significant rise in investment in intellectual property products, which has mostly been driven by spending on software. There has also been an increase in investment by the airline industry that has contributed to the recent strength in machinery and equipment investment. The investment in machinery and equipment investment is expected to add to the productive capacity of the economy without having a significant effect on demand, because a significant share of that investment has been imported. There was also considerable strength in dwelling investment. Detached housing activity was particularly strong in the quarter, and work is progressing more quickly on new builds. Apartment and townhouse construction activity continues to grow steadily, consistent with the recent pickup in commencements. Consumption growth has trended higher, albeit more gradually than investment, and it remains modest. Higher growth in household disposable incomes has resulted in a pickup in spending across a broader number of consumption items, with growth concentrated on essential rather than discretionary items. These data are consistent with ongoing modest levels of consumer confidence. Australia's labour market has been resilient. The unemployment rate was 4.3% in October, and employment grew by 1.6% through the year to October, but growth has eased throughout 2025. Leading indicators such as job vacancies and business survey measures of employment intentions suggest near-term stability for the labour market. Although employment growth has moderated, labour force participation, which was 67% in October, remains near its record highs and is 1.3 percentage points above the participation rate in February 2020, just before the pandemic. The increase in the participation rate in Australia stands in stark contrast with other advanced economies, including the US, where participation is well below pre-pandemic levels. Wages growth has remained broadly steady over the past year. The wage price index grew by 3.4% over the year to the September quarter, with the gradual easing in labour market conditions that we have observed has been reflected in the gradual decline in wages growth in individual arrangements to 3% from its peak in March 2023 of 3.9%. Wages for those on enterprise agreements have grown by 4% over the past year, which largely reflects outcomes in state government agreements, including for nurses, police and public servants. Average earnings per hour worked in the September quarter increased more strongly, but this was in part due to higher bonuses and termination payments, which we do not expect to persist. Last week, the ABS published its first complete monthly CPI. This is the result of extensive work and consultation by the team at the ABS, bringing Australia in line with all other G20 economies, and it enhances a critical economic statistic. We expect some additional volatility in the monthly CPI compared to the quarterly CPI, and as the ABS has been clear, it is expected to take around 18 months for seasonal patterns to settle. So we will need to be cautious in putting too much emphasis on month-to-month movements in the CPI over the period ahead. The last couple of readings of inflation have been higher than we had expected, in contrast to earlier in the year when inflation was a bit lower than widely expected. In part, this recent strength reflects temporary factors such as the cessation of state energy rebate schemes and some large annual price increases, including council property rates and childcare, which are making it more challenging to read underlying trends. There does appear to be some persistence in inflation for some household services, including rents, travel services and takeaway food and restaurants, although other components of the CPI have continued to ease, including the disinflation in insurance premia we have observed over the past year. Overall, the macroeconomic picture is one of solid growth in business and dwelling investment, with household consumption recovering more gradually and exports holding up despite a more challenging global environment. The unemployment rate has drifted up over the past year and employment growth has eased, but the unemployment rate remains low and participation remains high. Underlying wage growth has been stable and household disposable incomes have been growing, but households have been saving a little more of this extra income than they have in the recent past. There have been significant declines in inflation over the past few years, but most recently inflation has been a bit higher than expected, partly due to temporary factors. All these data are being carefully considered as we finalise the forecasts ahead of MyEFO. Over the past few days, the potential breach of Section 83 of the Constitution that Treasury disclosed in our 24-25 annual report has been raised in a number of Senate estimate sessions. This matter was discussed in detail with Fiscal Group at Senate estimates yesterday. I take these matters very seriously and was briefed on this matter in the process of signing off Treasury's 24-5 financial accounts and annual report. While it's never desirable to make such an error, I am impressed with how quickly the Treasury staff identified the issue, advised the Treasurer, took corrective action, reviewed our systems and clearly disclosed the breach. Of course, I was also pleased to be reassured that at all times the right amounts were paid to the right entities in line with the program's legislation and in line with agreements with the states. Following careful consideration of this issue, I am satisfied these breaches amounted to an inadvertent oversight. No individuals are suspected of behaving improperly and all individuals cooperated constructively with the reviews we undertook and the corrective action. On this basis, I do not consider there to be any suspected breaches of the APS Code of Conduct. To provide additional assurance over the corrective actions taken to date and to recommend further enhancements, I have asked for a management-initiated review to be undertaken by Treasury's internal audit provider. The Australian National Audit Office has also advised us that they may include payments to states and territories in its next performance audit, and I support this proposal. So in closing, I would also like to take the opportunity to congratulate my Deputy Secretary, Victoria Anderson, on her appointment to the role of Secretary of the Department of Agriculture, Forestry and Fisheries. I'd like to thank Vic for all of her contributions to Treasury over the past few years and for the support she provided me in my transition into this role. Thank you for the opportunity to provide this opening statement and I welcome your questions.
Thank you very much, Ms Wilkinson. I'll go first. You gave a pretty comprehensive overview of your opening statement around the domestic economic circumstances. I wanted to ask you, and particularly around private investment growth and the strong investment growth we've seen in the private sector over the last 5 years. I'm just wondering if you could make a couple of remarks around the importance of the growth in private sector investment overall to the Australian economy.
Absolutely. Thank you, Senator. Thank you, Chair, I should say. So, private investment is a really important part of growth in order to sustain current growth, but also importantly to improve the future productive potential of the economy. The level of private investment in Australia has been high, but growth has been a little weaker than expected over the last year or so. It's very pleasing in these accounts to see the increase in private investment that took place in the September quarter. It was the highest quarterly growth since the March quarter of 2021. And outside of the pandemic, it's the largest quarterly growth since September of 2017. Non-mining investment was driven by machinery and equipment investment. That's what drove the September result. Around 80% of growth in new business investment in the quarter was from machinery and equipment. Previously, we had seen stronger activity in non-dwelling construction, and in part that was, we think, the building of data. Investment that we've seen in this quarter in part reflects the installation of servers and other equipment for these data centres. But broadly, the new business investment that we've seen is being directed to growing sectors of the economy, including new digital technologies, and we think that that is positive for the future.
Thank you. So I guess some of that is what you've talked about is in terms of shifting our economy to the changing environment, certainly also including adjusting to net zero and our net zero plan for acting on climate change, but it's clearly also an economic opportunity for us. And with global investment in clean energy projects, I think is exceeding $2 trillion. Could you talk a bit about how the government's net zero plan, outside of the comments that you've just made, I guess, will make sure that Australia gets its share of this investment locally and internationally?
So I might hand over to one of my colleagues, but I'll just say at the outset, what is very clear in terms of the government's commitment to net zero is that there's a significant transformation of the economy that will be taking place over coming years. I mean, frankly, there's already been a significant transformation that's taken place over the last 15 years with the increase in renewable investment and renewable energy increasing. I can't remember exactly where it was around 2010, but I think it was around sort of 5% of electricity, and it's now about 40% of electricity. And one of my colleagues might correct me if I'm just wrong there in terms of the original start date. There's no question that there's further investment that has to take place. It's the combination of moving to net zero, but it's also in the management of the retirement of existing generators which are coming to the end of their life. The thing that we would focus on from a Treasury perspective is that if there is a significant amount of investment to take place in a sector, what's important is that clear sectors are provided to the private sector to enable them to make those decisions, and that investments that are made are consistent with what the long-run objective or the long-run needs of the economy are. And so that's where a clear articulation of government policy in relation to its objectives around net zero, but also around other factors, is really important for the private sector to have the confidence to make those sorts of investments. Might just see if Dr. Heath has anything to add.
Yeah, I think everything that the Secretary has commented on is absolutely correct. So there is a need to invest in the energy transition in particular, and as the net zero plan points out, that's one of the really important pillars of achieving net zero by 2050, but it's very much the piece of that plan that's the here and now, it's not the future. And I think the thing that is... Oh, sorry, I forgot to introduce myself for my role. Dr. Alex Heath, Acting Deputy Secretary, Macroeconomic Group, for the record. Talking about the electricity system, I think one of the things that's quite clear in Australia and in most parts of the world, that there is an increasing demand for electricity, so there is a need to expand the electricity sectors at the same time as there is a need to, in many cases, and particularly for Australia, replace ageing infrastructure as it comes to the end of its life. So the real question then is what's the investment that's going to be most cost effective for achieving that expansion and replacement? And as we've pointed out in the Treasury modelling report, as is pointed out in the Net Zero plan, as is pointed out in, I'll point to the IEA reports as well, the most cost effective way of achieving that is firmed renewables. And so when we're talking about investment in the economy, that aspect is very important, and as we know, access to energy is one of the things that drives economic activity. So it's really quite fundamental to the future prosperity of the country. As Ms Wilkinson, the Secretary, has commented, one of the things that's really important for investment is clear policy signals, clear sense of the direction that policy is aiming for, and in addition to the suite of policies that were discussed in the Net Zero plan, the government has had quite a strong focus as a part of its productivity agenda, thinking about what sorts of avenues need to be pursued to create a positive investment environment so that we get the investment that we need flowing as efficiently as possible.
Thank you. And maybe just I'll keep this to my last question so that I can move to colleagues. On a, I guess, related topic in terms of clarity and certainty for whether it's international or domestic investors, we do need stability in terms of what the policy settings are for people to invest money. The government's recent reforms to the EPBC Act, I think, provide additional certainty in a range of areas. But in terms of addressing the backlog of environmental approvals for new homes and streamlining the assessment processes, what sort of impact do you expect these changes will have going forward on the pace and the number of homes that will be approved going forward? And I guess the context is, in your last appearance, you talked about, and again, you made some comments this morning around increasing building approvals, really driving some of that performance as well.
So, Senator, I mean, one of the clear messages that came out of the Economic Reform Roundtable that was held a few months ago was that governments, both at the Commonwealth level and at state levels, needed to be thinking about and working on how to improve and how to streamline approval processes. For the Commonwealth, the most significant reform that was raised in that context was the reform of the approvals processes under the Environmental Protection and Biodiversity Conservation Act. So that was certainly raised as being one of the most significant issues in terms of things that the Commonwealth has control of. So the reforms to the EPBC Act certainly are aimed to go in that direction of, in particular, streamlining approvals. In relation to housing in particular, there were two issues that were raised. One is going forward ensuring that the approvals processes can be streamlined. The other was dealing with the backlog of approvals. There was about 26,000 housing approvals that were sitting in awaiting approval or awaiting a decision from the EPBC or from the Department of Environment. My understanding is that in the order of 14,000 of those have now been cleared through the backlog. So that was the second thing that the government committed to at that time, which was putting additional resources into clearing the backlog. So there were sort of both of those issues, both of those things were critical. More broadly, it's been a common theme at the Council of Federal Financial Relations meetings, that's the meetings of all of the treasurers, that there is joint action that needs to be taken is there action that needs to be taken at the state level to improve their planning and approvals processes. Those go to matters which are specific to individual states, and on the basis of those discussions, I would have to say that almost all of the states, well, I should say all of the states, seem to me to be seized of the urgency of improving their approvals processes, and in many of the states, legislation has been passed to speed up those approvals processes. And so that is all positive from the perspective of improving housing supply.
Thank you very much. Senator Patterson.
Thank you, Chair. Just before I get to my questions, just for your time management information, given that we had a fairly long opening statement and then started with government questions, I now think it's unlikely that opposition senators and I presume crossbench senators will be able to get through all of our questions by 11 a.m. So just to flag that, I think we're going to have to go beyond 11 a.m. with the Secretary. I'll be as economical as possible. Secretary, thank you for proactively addressing the $2.3 billion of unlawful payments in your opening statement. That has addressed some of the questions that I was going to raise now. But just a couple of quick follow-ups. You described the breach as an inadvertent breach on part of the officers. I've no doubt that that was the case. I'm sure they weren't deliberately doing that. But from the point of view of the APS Code of Conduct, there's no distinction drawn between deliberate or inadvertent breaches of the law, is there?
So, Senator, I have had the opportunity to, I have had the opportunity to speak with Dr. de Brouwer about this, and I think it's most important that if we go into details of exactly how the Code of Conduct process works, then it would be most appropriate to have a discussion with him. But he has certainly confirmed with me that it is absolutely not the intention that the Code of Conduct framework results in every behaviour that falls short of expectations being assessed as needing a formal misconduct process. And indeed, I think I'd go a bit further to say that if we took that approach, I would be concerned about the risk that then means that people are less likely to come forward and reveal errors when they come across them. So I am completely with you that breaches like this are unacceptable, and breaches like, we have to set our systems up so that breaches like this are avoided to the maximum extent possible. But I also want systems where, when breaches like this are uncovered, well, first of all, they are found. So people are actively looking to make sure that they haven't occurred. When they're found, they're fixed as quickly as possible and they're fully disclosed. And I think that's really critically important. And I would be very concerned that if there was overuse of the Code of Conduct process, I would be concerned about the impact that would have on culture.
Sure.
So in terms of the advice that I have had from Dr. de Brouwer, I have to make a judgment that there is a suspected breach of the Code of Conduct in order for me to conduct an investigation. I have received advice from my department that they do not, from my corporate team, that there is no suspected breach. I have gone through a lot of this material myself, including in preparation for estimates, and I am not of the view that there is a suspected breach of the Code of Conduct in this circumstance.
Sure, I appreciate the point you're making. We certainly do not want to have a culture where public servants feel like they shouldn't bring forward, breaches, inadvertent or otherwise, when they occur. I'm not contesting that, but I'm advised the relevant part of the APS Code of Conduct says, and I quote, "An APS employee, when acting in connection with APS employment, must comply with all applicable Australian laws. For this purpose, an Australian law means A, an act including this act or any instrument made under an act, and B, the law of a state or territory including an instrument made under such law." It doesn't say, except for inadvertent breaches of the law. And I would be concerned if the impression that was taken from this is that it's not a serious matter, or it's a less serious matter if it's inadvertent rather than deliberate. I think breach of the law, and particularly breach of the Constitution and in the payment of money, is a serious matter.
Absolutely.
Okay. Just coming back to one other aspect of your opening statement, you said you became aware of this, or you were briefed on this in connection with the preparation of Treasury's financial statements. Was that the first time this was drawn to your attention?
It was.
Shouldn't it have been brought to your attention earlier?
So, as you know, I commenced in this role in mid-June. Perhaps it could have been brought to my attention earlier. I'm telling you when it was brought to my attention.
And
so that
what
was on the 12th of September.
Sorry, the 12th of September.
Yeah.
So, I mean, we heard evidence last night that there were 2 breaches, one of which came to the attention of the department in November, and another one which I think came to the attention of the department in May. Someone will correct me if I'm misremembering that. You weren't told till September, and you started in June?
That's correct.
That's months and months and months after these breaches were identified. I would have thought, incoming brief, new secretary, by the way, you should know, we made a bit of a mistake here and spent $2.3 billion of taxpayers' money unlawfully.
So Senator, one of the reasons why I have been keen to initiate a management-initiated review of our processes is to get to the bottom of exactly these sorts of questions. When should these sorts of matters be elevated to the Secretary? So that's, I mean, I guess I've just been open and transparent with you about when I was informed, but the Deputy Secretary who was here yesterday, Mr White, was also clear about all of the processes which were undertaken internally upon uncovering each of these errors. But that's so. I have requested that review be undertaken. I am keen to hear about that review in relation to what other things about the way in which we handled this process could be improved into the future. So I'm absolutely open to that.
Sure. Do you have a preliminary view that you should have been told earlier, though?
Well, so first of all, I wasn't Secretary at the time.
No, but you were Secretary of the Department of Finance. No,
I was Secretary of the Department of Finance. This goes to internal processes. I think probably my better view is that these sorts of matters would be brought to the Secretary when they are uncovered. I don't think there's any reason why they shouldn't be. So that's my honest view. Okay,
no, I think that's important. And obviously you weren't notified as Finance Secretary.
No, I wasn't.
No, and we heard in estimates this week that the Finance Department learned about it first through the financial reviews reporting. It would have subsequently come through to them by more formal channels, but the first time they learned about it was in the AFR, and I think it was the same for the Finance Minister as well.
Correct.
We also heard that PM&C wasn't notified at any point as part of this process, and the ANO, I think, was alerted to it a little bit earlier. But as part of this review, do you think we need to have a look at the disclosure mechanisms? It seems to me that an offhand mention in the Treasury's financial reporting is not the most prompt or transparent way to disclose something like this.
So I first of all wouldn't say that it was an offhand mention in the financial accounts. It's a clear report in the financial accounts, and the matter was was absolutely clearly disclosed, and we had of course briefed the Treasurer when these errors were uncovered. I am completely comfortable with the idea that the management review works through all of these issues in relation to what is the most appropriate way to deal with breaches of this nature, because I certainly agree with you that breaches of the Constitution are not things to be taken lightly. I, obviously, as Finance Secretary, I had to make decisions about, matters which were significant breaches of the finance law, and had to bring those to the Minister's attention, and I'm certainly aware that I did that on one occasion. I do think that some of that guidance material, so this is guidance material, not law, in terms of how disclosures should be managed. And some of that guidance material is important because there would be some breaches which might be significant but not significant enough to be reported in your financial accounts.
Right.
And so I do think it's important that there are mechanisms to tell agencies that, your financial accounts is not the only way in which you can disclose an error like this. There are other mechanisms. But the fact that we disclosed it in the financial accounts and made it, and in fact that this was discussed at length, including with the ANAO, in the process of finalising the financial accounts, and there were no issues raised in that process, is something that I also took some comfort from.
I understand, though, that it was on page 143 of Treasury's annual report that this was disclosed. That's not exactly prominent, disclosure, is it? You have to wade pretty deep into the report to find it.
It's at the appropriate place in the financial accounts. I mean, I don't have a particular view about that.
Okay, Chair, are you seeking to rotate the call?
Well, if you want to keep going another 10-minute block, or I'll rotate. It's up to you.
No, I think it's reasonable to rotate the call.
I mean, if a public company discovered they had broken the law to the tune of misusing shareholders' funds of $2 billion, they'd need to make a disclosure immediately, wouldn't they? Why doesn't the same rules apply to the public sector?
Senator, I don't have a particular answer to that question other than the fact that in this particular case, there were no errors made in any of the payments. There were no errors to the individuals to the states who received the payment. There was an error in the process. This was discussed at length yesterday. There was an error in the process through which the payments were authorised. And I'm not saying that that is not acceptable. What I'm saying is that it is important that these errors are disclosed. As again was discussed yesterday, and again, it's not acceptable, but there are breaches in these sorts of payments which occur from time to time, and the standard way in which they have always been reported has been through the financial accounts. And if you look back through the consolidated financial statements, that's clear over
I just think the material nature of this $2.3 billion should have been disclosed as soon as you discovered it. And as I say, the double standards here are why people lose trust and faith in government when the governments impose massive obligations on private actors but don't apply the same rules to themselves.
I suppose, Senator, that these kinds of... Firstly, I'd say that I think if a sort of fair-minded watching of the estimates that Fiscal Group dealt with this, and then listening to the way that the Secretary has accounted for this, should give people confidence about the open approach that has been taken here and the kind of culture that that is being sought here. That's the first point. Like, I do think that kind of leadership is important and valuable and sends a very clear message to staff within Treasury about the approach that the government takes here. The second thing to say is that these kind of procedural errors occur from time to time. In 2019-20, in the Department of Education, Skills and Employment, there was a payment of $14.6 billion. The Australian Government solicitor subsequently provided advice that the Australian Education Act did not provide legislative authority to draw down those funds, and as a result, all payments of GST made to non-government schools since 2000 to 2001 are technically in breach of Section 83, notwithstanding that the recipients received the correct amount of funds. It is analogous here that there's not a misuse or misallocation of Commonwealth resources. What has occurred here is a proper allocation of Commonwealth resources for a publicly understood purpose, where there has been a procedural and serious error in terms of the way that the process that has been undertaken to deliver those payments to the states. I don't raise the other matter that happened under the previous government to sort of engage some sort of relativism here. It is important in the way that these are responded to, and it's not right to say that this is analogous to errors that have occurred as a result of a malign intent. Formed by prime ministers and ministers, and that's so that is
now responding to straw men.
No, that is. I mean, the robo-debt thing was a malign intent.
Okay.
Minister, thank you. Yes, we're going to move on.
Thank you. I'm happy to move on.
Senator McDonald, and I'm going to. I'll try. We'll stick to 10-minute blocks, and I'll give people a 2-minute warning. Thanks.
Terrific.
Senator.
Thanks, Chair. Good morning, Ms Wilkinson. I wanted to ask you, in Budget Paper 1, page 43, Table 2.2, it's titled Domestic Economy, Detailed Forecasts. Now, in that, there's some assumptions made at point H, footnote H, about commodity prices being assumed to decline from elevated levels over 4 quarters to the end of March quarter of 2026. And I won't read them all out, I'm sure you're familiar with them. The chart shows Australia's terms of trade are forecast to decline for 4 consecutive years. So I want to ask you, are there updates to these overall projection percentages?
So, Senator, every budget update, we update our commodity price assumptions. So we will have updated commodity price assumptions in the mid-year update, which will be released before the end of the year.
All right. I want to ask you about Treasury's forecasts for beyond the forward estimates, or what assumptions Treasury is making.
For commodity prices in aggregate or for the terms of trade? I'm not sure what's your question.
For the terms of trade. This is what I'm referring to this table. Make that assumption.
It's all right. Dr Cagliarini might be able to help you there.
Yep. Adam Cagliarini, First Assistant Secretary, Macroeconomic Conditions and Population Division. Beyond the forwards, we actually grow a number of prices at around 2.5%, so we don't take the terms of trade and grow that at 2.5%. Terms of trade is the price of exports divided by the price of imports. And so it'll just depend on how what exports are doing relative to imports. But typically, the terms of trade should be relatively stable beyond the forwards.
All right. So you're making assumptions about increase in commodity costs, particularly mining commodity costs?
It isn't based on an assumption. It is based on the fact that we would expect, after a period of time, that prices in the economy would be growing at roughly 2.5%. Obviously, we know over time there will be other shocks that will come into the economy, but that is just an assumption we use beyond the forward estimates.
So I think Dr Cagliarini is saying it's not a bottom-up forecast of each individual commodity price and what that then means. It's an overarching assumption about what the terms of trade, how much the terms of trade will increase over time.
Okay, because I'm just noting that we've got, minus 6.3, minus 2.5, minus 6, minus 3. So they're all fairly significant falls, but you're telling me you're making an assumption that there will be a 2.5% increase in growth in prices in the economy, and that will result in the terms of trade returning to a positive growth numbers?
Probably more likely closer to 0, I would say, because the price of exports and the price of imports will be growing at roughly the same rate.
The footnote indicates that Treasury can isolate the impact on coal and gas separately to measure the impact on the terms of trade. How do you measure the impact of coal and gas separately and their relevance to our terms of trade? How do you do that?
So in terms of the forecasts here, we're actually using, we're just basically using the price information. So when we put the forecast together, we calculate some average for the quarter that we're starting the forecast from, and then we have what are called anchor prices in US dollars. So for gas and coal, we have them declining to those anchor prices after a period of time, up generally over 4 quarters. The difference there from from round to round is that the exchange rate will affect what those US dollars are in Aussie dollars.
Okay. I should have clarified, when I asked you before about the forwards projections for terms of trade, you said that you are projecting that terms of trade will return to zero. When do you expect that they will return to a positive number?
So the terms of trade will probably be, what we would have in the forecast, so we've got the detailed forecast periods for 2 years. There's another 2 years of the forward estimates. That's where the terms of trade are basically flat. And then beyond that, prices are growing. Export prices are growing at roughly 2.5%. Import prices are growing at 2.5%. So the terms of trade will not go into positive territory. It'll basically be around zero.
Right. So, okay, so you're not projecting a return to positive growth in our terms of trade in the medium term?
That's correct, Senator.
Do you measure the impact of renewable energy exports into the terms of trade? And if so, what impact will that have over the forward estimates and beyond?
I'll pass over to my colleague just briefly. In the current forecasts and the current data, renewables so far aren't a very big part of our energy exports. But I'll turn to, so they're not really factored into explicitly into our forecast, but I'll turn to Dr. Heath to talk to the projections.
Yeah, so I think the graph that you've referred to previously is chart 4.5 in the Treasury's modelling report. And that shows that I'm basically agreeing with Dr. Cagliarini that the increase in green commodities over that near term that he was talking about, where we do more bottom-up forecasts, is actually pretty small. And so we don't itemise that for that period. And then, as we just discussed, when we get to forecasts or projections of the medium term in the budget, we're using a much more top-down methodology. So you can't translate what's in the modelling report, which is projections under specific scenarios, into the budget projection process, which uses top-down macro models. Once you get past that very near-term period where you're thinking about commodities in a more specific way.
All right. I'm going to come back to some of those points shortly. I do want to just be clear here that there is no year that Treasury experts expect that the terms of trade will be positive again. You don't have that on your horizon at any point.
So I think what's important here, as Dr. Cagliarini has pointed out, that we do think about the bottom-up trajectory of commodity prices over the near term, as he has described. In this instance, the commodity prices that we have today are higher than those anchor prices, so there's a glide path where they decrease over that near-term period. Beyond that, we're not really forecasting what prices will be doing. It's very much a technical assumption driven.
I understand, but as far as the terms of trade, we're hearing that we are flatlining at best, negative in the near term, flatlining later, and there is not an expectation for a return to positive terms of trade.
The technical assumption we make is that it doesn't change over the medium term.
So can I just also say, Senator, in part this will also, it's not just a reflective of export prices. So as we got in the forecast, that is correct. But there will be occasions potentially where the terms of trade might increase, and that's when import prices are falling, and that could just be just a result of the changing composition of our imports. So that is a scenario in which that could occur. That's not what we've envisaged in the set of forecasts that were published in budget paper number 1.
So when you say the mix of exports, I assume you're referring to the increase in green exports that has been modelled in other places in Treasury documents?
No, so I was referring to imports, not exports. So the denominator of the terms of trade, so import prices fall, that will actually put upward pressure on the terms of trade. depending on obviously what export prices are doing. There are scenarios in which we could predict terms of trade to increase, depending on what's going on with our predictions for import prices.
Okay.
Senator McDonald. 1 minute left.
So I do have... I want to start a new section, so... All right, thank you.
Yep, okay. Senator Hume? Patterson?
Thanks, Chair. Secretary, I just want to revisit some evidence from the last round of estimates about the budget. You might remember we had an exchange about apportioning, various causes of increased spending, and in particular, I wanted to know whether you could distinguish between government decisions and variations that had accumulated over time. You said, and I quote, that would be a very difficult thing to do, and that it's not clear to me how you would draw that distinction. You also said, I've never seen an ex post assessment of how you would distinguish the outcome or the change in the outcome between policy decisions and estimates variations. Have you had any further reflections about that exchange since then?
Senator, we were, so not in particular. I mean, I stand by what I said. What we were talking about, what you were asking me about was, I think you asked me about what the impact of decisions that have been taken by the government since they came to power were on the final budget outcome in 24/5, and that's what I said was, that's a very hard thing to isolate, to actually determine, and I stand by that.
But it's not hard at all. You do it in the budget papers every year, and your colleague, Mr White, was able to take me through the relevant tables in the budget papers that do exactly that. It's a routine thing.
So, Senator, what I said and what I stand by is that every year the budget papers in the reconciliation tables outline the difference, the distinction in that year between policy decisions that have been taken and estimates variations that have been that are affecting the underlying cash balance. But, for example, and I think we talked about this last time, a policy decision could have been taken in the October budget of 2022. The estimate of that impact, that policy impact, was in that reconciliation table in that year. If the cost of that policy was subsequently varied because economic conditions have changed or because the particular policy parameters, there were some policies, there were policy-specific things that had changed, then that will be reflected in a change in an estimates variation in the subsequent year. So in order to determine what the net impact of that particular policy decision was, flowing all the way through to, say, the 24/5 final budget outcome, I would need to look line by line about the policy decision and all of the estimates variations that related to that policy decisions and to net them out. I'm not trying to be difficult here. I'm just trying to be clear that this is we do our very best in the budget process to distinguish and to clearly articulate in each budget what the difference between policy decisions and estimates variations are. But if you want to add them up over time, and you can add them up, you just need to be careful about what the conclusion is that you're drawing or the inference is that you're drawing from them. That's all the point that I was making.
Sure, but not only was Mr White subsequently able to help me when I asked these questions to him in a subsequent session of that estimates, and he had advance notice that I was going to ask it, obviously, because I asked it to you first. But on notice to one of the questions that I asked, Treasury provided details going back even further than I'd asked for. I think back to decisions taken in 2017 or 2018 on the 24-25 financial year and broke it out by government. So you said it was a very difficult thing to do. You've never seen an ex post assessment how you would distinguish, and that it's not clear how you draw the distinction. But Treasury just does this as a matter of course. It's a routine thing in the budget papers. So
in that answer to the question on notice, we are very explicit. We say it is not possible to calculate for a particular year the initially costed impact of all policy decisions plus subsequent estimate variations to those decisions. What we have done is we have reproduced for you in that table the policy decision line from each of those budgets, and you can add those up if you want to. and you can. But if you want to then infer something about whether that is what the total impact of policy decisions has been, I would just counsel you that you need to be careful, because it doesn't capture all of the variations which would take place after policy decisions.
Have you also counselled the Treasurer to be careful? Because, as I pointed out to you at the time, on page 1 of Budget Paper 1, the government makes the same claim.
So you can, as I've said, you can, and the government can add up difference. It depends on what you're doing with these numbers. That's the point I'm trying to make, or the inference that you're trying to conclude from them. So I had thought that what you were, I think, and this is where you were going yesterday, I think, was a suggestion that were it not for these policy decisions, what the underlying cash balance would have been. And I think that that's just not something that I think is an inference that you can draw from adding up the policy decisions in a series of reconciliation tables.
Well, if that's true about what I say, then it's also true of the most frequently repeated talking points of the Treasurer and the Finance Minister. They make claims all the time about the effect of decisions they've taken and the improvement that has given to the budget bottom line. It is central to their political argument. So have you provided this advice to them as well as you're providing to me?
So the same advice. So the advice I'm providing to you, and it's the same advice I would provide to them, is you can add up these lines. And I mean, one of the figures that is used by government, which is to look at each budget estimate as to what are the increases in tax revenue, which have been measured in each of those in each budget. That is a factual statement. In each budget, that is the variation in each of those, and if you add them up, that is indeed an estimate of what that total change has been. Senator, it's a question of the inference that you're going to draw from it, not the actual number themselves. That's the only point that I'm making.
Sure, but the Treasurer and the Finance Minister say all the time that the effective decisions taken by the Albanese Labor government has improved the budget bottom line by X billion dollars, that we've banked this proportion of additional revenue as saves. So you're saying we should take those claims with a grain of salt?
No, I'm not saying that. I'm saying that if you are making a factual statement about adding up elements of the reconciliation tables, or in the budget papers adding up the savings and reprioritisations estimates that have been made at each budget, and I think that's the only claim that the government's making, that these are the savings and reprioritisation decisions that we have made at each budget, and we're adding them up into an aggregate, and that's what they're presenting.
I think their claim is much stronger than that. They claim that this is evidence of better budget management compared to their predecessors, and they say that the 2022 PFO numbers are what their predecessors would have delivered had they been re-elected, and therefore this demonstrates, their claim to superior budget management. I mean, they're making a very serious political claim based on what you're now saying are numbers that we shouldn't put too much stock in. We should be very careful about drawing inferences from.
You've got 2 minutes.
I think the distinction that so governments often compare outcomes to earlier budgets, like in terms of what has been the change in the underlying cash balance between, for example, PFO and the latest budget. Those comparisons are factual comparisons as to what has been.
That's exactly what I was trying to do. What are the cumulative impact of decisions made by this government compared to the trajectory that they say they inherited from the previous government? That's all I was trying to do, and it shows that the net effective decisions taken in the last financial year was to push the budget into a $12 billion deficit with what otherwise could have been a $10 billion surplus, because in net terms they spent $22 billion last financial year as a result of decisions taken.
So I think the concern I have, Senator, just to be open with you, is it's the inference, it's the counterfactual. What would have otherwise happened? Now, the projections for the budget at PFO in 2022 were the projections for the underlying cash balance and all of the lines at that point.
Sure, but that's exactly my point about the government's claims. They're using a counterfactual as well. And they're using a very pessimistic counterfactual, which was at the end of COVID, which had very modest assumptions about returns to growth and revenue, which have been massively exceeded in reality. We've discussed that with your officials as well. It's, I think, $370 billion in gross terms, about $270 billion in net terms of additional revenue collected compared to what was forecast in 2022. And it also doesn't take into account decisions that might have been made by those governments had they been re-elected. So it's literally exactly the same. Counterfactuals being compared.
So I don't think I would. I mean, it depends. So the PFO and each budget presents the best estimate of what the trajectory for government spending and deficits is over the period ahead. I mean, that, like, unless you're going to say that every budget is a counterfactual. It is at that time what is the best estimate of the trajectory at that point. That's what the PFO was. That's different.
This will be my last question.
Sorry, that is different, I think, Senator, from saying if these decisions weren't taken, this is what the outcome would have been, which is what I thought you were inferring about the 24/5 outcome.
What I'm saying is that the rule has to be consistent for both parties here. We can either compare that baseline and the effect of decisions taken against it, as the government does, to claim credit for better economic management in their words, or that's an unreasonable comparison that should not be made because these things are very hard to estimate. It can't be reliable and accurate when the government does it, but unreliable and dubious when the opposition does it.
I'm not saying that, Senator.
Okay, thank you. Thank you, Chair.
Thank you. Senator McKim.
Thanks, morning, Ms Wilkinson. Thanks for your opening statement. It's very comprehensive within its sort of self-defined scope, but I confess I was waiting for you to mention climate change as a risk factor to Australia's economy, and as it turned out, waiting in vain. So I just wanted to put something to you and ask you to respond. Climate change is driving not just an environment-wide catastrophe and not just a society-wide catastrophe, but in the context of your area of responsibility, it's driving an economy-wide catastrophe. And of course, that's not just limited to Australia. This is global in scale. And I want to refer you to one report from the Institute and Faculty of Actuaries and the University of Exeter. These are acknowledged experts in the field of projecting climate impacts into economic impacts. They've found that there is a plausible scenario where there will be a 50% loss of global GDP by 2070. We're on track for 3 degrees of warming. That means 4 billion people dead well before the end of this century. I mean, we are facing planetary insolvency because of climate change. Why doesn't that, I mean, leave aside the fact that the government you work for is enabling and complicit in these matters because they're rampantly opening new coal and gas mines every time they get a chance. That's not on you. But why doesn't easily the biggest risk to Australia's economy even get a mention in your introductory remarks?
So, Senator, I was clear. I mean, so I appeared before estimates 8 weeks ago. In my opening statement, when I appeared 8 weeks ago, I discussed the work that Treasury was doing on climate change. I was clear in my opening statement today that I was providing an update on macroeconomic developments since then. I wasn't discussing sort of everything that is relevant to the macroeconomy over the next 50 years. So it's not, there are a range of, there are a range of significant risks and matters and other things, including climate, that I didn't mention in my opening remarks today, because the purpose of the opening remarks is really to provide some clarity to the committee on what's changed since we appeared 8 weeks ago and what some of the most recent macroeconomic data are suggesting about where the economy's up to.
All right, thank you. Well, I'll just indicate, not on the committee's behalf but on my behalf, that updates on the work that your department is doing to prepare us for the catastrophic events that we're basically sleepwalking into would be appreciated. Could I ask you about fuel tax credits, please? Fuel tax credits are one of the largest expenditure programs in the budget. Budget paper number 1 shows growth rates over the estimates of between 6.5 and 7% per annum. Can I just pause there and make sure that we can agree on those numbers?
So, Senator, I have colleagues from Macroeconomic Group and International Group with me here today. I don't have colleagues from Revenue Group. Okay. They appeared yesterday. So I don't have those figures in front of me, and I don't have officials who can assist me in answering this question. Just a heads up, I may end up having to take this on notice.
That's fair, Ms Wilkinson, thank you. I wanted to put to you that, like 10 years ago, fuel tax credits ate away about 32% of fuel excise revenue, and now it eats away at about 38%. Are you able to just comment on what's driving that increase in fuel tax credits relative to fuel excise? I genuinely don't understand how that could be happening.
I don't have that answer with me. I'll have to take that on notice.
That's fine. Fortescue, which is the third largest recipient of fuel tax credits in the country, have said that their investment plans to decarbonise are, quote, shredded to ribbons, because they're paid $190 per tonne of emissions that they create by burning diesel. Now, Fortescue wants to decarbonise, but the fuel tax credit system prevents them from doing so because, as a public company, they have legal obligations to their shareholders. We've got a situation now where, under Safeguard, mining companies have to pay about $30 for an ACCU to burn a tonne of diesel, but they're paid $190 from the government to burn that same tonne of diesel, which means there's a net $160 per tonne benefit paid by the Commonwealth to encourage mining companies to burn fossil fuels. Is that efficient, and does that warrant attention from Treasury?
So again, Senator, this is a question I'll have to take on notice, and we'll give you a comprehensive response from Revenue Group.
All right, thank you. Do fuel tax credits distort investment decisions by mining companies, do you think, Ms Wilkinson?
So fuel tax credits are part of the system part of the overarching tax system. I don't have a particular answer to you in relation to whether they distort decisions. They are part of the costs of doing business, and that's how it's treated in the tax system. But, Senator, as I say, I think it would be more appropriate for these questions to be put to Revenue Group.
I just wondered whether you had a view on these things. All right, if you could take that on notice as well, sure, please, Ms Wilkinson, thank you. Just in the last couple of minutes I've got, I wanted to ask some questions on the capital gains tax discount. Obviously, the Senate has determined that it will run an inquiry into this particular tax break. And I know Treasury's done a lot of work on this in the past in terms of modelling changes. But I just wanted to put this to you. You supported the Treasurer in his economic roundtable earlier this year. The top priorities that came out of that economic roundtable were a fair go for working Australians and intergenerational equity. Let's take working Australians first. Someone who makes their money flipping investment properties pays about half the tax that someone who goes to work to make the same amount of money pays. In fact, going to work in Australia is actually the worst way to make money. By far a better way is to invest and then take advantage of the capital gains tax discount, which, as I say, means you pay about half the tax that a working Australian does. And in terms of the distributional impacts of the capital gains tax, 50% of the benefit goes to the top 1% of income earners in this country. So that relates to working Australians. If you want to look at intergenerational equity, about 70% of the capital gains tax discount benefit goes to older Australians, people over 50 years of age, and almost none, quite obviously, goes to people under 35 years of age. So it'd be fair, wouldn't it, to suggest that if the government wanted to deliver a fair go for working Australians and deliver in terms of intergenerational equity, the capital gains tax discount would be right on the chopping block, wouldn't it?
Senator, you're at 9 minutes.
That's an opinion.
Yeah.
I'll ask the minister then.
Well, I've been reluctant to intervene sometimes on the opinion question, Senator Canavan, because it's a more broad-ranging
Well, why aren't you
discussion. But
changing
I was starting to get inclined to intervene on this question, because I do think you're asking the Secretary to venture an opinion that's outside the bounds of where the government's at on these questions. We're not considering changes to capital gains tax or negative gearing arrangements. I know that the Greens Party and the Liberals and Nationals have teamed up in the Senate to assist each other in developing a proposal to abolish capital gains tax and negative gearing. If the Liberals and Nationals want to be part of that policy development process, that's a matter for them.
Not allowed to have inquiries anymore.
I'm done, Chair. Thank
You
you.
can have as many as you like on that. As many as you
We will
like.
go back to Senator Patterson. Thank you.
Thank you, Chair. Secretary, I just want to talk a little bit about the observations you made about the economy at the moment. The Deputy Governor of the Reserve Bank, Andrew Hauser, said in a speech recently that he's concerned that the economy is bumping up against its natural speed limit, even with relatively low levels of economic growth at 2.1%, because it's generating inflation. Do you agree with that observation that ordinarily 2.1% economic growth shouldn't generate inflation above the band?
Senator, I certainly think when you're thinking about how much economic growth the government, an economy can handle without generating inflation, you need to think about what the likely size of the output gap is, and you need to think about what the kind of potential growth rate of the economy could be. I think, as I tried to outline in my opening statement, where we are at the moment is we are in a world where we've had a period where we've had growth that's been returning to what most people would think would be around potential. Where exactly is potential is one of those things that, frankly, you won't know until after the event. But the last 12 or 18 months, the fact that the unemployment rate has been drifting up over that period suggests that we've probably been growing at a rate that's below potential and that there's been an output gap. On the other hand, as I said, and over that period, obviously we've had a decline in inflation from the sort of levels they were at the end of 2022 down to current levels. And earlier in the year, I think we were, and most commentators were surprised on the downside about inflation. More recently, in the last few observations, we've been a bit more surprised on the upside. So it's a net question that we're talking about in terms of trying to understand kind of where the economy is at the moment.
But, 2.1% economic growth is not terrible, but it's not particularly high by historical standards, is it?
No, it's not particularly high by historical standards, that's right.
And ordinarily, growth of that level wouldn't be generating inflation unless the economy is coming up against capacity constraints, right?
So I think this is one of the points that Mr Hauser made, is that one of the unique features of this cycle is that the inflation rate has been able to be brought down from high levels to close to the target band without generating significant unemployment. So in almost all other cycles that I'm aware of, when inflation has been reduced significantly, we've ended up with very high levels of unemployment, or much higher levels of unemployment. There has therefore clearly been excess capacity in the economy, and that has had to be unwound. One of the things that I would say is something that has been a good thing about this cycle is that the Reserve Bank has managed to bring inflation down without generating significant unemployment. That is then, therefore, now presenting us with a situation where we are, towards the end of this. I mean, I think they've talked about there being a narrow path for some time. We are still on this narrow path. There is not a lot of excess. There's not a lot of excess supply in the economy. Excess capacity in the economy for us to absorb.
Sure, but it's not mission accomplished yet. I mean, inflation is above the band and rising.
So I think we have to be a little bit careful about trying to kind of capture what the underlying trends are. As I say, inflation was a bit lower than people had expected in the first few months of this year. It's been a bit higher than we've expected in the last two observations. Is it rising? I'm not sure.
Well, the last three prints show it rising.
So yes, except that so Senator, as the Governor pointed out yesterday, there has been a significant impact in these last two prints of one-off factors and factors which are expected to be temporary. So we need to look at this and analyse this as it unfolds in order to make a judgment about where inflationary pressures are. We aren't seeing anything, for example, in terms of a lift in wages growth, for example. So generally, if there were increasing inflationary pressures, you would start to see a lift in wages growth, which we haven't seen at this point. So,
I don't think that's what the government says, but anyway, is one of the potential constraints, one of the potential speed limits on the economy productivity growth?
Productivity growth is an element of potential growth, yes.
So if productivity is not growing fast enough, then that could lead to higher inflation.
So I think I'd probably put it the other way around, which is that stronger productivity growth would support stronger growth in the economy without generating inflationary pressures.
Yes, I mean, that's basically what I was saying, but if nominal GDP is rising but productivity is static or falling, that's likely to be inflationary, isn't it?
Real GDP, you mean?
Yes, sorry, yes. If real GDP is rising but productivity is flat or falling, it's likely to be inflationary.
Not necessarily. So I think when you're talking about that, the difference between that is growth in the labour force. So that would be the difference. So we're talking about labour productivity. The difference between labour productivity and real GDP will be what's happening with the growth in the labour force.
In the size of the labour force, you mean?
The growth in the size of the labour force, the growth in the size of employment.
Okay. So the Treasury's made a prediction or forecast of 1.2% productivity growth. Do you stand by that? Do you think that's realistic?
So that's been the long run assumption for productivity growth. I think it was reduced in the October budget of 2022. That's a long run.
I think it's 1.5% long run, isn't it?
1.2.
I thought the 1.5% budget was a long run.
It's 1.2. 1.2% is the long run assumption for productivity growth. In our forecasts, we return to the long run outcome for productivity growth, but not in the first couple of years of the forecast period.
Given recent performance, do you think it's realistic that we will get to 1.2%?
So it's very hard to predict productivity trends. I think the government's been clear that productivity growth has been less than sort of historic levels, I mean, frankly, for the past 15, 20 years. And there's been quite a lot of discussion about that. When you think about productivity growth, you've got to think about both, if you like, what the long-run structural factors are, but also what the cyclical factors are. And so those things have to come together when you're trying to think about what the kind of outcome for productivity growth would be.
But productivity growth actually went backwards over the last 3 years. we went backwards roughly to 2016 levels over the last 3 years.
And some of that, Senator, is because we've had very strong employment outcomes. So it's a cyclical. I mean, quite a lot of this has been driven by cyclical factors. Now, the fact that there's been a slowdown in productivity growth sort of structurally across many countries has been discussed at length. But if you just look over a period in which we have had, as I say, a good performance outcome in terms of the employment market, that, over this period, I would say that there are cyclical factors which have been very significant in driving these outcomes.
Okay, just finally then, Chair, the RBA, their forecast is for 0.7% productivity growth.
The RBA only forecasts over the next 2 years. So they have and we have a similar forecast for the very short run underlying productivity.
Really? So Treasury is predicting 0.7% over the next couple of years?
So I can get Dr. Cagliarini to talk about how we forecast, but that we have in the short run. We have underlying productivity growth, which is weaker, and it returns to 1.2% to the end of the forecast period.
Doesn't that have implications for the budget forecast, though? If it's in fact going to be lower over the next few years, it won't reach 1.2% until the out years? Or is that factored in already?
It's factored in.
Okay.
It's in the forecast.
Okay, so when do we think it will return to trend?
We've got that towards the end of the forwards. We've got it returning to trend. I just wanted to also just explain the difference between the RBA's productivity assumption and us. So that 1.2% assumption that you referred to refers to GDP per hour. The RBA is looking at non-farm GDP per hour. So in the statistics we got yesterday, GDP per hour was growing at 0.8% over the past year. Non-farm GDP per hour was at 0.5%.
Okay. All right. Thank you. Thank you, Chair.
Thank you. Senator Bragg.
Thanks very much. I provided the document to the Secretary to table just in relation to 5% deposits, but I just have a few questions at a high level for you, Secretary, about housing.
Okay.
Which are high level and hopefully pieces of paper and things that have hit your desk. So the government says that it's spending $43 billion on housing. I think it's actually more like $60 billion if you take into account all the on and off budget items over the course of their government. So if you go back 7 or 8 years, we were getting 220,000 houses, an average of 200,000 last decade. It looks like we'll hit an average of 170,000 houses a year under this government. What is happening with supply? You mentioned it in your opening speech. You said you thought it sounded good. How many houses do you think we'll get this year in Australia?
So I don't have those estimates with me, Senator, but it might be the case that that when Housing Group appears, they might be able to give you that estimate.
Okay.
I mean, I think the point that I was making was that dwelling investment in the national accounts has been reasonably strong over the last year, and we're predicting it to be quite strong over the next 2 years.
Okay.
That, at the end of the day, is what's important for increasing supply in the economy.
Okay. So you don't have a sense of the numbers, 200,000 houses, for example, more or less?
I don't have those. No, I don't have those numbers in my head. I mean, I would just add that the government's been very clear that the target to meet 1.2 million homes is going to be a challenging one, but it's a target that is important to government.
I mean, just because you spend a lot of money on something, it doesn't guarantee you get more of it necessarily, does it?
I'm not sure where you're going, Senator.
Well, I mean,
if there's additional dwelling, additional dwelling investment,
sure.
I think that I don't quite understand how that wouldn't lead to increases in...
Sure.
Like, if this is real investment, I'm not sure why that wouldn't lead to increases in housing supply.
No, my question is more about the government's positioning about their they talk about $43 billion. You would have seen it in the minister's statements and speeches every day ad nauseum about bragging about billions of dollars being spent. But just because you're spending more public money, it doesn't necessarily guarantee that you're going to get more, does it?
So the government's commitments around housing, and again, I'll have to get you to go to speak to Housing Group about the details, but you know, there are a number of different elements that the government's committed to, including, in particular, investing in social and affordable housing, but also investing in housing or assisting in increasing the supply of housing for first home buyers, and all of that together. But there's no question that that has to be supplemented with activity in the private sector in order to deal with these outcomes. And I think the government's also been very clear that part of the solution to the housing issues that we find ourselves in is rests with states and territories in terms of them changing and improving their planning and approvals and zoning processes.
Okay, so with the housing targets, will any state or territory meet the housing target?
So that's a question that, again, I would suggest that you put to Housing Group. My recollection is that I think there are two of the states that we feel more confident, or two of the states or states and territories that we feel more confident will meet their housing commitments based on current projections, but 2029 is still a number of years away.
Okay, well, 2 out of 8 isn't very good. So with the Housing Australia Future Fund, which is part of this housing agenda, there were media reports 2 weeks ago saying that the Minister, Claire O'Neill, had read the Riot Act to the Housing Australia Future Fund Board, or the Housing Australia Board. Do you know what that was about?
I don't know. No, I don't know what that's about. I know that the Minister has met with the Housing Australia Board. She's met with the CEO. Like all government enterprises, that's not unusual for ministers to meet with agencies and to be clear about their expectations and providing guidance so that, you know, they're clearly operating in a way that the government is expecting.
Now, how do you think it's going? I mean, it's been going for over 2 years. It's got $10 billion. It hasn't built many houses so far.
Are you talking about how...
The Housing Australia Future Fund, yeah. Well, I'm asking in the context of
Housing Australia or Housing NIFIC? Sorry,
Housing Australia Future Fund.
I mean, NIFIC was, of course...
Housing Australia Future... Sorry, just to be clear. I'll give you the clear question. I don't want there to be any doubt about what the question is. The question is, in the context of the Minister reading the Riot Act, according to public reports, and this vehicle being in operation for 2 years now and having $10 billion, what is Treasury's view on the performance of that particular fund, the Housing Australia Future Fund, with its $10 billion?
So, again, I think it would be useful for you to talk about this in detail with Housing Group when they come through, and I think Housing Australia are meeting with them. I think the honest truth is that we have learnt a lot about how to best operate the Housing Australia Future Fund over these first 3 rounds. The 3rd round has just been announced, and there are lessons that were taken from the first 2 rounds to improve the effectiveness in this 3rd round. And the 3rd round is designed to deliver the full complement of houses that were always projected to be delivered under the program.
Okay. I just want to fly through my topics because I know the Chair is trying to manage a very difficult group of people. That's a joke. It's a joke. So I just want to go to... I've just tabled a document, which is... I don't expect you to be... I'm not going to ask you horrible detailed questions about it, but it's just a document which is an FOI, which relates to the 5% deposit scheme. Now, the 5% deposit scheme is the government's policy to allegedly help people access a first house. Now, the evidence was, at the last estimates, that the government announced this 5% scheme in May, and then they commissioned modelling in July through the Treasury. Do you know anything about that modelling?
It's at a high level.
Okay.
I am aware of that the modelling was undertaken, and I'm aware that the Treasury built a model, I think, drawing upon some work that had been done in the RBA between Peter Tulip and somebody else. Yeah, Saunders.
I think that could be right.
Yeah.
So, I mean, the Prime Minister has been talking about the modelling. I assume you follow what he says about these Treasury programs. And he was saying that it was going to cause a 0.5% increase in house prices over 6 years. The Treasury evidence was, in fact, at 0.6%, which is slightly different. But it appears that that's already been wiped out in the first month of operation with the data from October, which was the first month of operation. We saw a 1.2% increase in house prices. So,
but I'm not sure that you can't attribute that to be caused by the 5% deposit scheme.
So you think the modelling, stand behind the modelling?
So what I would draw from the modelling, and I think we all have to be honest and modest about how challenging it is to forecast asset prices like housing prices. What I take from the modelling is that using that model, which is a comprehensive model of the housing market, it suggests that there would be, in fact, I wouldn't be precise about the amount. I would say a very small positive impact on house prices over the medium term. That's the conclusion that I would draw.
That's it. So, I mean, this is what we received back from the Treasury, which is a redacted piece of paper. I mean, if it's good enough for the Prime Minister to talk about the number that the Treasury produced and have it canvassed at estimates, I mean, wouldn't it be useful to provide the information to the Senate or through the FOI so we can see the modelling? Because, I mean, I imagine there would have been some risks and other parameters in the modelling that would help inform the public debate.
You've got 2 minutes, Senator.
So, Senator,
I'm going as fast as I possibly can.
Sorry, Senator.
Thanks.
So I can't speak to specifically the reason for why in any FOI process the reasons have to be clearly considered and documented as to why parts of FOIs have to be redacted. So I'm sorry, I can't speak to that.
Okay, but I understand that you're the head of the agency, and I'm not trying to ask you difficult questions. My point is, if the Prime Minister can talk about the modelling and the Treasury Ministers, surely you could provide us with the pieces of paper that you generated internally that back up why you are saying that there would only be a 0.5 or 0.6% increase over 6 years. I mean, this is not, this is very unhelpful, this piece of paper. It doesn't give us anything.
So I don't know what else was in that document.
Well, can anyone else
therefore had to be,
help us?
That's the question again. You'd have to put to Housing Group because they were responsible for that FOI.
Well, okay. Well, let me ask you then finally. So when you do modelling like this on a government program, because the government asked for this modelling, right?
Yep.
So they asked you for the modelling. You did the modelling. How was it provided to the Treasurer and the Housing Minister? In what form?
So I can't speak because I don't have it in front of me, but it would normally be provided in a brief to the ministers.
Piece of paper.
I would expect so, Senator, but
Right.
I wasn't involved in this particular case, but that's what I would have expected.
And would it say, look, this is what we think, and here are some of the risk factors which would potentially mean that this number might change if different things happen, if supply tanks further or supply increases? Wouldn't it have some of that commentary?
So I think, so Senator, what we've been clear about. So again, I don't know what commentary. There's different commentary that we would place in different advice we provide to government. So I can't sort of say in this specific case what was or wasn't provided. What we've been clear about is the structure of the model that was built in order to make this assessment, and that's, I think, that's been outlined in I think it was an RBA discussion paper, which actually outlined the detail of that model, and that provides you with the structure and the nature of the model that has been used in order to form this assessment.
Okay, well, are you able to have your housing colleagues provide the modelling today?
I don't know what you mean when you say provide the modelling.
Well,
like,
I mean, this is not a hypothetical. The Prime Minister of the country has been walking around saying the changes to his deposit scheme are only going to make a 0.5% change to house prices. It appears that from all the private sector commentary, the modelling that's done by the economists that don't work in the Treasury, they say this is pushed up prices as part of other factors. The Reserve Bank Governor yesterday gave evidence that the Cotality data actually was quite accurate. Cotality attributed the increase in October in part to the home guarantee scheme changes. So we're not working on hypotheticals here. You have a piece of modelling. You said it's been provided in a brief to the Treasurer and the Minister. I'm asking you in the interest of transparency, to provide that modelling in some form that you think is appropriate, noting that we don't expect you to give us cabinet documents, but there must be something that you can provide us.
I'm happy to take that on notice and see what we can provide you.
And have it back this afternoon when housing.
So I'm not sure whether it can be done in that time frame, but I'm happy to see what we can do to help.
Thank you.
Thank you, Senator. So I think we're going to go Senator Hume and then Canavan.
Hopefully we're going to.
We will not miss anyone.
Okay, I should be very, very quick. I'm just following up on a question from Revenue Group yesterday, which they conveniently handballed to you.
Oh, great.
Yes,
Thank
sorry
you.
about that. On bracket creep, we had quite a good discussion yesterday about bracket creep around the fact that given it's reflected in Treasury's medium-term projections, that it looks that the government is essentially relying solely on income tax hikes over the next decade to bring the budget back into balance. And I specifically referred them to page 73 of BP1. So my question is whether Treasury has modelled the economic impacts of that policy. You can see from the chart on 3.6 that income taxes are expected to increase by about 2% of GDP over the medium term, which seems, I would imagine, economically quite significant. So it would have quite dramatic effects on economic incentives and behavioural outcomes, productivity and so forth. So are those economic effects modelled by Treasury or incorporated into the medium-term forecasts?
So I think I'll ask Dr Cagliarini to outline for you, like how we do our macroeconomic forecasts and how they take into account kind of all existing policies. Go ahead.
Yeah. Thank you, Senator Hume. So just want to note here that when you're referring to bracket creep, you're referring to personal income tax receipts.
Yes.
This is referring to total receipts.
Yes.
So when we do our modelling, we do use, we have a couple of iterations with our revenue group colleagues. So when we start off with say, when we did these budget projections, we took their MyEFO average personal income tax rate for households. We put that into our macro model, and then we model that. We don't go micro. So the model is very macro. We don't go micro and model this by income group or anything like that. We then provide our economic projections, economic forecasts to revenue group. They will then, based on our forecast, run another set of revenue, and we then have one more cut at that when we update our forecast immediately prior to the publication of the budget.
Okay, so obviously tax doesn't operate in a silo. If you tax a particular segment of the population, there is a behavioural outcome. So what I'm asking, I suppose, is whether for instance, the long-run growth rate reduced because of all the additional income tax that is expected and forecast, projected, I should say, in the medium term. And I suppose more broadly, has Treasury done any analysis of the economic impacts of bracket creep, understanding that it is bracket creep or the rise in taxation, that if you want to look at it more broadly, that is what is delivering a return to budget balance?
Yep. So in the average tax rate that the revenue group colleagues provide us, that will include the effect of bracket creep, and then that will then, in our projections, that will affect what goes on with household incomes and therefore consumption and growth in the economy. Right.
So your growth projections do take into account that 2% rise in taxation, 2% of GDP rise in taxation.
It's a share of household incomes. It's not a share of so what we receive from revenue group is what they expect to happen to personal income tax revenues as a share of household income. Okay. So we provide them with our projections with household income. They do their tax modelling, and then they say, well, this is what the average rate of taxation on personal incomes will be. And then before we publish the budget and we update our forecasts, because obviously there's other data that comes through between our first cut and our last cut, we then incorporate that.
So let me be a little bit clearer. If there was a policy there that would address bracket creep, that would demonstrate that tax as a percentage of GDP, as far as total receipts goes, is expected to be flat rather than kick up the way it is projected here. What would be the effect on your long-term growth rates?
I don't think they would actually kick up as much as that particular graph would, because that graph would also include corporate income tax revenue as well. So we would just be looking at the household component when we're looking at what's happening to household incomes. And so it does affect, and I think in the previous MyEFO and even in the previous budget, we did publish a box where we did actually look at the effect of taxes on what would happen to household disposable incomes. Not in this budget, I think in the previous MyEFO and the previous budget. So we do incorporate that information into our macro forecast. It's just not that micro, Senator.
Okay, well then let me look specifically at household incomes, given that higher taxes mean that there's an effect on the amount that people work. Do you model the effect of that rising average tax rate on household income?
To the extent that that's reflected in the average personal income tax rate that we receive from Revenue Group, it would be incorporated in our forecasts.
Okay.
And so, for example, when the redesign of the Stage 3 tax cuts were put in, that affected what the average personal tax rate would have been in the forecast, and that would have been incorporated in our projections, not in the 5-6 budget, but in the 24-25 budget.
So that the economic impacts of bracket creep, which is implicit in these charts, is that something that you provide advice to the government on, internally to ministers, or is it something that you have done some work on?
We don't explicitly say, well, based on this particular variable, this is what's happened in the modelling, because when we update our forecast, there's a whole bunch of other things that go in. We update it for labour force, new GDP, new inflation. There's a whole bunch of other things that will go in there. We also have to think about what's happening to interest rates, because that also affects disposable income and therefore consumption. So there's a range of things that go in, so we can't isolate the effect of a particular variable like bracket creep on the macroeconomic forecasts.
So if I were the minister responsible for this and I'd said, well, I'm determined to see the budget come back into balance over the medium term, but then saw this chart that demonstrated that the way that we've projected to get there is by increasing tax as a percentage of GDP by 2%, which is very significant. That would set off red flags to me. Is that something that the minister has spoken to you specifically about and said, surely this is something we're going to need to address in this term of Parliament?
So, Senator, those projections there are total receipts, and so that'll incorporate a whole bunch of other heads of revenue in that graph.
Yeah, but the Treasurer is responsible for all forms of revenue.
You know, that's correct. I haven't actually specifically spoken to the Treasurer about the effect of a particular thing on the growth projections. Obviously, there's a lot of interest in what has happened to, the effect of a range of policies, but we don't go. It's very hard for us when we update our forecast to say, well, Minister, that particular policy did that to the forecast, and this particular policy did that to the forecast, because there's a lot of other interactions that go on with other policies in the forecast, which is why we just do one holistic update.
Well, I suppose I'm specifically focusing on personal income taxes here, but obviously all taxes are involved. Are you telling me that the Minister hasn't flagged to you that would be a concern as the Treasurer of the country to say tax as a percentage of GDP going up by 2% over the next 10 years is something that bothers me personally, and it's something that Treasury is going to need to consider?
So my understanding is and my Revenue Group colleagues, I'm sorry to hand that back to them in terms of how they incorporate bracket creep into that average tax rate that they provide us. My understanding is that they keep, I think there's an aspect, particularly in the forwards, that the tax rates that we've got in there are held constant. So particularly over the forward estimates, we would incorporate whatever they've got in terms of what they've assumed for tax rates that go in.
Yes, tax rates are held constant. That's the idea with bracket creep, is tax rates are constant, but inflation means that everybody moves up a different tax band, and all of a sudden the tax take from the general population is much higher, and it acts as a disincentive towards economic activity.
Yep, so we would take that average tax rate. So as I said, we don't do it by bracket and work out how many people are in each bracket. That's not how micro we do the macro forecast. Our model just takes the average tax rate that we get provided by our revenue
Okay,
colleagues.
there's some very complicated answers here to what I think is probably a simple question. Has the Treasurer flagged to anybody in Treasury that there is a concern that there is more and more tax coming out of the economy in order to pay to get the budget back into balance, but there is no real effort, as far as I can see, to reduce payments, and that is actually acting as an economic disincentive, which might then affect those other metrics that you've included in these forecasts?
Well, I suppose that's more of a question for me in terms of what the Treasurer has indicated, and I suppose to say two things, Senator Hume. One is that the government went to the last election with a plan to reduce personal income tax rates, which we have delivered upon. Mr Dutton and your team went to the last election with a plan to jack up personal income tax rates.
Thanks very much, Minister, but that's entirely irrelevant. What I want to understand is whether those higher tax rates that are the higher tax takes in the medium term are going to have an effect on the metrics that you use for growth, for productivity, for participation, for all of those other things in the medium term.
Well, as I was about to say, I'm just making the point that track record does matter here in terms of any reasonable assessment of these things, but the Treasurer has been clear about the need to provide relief from bracket creep in responsible ways. But as I say, the only government who taxed above 23.9%
Sorry, can I just clarify, where has he spoken about the need to address bracket creep in responsible ways?
He's been clear about that. That's why we legislated.
Where has he been clear about that?
That's why we legislated tax cuts next year and the year after.
Actually, no. You said that was cost of living relief.
All of these things go to cost of living. Of course they do. You
never said bracket
Senator, creep. And that's why we've legislated those tax cuts. That's why we went to the last election promising to deliver them. I just make the gentle point that the higher taxing party here went to the last election with a plan to jack personal income tax rates up for working Australians.
Thanks.
Okay. Thank you. Senator Canavan.
Thank you, Chair. Look, Secretary, earlier in questioning today, you were asked about net zero and you said, and I quote, "There's no question that there's further investment that has to take place." How much further investment has to take place?
What do you mean? How much?
To get to net zero. How much do we need to invest to get to net zero?
So I'm not sure exactly what question you're asking over what time frame. I was making
the goal is net zero by 2050, so that's the time frame.
That's right, and between now and then there's a lot of private investment that will take place.
I'm only asking, didn't you just do a modelling exercise?
Yeah, we did. So
how much, what's the figure?
So I'm not sure whether we have a figure of the total amount of investment, but it's also, I'm not quite sure how meaningful the question is. So there is a lot of investment that has to take place over the period ahead, and I'm conscious that energy experts like AEMO and AEMC in the Integrated System Plan talk about the types of investments that need to take place over the period ahead. Some of this investment is government, some of this investment will be private sector. In fact, the vast majority of it will be in the private sector.
I'm asking for both, because presumably the modelling exercise looked at the whole economy. So how much capital investment is required to get to net zero by 2050?
Dr Heath, do we have a figure on that?
So it depends exactly how you're asking the question. So the modelling exercise, as we discussed at the last estimates, was designed to understand the path to net zero.
Right.
And so part of the, depending on exactly what you're asking, the baseline of what would happen if we didn't have the target is not something that was part of the exercise.
So
and
you
we
can't
discussed
tell
that
me,
last time.
despite all the modelling that was done and the spruiking the government's done of it, you can't tell me how much money Australia has to spend to get to net zero by 2050.
Again, it depends what the baseline is, and we did not model a baseline where that net zero target was not achieved.
But then what's the worth of the modelling if you can't tell me how much net zero costs?
Well, the purpose of the modelling was to understand different paths to achieving net zero.
Not actually to evaluate whether net zero is a good thing or not. Can you conclude from your modelling whether net zero is good or bad?
So, as you are aware from the previous conversation, one of the scenarios was a scenario where we didn't have intermediate targets and clear policy direction, which led to less investment in the energy
I didn't ask about
transition.
scenarios. I've got limited time. Just asked, can you conclude from your modelling whether net zero is a good thing or a bad thing?
Well, good in bad in what? On what metric?
I don't know. It's in the Oxford Dictionary sense, but can you or can't you? I mean, good for our economy, good for our wealth, good for our prosperity, all these good things. Is it good or bad?
So the scenarios that we run,
Right.
if we're talking about economic outcomes, made the point that it is an orderly transition is going to be more economically beneficial in terms of things like growth rates.
But that's not relevant to my question because both of those scenarios go to net zero. Might move on, I've got limited time. How much is the capacity investment scheme going to cost?
That's a question for DQ.
You haven't calculated that at all?
I don't think we don't have the information that we would need.
All right.
That's a DQ
I see
program.
the Treasurer has been making statements that extending coal-fired power stations would cost $17 billion the federal budget over the next decade. Did he ask Treasury to help calculate that number?
I think
I'm referring to
I'm not aware of that being
So-
asked of
Right.
We'll take that
Treasury,
on
but we'll
So where
take
did
it
the
on
Treasurer
notice.
get that figure?
Well, let's
Let
take
us
it on
take us
notice.
on
He
notice.
didn't ask. He didn't ask
Can I
Treasury
take that on
officials.
notice?
You're the energy and what's
Correct.
group or what do you call it?
The Climate, Energy and Trade Insights Division.
So he's got a whole division on climate and energy, and the Treasurer didn't even ask you whether that figure he put out in the media was correct.
What
or
I'm
not.
saying is I personally,
Well, I would have thought you'd know yourself if he had have asked.
well, as you
Yeah.
can see,
Right.
in recent times I have had a broader scope, so I will take that on notice.
Okay. All right, that's remarkable. Sounds like you didn't even ask for advice. Okay, I just wanted to table a map that I've distributed. Has that been, I think, hopefully printed out? Well, I've got a few copies myself, if anyone wants to grab them. This is a map of Australia of the amount of land that's been lost to reforestation in the last few decades. I just particularly want to ask about a figure in the Treasury modelling about how much extra emissions are going to come from reforestation. So I think this is on page 32, chart 3.14. And there you say that you're expecting to get to net zero, you need 107 million tonnes of abatement from reforestation, alone, just in the red part of the bar. How much land will that come from?
So as we discussed in the previous estimates...
I wasn't here, sorry.
Apologies
okay.
then. I will
family issues, but yep, sorry.
start from scratch.
Okay.
So the way that we have done our modelling is to think about the additional emissions that would occur as the marginal incentive to abate changes.
Right.
That is information that we put together in close collaboration with our colleagues at the Department of Agriculture, Forestry.
I've just got limited time. How much
Okay.
land? How much land has to be taken?
So our modelling is very top-down and doesn't go to that level of granularity.
How do you know you're going to get that much abatement if you don't know where it's going to come
So
from?
it is based on these emission reduction functions that we developed in conjunction with our Department of
But
Agriculture colleagues.
Areas I represent, rural farming communities, are already concerned about the loss of productive farmland to what's happened before, and I don't know if you've got this map yet.
I
see
do
that?
have a copy of the map.
Yeah, right. So, as you can see, the vast majority of what we've lost so far to this process is in our productive food growing areas. And so, how do we know that another 107 million tonnes won't impact on food growing areas if you haven't even looked at whether this has to come from those parts of the country?
What you need to be able to answer that question is a much more granular model that has much more detail, geographic spatial detail, and that is not the nature of the model that we used in the report. The Department of Agriculture
I'm just
and
getting,
ABS.
the government's been using this modelling to say how great net zero is and it's really important, but we don't even know whether net zero is going to require us to have to significantly reduce food growing in this country, impacting on lots of rural towns who rely on agriculture for their lifeblood. You can't answer that question for me?
not at the level of detail that you're...
Well, why have we signed up to net zero before we knew that we'd have to lose farm food growing rural communities?
So I don't think you can conclude from the modelling that the land-based abatement that we talk about would necessarily be coming from the most productive food-growing areas of the economy. You would have to use a much more granular model, and that is not something that we were...
So ABARES told me the other day that the max you can get, or in their range, the max you can get per hectare is 21 tonnes of abatement, carbon abatement per hectare. If we need 107 million tonnes, that's at least 5 million hectares, is it not?
I think I remember in evidence that you were asking for a DQ. That wasn't DQ's view. I think it was DQ.
Maybe I did. I say ABARES as well.
I'm not sure that the officials as she's indicated, that work is undertaken in other parts of government. This is a different kind of work.
Okay.
I think Senator, one of the points of this exercise, particularly from a Treasury perspective, was to outline what are some of the significant sort of sectoral changes which are going to take place, but also, if you like, what some of the additional work that's going to need to be done in order to then better understand what that actually means. And my understanding is that ABARES have already noted the considerable variation that exists in estimates of how much abatement can be achieved. And I had understood that they're undertaking additional work.
They are doing it, but it just seems strange to me
to do that.
We're doing the work after we've signed up to the agenda, after imposing these costs on communities. This is not a game. This is not a game. Well, this is real people's lives, they're real people's jobs, and I cannot understand why you can't, after doing all this modelling, provide basic answers on how much it's going to cost, who's going to be impacted, where's the land going to be affected by this reforestation. 107 million tonnes is nothing to sneeze at. That's about a quarter of our emissions so far.
I'd just make a couple of points about those assertions, Senator. Firstly, the National Party used to stand for the property rights of farmers. And people have been able to make choices.
Chair, I want this time added. I'm happy for him to go, but I want this added because it didn't actually ask a question. He's now going to political points. It's not relevant to estimates.
It was Mr Joyce and Mr Morrison who...
We'll just add it. He's keeping the secretary around.
Let's try and keep things orderly so we can
who
move
signed up
through
for
the
this
agenda,
proposition.
please, Minister and Senators.
It's a long-standing policy position of successive Australian governments to achieve net zero. I understand that you and other elements of the opposition have been prosecuting this position. I just make the point that it has been a long-standing position of governments, and policy certainty matters. Nobody on any farm, and you've got a map with green dots on it.
This is not my map. That's a Department of Climate Change map.
But you are making assertions. You are making assertions about the kind of country that is the subject of green dots. There, farmers have made decisions. Property that has different values all over it. They have made decisions. We don't support scapegoating farmers who are making those kinds of decisions. You may well do that.
It shows how
but we don't.
A lot of these green dots, as you call them, Minister, are because state governments have taken away property rights from farmers. They're not voluntary actions. But the fact that you don't know that shows how ignorant you are as to take. Maybe you should be silent of it before you further dig a bigger hole for yourself.
Economic value
if I can move on.
Country of variable value.
Okay. If I can move on, I just wanted to quickly ask, and I wanted more time, but the government's currently considering implementing carbon tariffs or a carbon border adjustment mechanism. In your modelling, did you factor in carbon tariffs imposed at the Australian border?
We did not.
You did not? Well,
so the carbon leakage review,
policy.
No, the carbon leakage review has been considered by government, and decisions about how they may go forward on that is a decision for government that has not yet been taken.
But the government has flagged, well, they wouldn't be doing a review if otherwise, they've flagged that they may have to, and most likely will have to, impose carbon tariffs on our border, yet you're telling me your modelling didn't even consider carbon tariffs as in any scenarios.
So our modelling took government policy as given, and that is not currently government policy.
Why would they be doing the review unless there's a chance? Are you saying there's no chance that Australian governments will have to impose carbon tariffs in the next 25 years?
That's not what Dr. Heath is saying.
Right.
So Senator, you know what these modelling exercises
Absolutely
involved,
do.
and we take government policy as given, and then, as is the case in the 2021 modelling that was done, as was the case in the modelling that was done earlier, like in 2011, the modelling is designed to demonstrate the sort of impact on the macroeconomy of this sort of a transition. It is not prescriptive about the particular policies. It is not a bottom-up estimate of a particular set of policies to deliver an outcome.
Can you just help me?
That's what's common
Maybe
across all of
Secretary,
these sorts of models.
You might be able to help me with something that stumps me. If net zero is meant to lower costs, make us more energy competitive, create jobs, why would industries need a carbon tariff to protect them against countries that aren't pursuing net zero?
So it's a matter for government to determine whether or not any adjustments need to be made in relation to not distorting, either production or trade flows. That's the argument that comes to. But seriously, Senator, it would be probably.
You can see my confusion though here. It's pretty. It's just I don't understand because we're told constantly that going to net zero is going to be better for our economy, going to make it easier and cheaper for Australian businesses. But if that were the case, why would they need to have a protective tariff against other countries who are not pursuing net zero? Because those other countries would have higher costs already, wouldn't they?
Senator, is this your last question?
Yep.
So, Senator, that this is a policy matter which is for government. There has been a review. There's been a number of discussions around border adjustment mechanisms. The circumstances, I'm not actually talking about the most recent one, circumstances in which they can or should be considered. Government, as I understand it, has not made a decision, and that would be a matter for government in considering a wide range of factors as to whether that was an appropriate policy intervention.
Okay. Thank you, Chair.
Thank you. I would note that we're at 11 o'clock now. We still have 4 senators who have questions, so I would ask everyone to keep their questions as brief as they can. Thank everyone for sticking to time as much as they've been able to, and I'm sorry we'll have to keep you just a little bit longer, but we'll try and minimise that. So Senator Pocock.
Thanks, Chair. Thanks for being here. I've got some questions about housing and productivity. There is a concerted effort within government to focus on how we improve productivity, and you mentioned it this morning in your statement, Secretary, as we set out, pointing to increased investment and its role in improving productivity, especially in relation to machinery and equipment. Growing productivity means we have to build the machines and do the things on the ground that make a difference. By definition, productivity growth requires getting investment into those kinds of lines of investment away from speculative activities. Do you agree with that?
So Senator,
think about machinery and equipment, which you've talked about as a place of growth at present.
Yeah.
That's if we invest here, we're going to see a long-term productivity increase, as opposed to investment in speculative items.
So, Senator, I'm not sure whether. There's lots of investments that individuals make in the economy, in the share market, into other sectors of the economy. I don't think I've got an overarching view that we should encourage some investment and not other investment. If the point you're going to is that we need the construction sector to lift its productivity, I have to agree wholeheartedly with you, and I think that government has put significant effort into trying to ensure that that occurs. And that, if we're talking about lifting productivity growth, I would have thought the most important thing would be that the sorts of things I've talked about earlier today around improving the efficiency of sectors like the construction sector are central. and some of the decisions government's made around the National Construction Code and other, encouraging modern methods of construction and those sorts of things are pretty crucial to that.
And my question is general. We're investing a lot in software. We're doing a whole lot of things that will let us do things smarter, more efficiently, and that is more productive. But I want to go to the $40 billion increase in lending to property investors in the last 3 months. A massive increase, a massive amount of money going into the purchase of property by investors. By and large, they buy existing homes, they aren't building new homes, clearly speculative, people in pursuit, trying to get ahead of an expected increase in house prices arising from their expectation that the 5% deposit scheme was about to start. We saw a 1% increase in September, October, November. Massive increase. So I'd like your appraisal on whether Australia's productive potential is just being sucked into or is being sucked too much into a housing value vortex.
So, Senator, I'll see if my colleagues have anything to add. I mean, I think it's hard to draw a direct line between that sort of activity and productivity itself. As I say, when I think about the productive capacity of the economy, I think about the concrete things. I think about the investments that are being made in data centres. I think about, as I've said, the investments which are being made by the private sector into, building more effectively, investments in the mining sector. So I sort of think about it more from that side.
Yeah, well, that's where I'm going. So my point is there is no productivity from house prices going up, no productivity from tens of billions of dollars of capital being sunk into existing houses, with the effect that the income of tenants and mortgagors is turned into economic rent. Start-up businesses can't get off the ground because property can't be secured as collateral. Businesses going bust can't expand because of exorbitant land prices. The list goes on. How much do you attribute Australia's sustained low productivity to our housing and land crisis and the overinvestment in things that actually are not productive?
So let me check with my productivity. I don't think I would like. There are a number of things you have raised there, which are concerns in the housing market itself, and I think the government's been very open about the need to address affordability and supply and all of those sorts of things. So I'm not quite sure how to answer your question.
Let me offer you another way. Can Australia boost its long-term productivity so long as it remains, as it has in recent decades, so fixated on property speculation? And that's where a lot of people are going to make money, as opposed to investing in things that actually do make things more efficiently, material things that matter.
So go ahead, Dr. Cagliarini.
Thank you, Senator. I'm not sure I agree with the premise of the question. To the extent that we've got investors investing in housing, they are providing housing services to renters. I wouldn't say that's unproductive.
Well, they're not necessarily adding to they are not, most of them, 85% of them, aren't adding to housing stock at all, not making any difference for anyone, except who benefits from an asset and its speculative increase, especially through capital gain.
I'm not quite sure all of it will be speculative. I'm not quite sure about the numbers about how much investors are purchasing new and existing.
Well, the stats are out there. I'm not making them up.
Yep,
most of that money goes into pushing up the price of existing housing, and in an environment of constrained supply, we are seeing $40 billion, twice as much as 4 years ago, massive increase, going into driving up prices because people are after a speculative increase in the value of their asset. We have turned housing into an asset for accumulation of wealth as opposed to a productive asset, and I'm saying that crowds out investment in productive things, contrary to the government's policy intent.
Senator, I've sort of listened carefully, and I understand your point of view about these questions. It's very difficult for the officials to, venture a policy view.
It's not a policy view, it's an economic theory view.
So as I say, I've listened carefully. It's more straightforward for them if you ask them to, reflect upon something that is a matter of fact or about the effect of a particular policy or a particular measure. It's harder for them to, venture a view about what they think.
So let me try again.
Yeah.
If we are drawing $40 billion of investment capital into an asset class that is simply driving up the price of housing and not making a productive contribution, then are our policy settings not such that they contribute to asset growth and speculation outcomes for particular investors and drawing money away that would go into more productive investment? For example, in the share market and in assisting companies introduce the practices that you spoke of, investments in machinery and equipment, for example. I mean, it's a crowding out theory which is well understood in economic theory, and I want to know whether you agree with it or not. Is this a real thing that's happening?
So I think from the perspective of a small open economy, if it was the case that businesses who otherwise want to invest in productive investments or in investments which have higher productivity associated with them could not get access to finance, then that might be a concern. I am not in any way dismissing the idea that investor behaviour has a particular impact within the housing market. I think what I'm having trouble with is drawing the line to, therefore, that's a cause of our productivity outcomes. I think that when I think about our productivity outcomes, what I think is important there is what are all of the different settings in different sectors of the economy in order to drive productivity as effectively as possible. And I don't think, I'm happy to take it on notice and we'll see if we can give you a sort of perhaps a more coherent response, but it feels to me like you've almost got to model that there is only a certain amount of investment that can take place, and if it happens here, it can't happen somewhere else. And I'm just not sure that that's perhaps the right way to think about it.
If you could take that on, I know my time is short. I want to finish one last question.
Let's take it on, yes.
Thank you. I want to go to the building of 1.2 million homes, which is a forlorn hope. We know we're not going to get there. All the experts tell us. If we remove the tax settings, CGT and negative gearing, the discount on CGT, that advantage property investors, then all things being equal, would first home buyers acquire more of the 1.2 million or whatever level we get to, new homes that they would than they would under current tax settings? So if we did away with those tax breaks for property investors, would it create a better opportunity? Would we see more first home buyers getting into those homes?
So, Senator, there have been a series of discussions with Treasury over estimates in my time and before my time about this sort of a question. I think the evidence that we've provided and that I stand by is that the primary driver of supply is factors which are other than tax settings. Tax settings haven't changed over, well, a considerable period of time now, and so there are other factors which are affecting supply. What we have said, and which I stand by, is that if you change tax settings, could it affect the distribution of ownership between owner-occupiers and investors? And the answer is, and we've provided this evidence before, that we think it could.
Are you worried about all of this money, this sudden growth in investment into housing? Are you worried about all of that sort of money pursuing a largely fixed stock of housing assets? We heard from APRA last night. They're concerned and they've got particular measures in place that they're about managing risk. Are you concerned about this money chasing a limited supply of housing?
So, Senator, I think I take issue with the fact that there is not an increase in supply. As I've said, the amount of work that's taking place at the Commonwealth level, but then also across jurisdictions to increase supply is quite significant. And I do have to reflect on the fact that we've just had both IMF and OECD missions come through. They have met with both Commonwealth and state governments, and one of the things that they have reflected on is the focus that all levels of government are placing on increasing supply in Australia. Now, the tricky thing about this is that it takes time to deliver additional supply. And it's hard. And if you were to talk to anyone in state governments who are pursuing...
We'll come to it in the next session, I'm sure.
They are pursuing significant reforms to planning and zoning and approvals, and it is hard to make these changes. But I don't think I have ever been... I've participated in debates, for example, amongst the other Treasury secretaries around state and Commonwealth... with the states in the KIFA meetings, where there has been such a focus at every jurisdiction on doing everything that's possible to increase supply.
I'm not going to argue with you about supply, though I have a very strong view, and I think there's a lot of evidence, not just any supply, it's a supply that meets low and middle income demand. But
and that's a particular focus of the Commonwealth.
Yes, I agree. One last bit, and then I will be done. I don't understand why you are not interested in paying attention to the parallel need to cool demand. We've got this massive growth in investment, credit, incredible, $40 billion in 3 months. Why are you not attentive or concerned about the overheated supply, demand that we are seeing?
So, Senator, in any economic cycle that I've been involved in, when financial conditions ease, which is what happened when the Reserve Bank reduces interest rates, there is additional demand for housing, and in Australia's case, there's always a housing cycle. So that is partly just a function of the way in which the economy works, but in an underlying sense, the important thing is to improve supply over time. There's both cyclical and structural factors going on here.
But there are other tools in the toolbox of the government and in its economic managers that could be used to cool demand. For example, tax policy. For example, treating investor borrowing differently, as we did in 2017, and they're not being used. So that is my concern. Thank you. Thanks, Chair.
Thank you, Senator. Senator McDonald.
Thank you very much, Chair. Yeah. I want to continue with questions on Australia's net zero transformation, Treasury modelling and analysis. On page 45, you've dedicated just 3 paragraphs to the subject regional outcomes, and it refers to the net zero transformation will have distinct regional impacts. Does Treasury intend to do modelling on the net zero plan by region?
We don't have any immediate plans to increase the spatial granularity of the modelling that we do in the context of net zero.
If not, when the report clearly says that it will have distinct regional impacts, why have you not prioritised that?
So I think the intent of that part of the paper was to acknowledge the fact that the modelling that we had done was very much a top-down exercise, and that there were very important issues in the net zero transition that were not able to be addressed. So this section was very much designed to say we recognise there are other things that are not in this modelling, and they are important and they should be considered. And if you look at the individual sector plans, there's consideration of regional dimensions. And as I think we spoke about at the last estimates, the government has put in place a range of other policies, and the Net Zero Economy Authority is specifically designed to address the issue of what the net zero transition looks like in particular regions.
I'll keep coming back to you on that, because it will have real impact on on the economies in the regions and, of course, the economy more broadly,
Yeah,
which we've
we
touched on
absolutely
already.
agree, and
So
I guess we would lean on
given
other-
I've got limited time.
Sure.
On chart 4.5 on page 38 of Australia's net zero transformation, it shows projected growth in green exports under all scenarios versus a decline in fossil fuel exports. Yet underneath it says that green exports include a projected growth in agriculture. Instead of green exports including agriculture, can you give me the figure specifically for the export of renewable energy?
I'm sorry, I was looking for the... Could you start the question again? I was looking for the right graph.
My question is that the green exports include agriculture.
Yep.
So what I'm asking is, do you have numbers that exclude agriculture from green exports?
I'd have to take that on notice.
Okay. Could you, when you take that on notice, break that down by category of green exports? I want to ask, what is the department's rationale to include agricultural exports in a paper modelling renewable energy exports?
It's not included. It's just sitting here.
Okay. Yeah. Come to the table. Yeah.
Senator Rebecca Castles, Assistant Secretary, Climate Industry Modelling Branch. It is not, agriculture is not included in that graph. We are just noting it underneath in the paragraph.
Right. Okay, thank you for that. Mm-hmm. So, in the projections in 5-year blocks for the green exports from 2025 to 2050, what figures are you using in each of those years for uranium exports?
So the green export commodities in the note under chart 4.5, it includes ammonia, green iron, aluminium and raw and refined critical minerals. So we have not got uranium. We would have some uranium in there, I think it's a critical mineral. It's not a critical mineral? Sorry, Senator, we will check on that, but the data would come from a combination of the International Energy Agency as well as DISA.
Oh, okay, because nuclear energy or uranium exports have been referred to in other places, so if you could clarify whether or not uranium is included in those exports. Thank you. I want to ask, when does Treasury forecast the exports of renewables will overtake the exports of coal and gas as a net positive impact on terms of trade?
So, Senator, looking at that chart, it's around the mid-2030s, but it varies depending on the scenario that you're comparing against. So the renewable exports upside scenario, so the purple line, it happens a little bit earlier and it's different under the baseline and the disorderly transition scenario as well.
All right. We had some discussions earlier about terms of trade. If I could turn back to you, Dr. Thank you very much. Would you be able to tell me where you're including that change of renewable exports overtaking fossil fuel exports to forecast the impacts on terms of trade?
So could I also point out that this graph, chart 4.5, is a graph of values. And when we're looking at the terms of trade, it's a conversation about the relative price of exports to the relative price of imports. So the information in this graph, so the value is equal to, it's a combination of the price and the volume. So translating from this graph to terms of trade is not as straightforward as looking at the crossover point.
I appreciate
and I can
that.
allow, I'll let Dr. Cagliarini sort of expand on this, but as we discussed before, when we're out past that forecasting period, the very near term, the projections for the medium term are based on a top-down macroeconomic model, and so they are not looking at the granular sort of information that you would need to answer your question.
I understand that, but given that this is modelling the demise of the coal and gas industries and the impacts on regional places and the jobs the taxes and all of those things that flow from it, I think it's not unreasonable that there would be some work done to model that out to terms of trade.
So I would also make the point that these are projections based on specific scenarios, and so you know that's an important point. They're not forecasts, but again, to the extent that that feeds through to the budget projection process, the projecting out to the medium term, they won't be captured because it's a very top-down macroeconomic model. But I'll hand over to.
No, that's true. So beyond the forwards, as I said earlier, Senator, because renewables are at the moment still relatively small in terms of our exports, we don't really explicitly incorporate it.
What renewables are you exporting?
Well, we don't actually really model it.
We don't export
at the moment. It's like it is relatively small at the moment.
Well, relatively small and zero are slightly different. So yeah.
But as I said in my answer earlier, Senator, beyond the end of the forwards, we just assume export prices and import prices grow at the same rate.
Where do you get the projections from for coal demand?
You can answer that.
International Energy Agency and the REQ. From
I'm sure you're aware the International Energy Agency has just recently put out a new World Energy Outlook.
We have looked at it.
So you've got coal demand, global coal demand going from 6 to 1.7 billion tonnes annually. Their new update says it will only drop to 5, not 1.7 under the current policy. Are you going to update your modelling given your work now is massively out of date?
So I think it depends on the assumption. I mean, I have briefly looked at that latest report, and there's a number of different scenarios they have in that report in terms of what they're assuming.
But why are you cherry picking? Why are you cherry picking just the most negative when under current policies, the current policy scenario in the IEA, they say global coal demand will stay as high as 5 billion tonnes a year by 2050. You've got it dropping to 1.7. Aren't you just skewing the report to suit an agenda then?
We used a set of projections from the IEA and a set of assumptions based on that at that point in time. So that is what is in the modelling report.
But isn't the point here that they will, over time, the data that Treasury uses for modelling will reflect those changes?
Needs to be updated. Needs to clearly be updated, Minister. It's out of date. Your modelling's out of date.
Senator Canavan, I've tried very hard so far not to interrupt you.
A tub of yogurt would last longer than your modelling.
And that will, and the point about the modelling in terms of coal exports is that will be a function of what happens in global markets.
Exactly.
Now that time will tell, Senator. Time will tell. What happens in global markets. The Treasury and other departments have to make assessments based on the best available information. When they come round to it next, who knows what the IEA and other institutions will be making assumptions about what is happening for global coal. Well, that's the point.
This is what, I mean, I can't.
Hang on.
Well, if you let your colleague make wild political assertions, we'll be in.
I won't say another word because it just gets too triggered, too red in the face when I open my mouth.
I
don't storm out when people make contributions, which is how you've spent the last couple of days. But
let's let Senator McDonald finish her block. Everyone's sticking as best they can. So if you could continue.
I am trying.
Thank you very much.
All right, on page 22 of the Treasury document titled Australia's Net Zero Transformation, Treasury Modelling and Analysis, it says coal-fired generation is projected to mostly exit Australia's electricity system by 2035, consistent with the AEMO step change scenario. Has Treasury modelled the impacts of power prices, domestic and industrial, to 2035 under the so-called step change scenario?
So as it says in the report, we have looked at wholesale electricity prices and the longer-term drivers and the impact of different assumptions across the different scenarios on those prices. So, sorry, what was the
My
specific
question was, have you modelled domestic and industrial power prices?
So we have modelled wholesale prices for post-2035 based on those sort of longer run drivers.
And what about to 2035? I should be able to see price increases specified under that modelling?
Sorry, actually, I tell a lie. We have that from 2030. So if you look at chart 4.8, which is on, from your perspective, page 33.
I will come back to that then. Has the modelling been updated considering the changes to some states, for example Queensland, updating their energy plan to include coal in the system for longer?
No, it has not.
Right. Has the modelling been updated after AEMO's warnings recently about the need for extended coal-fired power to secure the energy grid?
What date was that?
Oh, I've got newspaper articles that I could table, but I won't have time to do that, so I'm going to take that as a no.
So the modelling hasn't been updated since it was released, if that's the question you're asking.
Thank you. So are we going back to the drawing board again on the net zero transition if the modelling has not been updated based on what's currently happening?
So I think the point to make here is that government policy is based on a range of advice from a range of sources. So our modelling was an input into the net zero plan process. The Department of Climate Change, Energy, Environment and Water, the energy people have access to a whole range of other modelling and inputs from their stakeholder engagement. So, you know, really the question about how this might feed through to government policy should be addressed to them, and I would just emphasise that this is one of a range of inputs into any of those deliberations.
Okay, I'm most interested in it because it is the economic modelling that that we are basing our decisions on future investments and industries on. On page 37 of Australia's Net Zero Transformation, it says under the section titled Economic Impacts, the total value of Australia's green exports, which include green ammonia, green iron, alumina, aluminium and critical minerals, is projected to reach 80 to 93 billion by 2035 and 109 to 178 in 2050 under the baseline and renewable exports upside scenario, supporting an increase in total exports. If Treasury has modelled in dollar terms the value of green exports to both 2035 and 2050, can you provide for coal and LNG respectively what dollar figure you put on the decline in exports for each sector for the same two periods?
So this is again chart 4.5?
Yes.
So again, just making the note that the global demand is, so we've started with IEA data. So the decline for coal in that graph between 2025 and 2035, as you can see, there's a bit of a thick line, so that's between 44 and 46 billion. Between 2025 and 2050 is 48.6 to 50.9 billion. You were just asking about coal?
I was asking about coal and LNG.
LNG, okay. So if we look at 25 to 35, the decline is 38.7 to 39.4 billion. And if you look at the 2025 to 2050, the decline is 56.7 to 57.0 billion, although I would add providing you with decimal points is probably a false level of precision.
So considering the collapse of green hydrogen projects across the country, are these figures still current on the green exports?
This is the latest set of modelling that we have done.
And that was done how recently?
Well, it was finalised in September.
So you would be the world's greatest optimist if you were still including green hydrogen, green iron and green aluminium as recently as September. Which is great news that you're so optimistic.
Well, Senator,
thank you,
that's not the case. I'm entitled to jump. I'm sorry about that, but I'm entitled to jump in. What you are doing, I assume it's not deliberate.
I think
is conflating.
I don't think there's anybody in Australia that thinks that green iron and green aluminium are still current. And this was September.
I've just indicated I'm going to interrupt. You don't know what I'm going to. You don't know what I'm going to say. You don't know what I'm going to say.
Could you please hurry up and say it then?
Simply indicate that there are a variance of projections about what's going to happen in global markets around coal and gas.
What about the green hydrogen and green iron? That was my question.
Let me come to these questions. It would be foolish for an Australian government to operate on the assumption that global markets for coal were going to increase or flatline. That is a function of what is going to happen in the global markets, and whether you're more optimistic or pessimistic.
So, Minister,
the point is there's a decline.
Green iron, green aluminium. There is no one on God's green earth that thinks that this is a current modelling as of September.
My experience is I can't find anyone.
What about the collapse of the aluminium and aluminium?
Can I have a point of order?
He is talking about something separate to my question.
No.
Of order, if I can, Chair. One of the things that was stated at the beginning of the session is that this is our workplace and everybody should be treated with dignity and civility.
What about me?
And indeed, you should express your views with conviction, but nothing is achieved by speaking over the top of one another. And I just think it's got out of hand, and we need to pull it back to accord with the standards that I think people expect.
So, Senator, do you want to finish your point there quickly, if it's not finished, and then we'll come back to you, Senator McDonald.
Thank you.
There are projections there about the future growth of Australia's exports in areas like aluminium production, and I can't find, I can tell you, a single producer in aluminium who thinks that anything but wind and solar backed by gas and storage is the lowest cost option for them. And that coal-fired power for aluminium would be a total economic disaster for the regions that you profess to care about.
So, to be clear, the current modelling doesn't include the collapse in hydrogen. It doesn't include the Queensland Government's extension of coal generators. It doesn't respond to AEMO's warnings about the need to keep coal-fired power generators going longer. Is that correct?
So I would argue that in terms of the green hydrogen-related exports...
I'm sorry, that statement that I just made, I just want to be clear, it doesn't include any of those pieces of new information. On green hydrogen and exports related to green hydrogen, so that's the green ammonia, green iron in particular, the assumptions about when the green hydrogen's coming online, how quickly it's coming online, especially in those in the baseline scenario, is actually quite modest, and it doesn't really pick up in the near term. The renewable exports upside scenario is very explicitly an optimistic, it is an upside scenario. It makes the assumption that takes the baseline and says, what if Australia is in a position to capture a large share of that green trade? So it is more optimistic. That is how it was designed. So in terms of your points, I think we already have a relatively balanced view of the prospects of green hydrogen and green commodities more generally. So there's no technology to export green hydrogen currently, no ships manufactured, no transmission lines to export green solar.
Most of this is actually embodied green hydrogen, so it's not green hydrogen in the same sense as an LNG export. It's green hydrogen embodied in green iron and steel, and green hydrogen embodied in green ammonia, which is transportable.
But Senator, can I just make an overarching point? These are very long-run modelling exercises. We've been open and transparent about our assumptions. As I say, the modelling was complete. The modelling was completed and released in September. One of the things that we've done early on the report is to highlight the uncertainty associated with technological developments over the period ahead. That's inherent in any long-term modelling exercise, and you tend to get surprises on both sides. So in the modelling exercises that were undertaken in 2008 and 2011 and even 2021, we significantly underestimated, for example, the technological declines in prices that would occur for things like wind and solar and batteries. And other information. So early on, I think there was an expectation that things like geothermal would be a competitive renewable energy source, and it hasn't turned out to be. So in any long-run modelling exercise, there will be ons and offs, and that's the purpose of these exercises is to provide an overarching picture of, at this point, given what we know, what the potential pathways are. They will vary depending on how technology develops over time.
I completely take your point, and that is absolutely commendable. But the point I'm trying to make is that you are accepting some inputs, like the growth of technologies that have not yet been proven, but not, I'm saying proven commercially, but then you're not taking on board other pieces of information that have absolutely been shown to be true as of this report being written. So
Senator,
that is my point. You're cherry-picking technology.
I dispute that. So the modelling exercise, I think this modelling exercise, and I was tangentially involved in the last two as well, was probably the most widely consulted modelling exercise I've been involved in. The other departments across government and experts were consulted extensively on all of the assumptions. We've been open and transparent about all of those assumptions. I'm not saying that there aren't a difference of view around some of these assumptions, but we have genuinely tried to draw upon expert advice to help understand at this point in time what the most likely pathway forward is. That's all I can reassure you from a Treasury perspective. We consulted extensively and widely, and we have been transparent in the report around where there is differences of view around different matters.
Okay. And from the government's perspective on these questions, you have to take a sort of sober view of what you are presented with. And there is a clear decline in one area of our exports that is out of our control. That will happen.
Well, it's not.
The question is what do we do to position the Australian economy the best for the future? And that is to engage in what our industrial exports are. Now, if you want to hang out with Iran and Libya and Russia on these questions and isolate the economy,
I'm going to rotate the call now so that we can
make that point because it's so factually
these people go.
Inaccurate.
Excuse me, senators.
But we
are going to move on now.
The Bellum Declaration, the IEA, these are all points that you've failed to recognise in that comment.
Thank you, Senator McDonald. Senator Sharma, you've got the call.
Thank you, Chair. Good morning. I just wanted to ask about the national accounts figures that were out yesterday. So what was the growth in GDP per capita for the quarter?
I can get that. GDP per capita. Sorry, Senator Sharma.
And real GDP per capita.
Yeah, real GDP per capita grew by it was flat in the quarter and 0.4. It's 0.4 higher compared to the September quarter of 2024.
Okay. And my read on real GDP per capita is that it's still lower than it was 3 years ago, so in the September 2022 quarter. Is that?
I don't have that. I don't have the data going back, unfortunately, Senator, but we can take that on notice.
Okay. I had a look at the ABS data, so if you take my word for that. But my question is, I guess, how fast does the economy need to start growing in order to see an increase in real GDP per capita? Because the economy grew at 0.4% for the quarter, right? But real GDP per capita moved, so it grew at 1.6% annualised. What speed does Treasury think the economy needs to be growing for real GDP per capita and hence living standards to start to improve?
Well, as I said, I think over the past year, there's obviously some variations. Over the past year, it has actually been growing by nearly 0.5% over the past year. Part of this is actually going to be dependent on what you think is happening to population growth. And as you would know, we've had pretty high net overseas migration previously. That is coming down. So as that comes down and GDP growth is picking up, I would expect GDP per capita to start rising.
And Senator, if you're going to talk about living standards, the other way I would probably think about it is real household disposable income per capita,
that's another.
and that has grown over the last. That's certainly grew in this quarter, and it's grown in 4 of the last 5 quarters, and it's up something like 2% over the year.
I appreciate that, but on my reading as well, real household disposable income is still lower than it was in 2022, just as real GDP per capita was. So I take your point about it growing over the past year, but I think if we're looking back 3 years, it's a little different. Just to interrogate that point a bit further, though, Mr. Cagliarini, am I saying that correctly? If population growth slows, though, won't the growth in real GDP also slow?
Well,
hasn't that been a driver of...
No, it's going to depend on a bunch of other factors there. It's the composition, what's happening with the population, what's happening with the workforce.
Workforce participation, right?
And workforce participation on top of that. So you get the size of the population, then you've got to think about workforce participation, and then it's what happens with productivity on top of that. So they're the 3 Ps Treasury often talks about.
Yep, understand.
But
okay.
It is true that people are demand and supply.
Yep.
So do you have, I mean, if population growth remains at the same rate as it is today, the economy needs to be growing faster than it is right now in order for real GDP to improve? If we fix population growth, that's everything else being equal, and workforce participation, is that right? I guess what I'm trying to get to is the economy grew at 2.1% annually, so 2.1% over the past year. Real GDP per capita has improved by 0.4% over that same period. The Reserve Bank says that growth higher than 2% is likely to be inflationary, fuelling inflation. So how do we get real GDP per capita recovering if we're already hitting the speed limit of the economy and living standards aren't improving?
Well, so I think we'll go back to the Secretary's point on the living standards, and also the point that the Secretary made earlier around notwithstanding the comments from the Reserve Bank, it's actually not just how much the economy is growing, it is where it is relative to potential GDP. So if you're below potential GDP, you can be growing faster than what you think your long-term trend growth in the economy is.
And what's Treasury's view on that? Because we heard from the RBA governor yesterday, fair enough, she had a caveated answer, but that we were, there wasn't necessarily an output gap to close, that we were at or close to potential GDP. What's Treasury's house view on that?
I'd say we're probably broadly around where we think capacity is. I'd say there wouldn't be that much difference between our assessment and those of the bank.
Because I'm thinking, inflation's obviously, 3.8% outside the target band. I would think that we are at or close to capacity.
So again, just you want to be careful with the latest inflation read, just because of the temporary and one-off factors that are in there. So, and if you like, whether or not you're, where you are relative to capacity affects the change in inflation, not just the level.
Yeah. I guess I'd also add that this concept of potential output is, it's not something you can measure directly, so it is an estimated number and has confidence intervals around it. So this point about is it slightly above, is it slightly below, is well within normal confidence intervals for those sorts of estimation exercises.
Okay. I wanted to just move on to productivity because we had a discussion about that earlier. So as I understand it, the Treasury's current productivity assumption, it dates from the 2023 IGR, the intergenerational report. That's the
long-run productivity assumption?
Yeah, of 1.2%. That's from the 2023 IGR.
It was used in the 2023 IGR, but it was actually the decision to use 1.2 was made, as the Secretary said earlier, in the October 22-23 budget.
Right, okay. And when you say long run, what time period? Is this 5 to 10 years rather than 2 to 5?
So go ahead.
Oh, sorry, go ahead.
No, I was going to say, so long run means it applies over the medium term, and over the forward estimates you get back to the long run.
So 4 years onwards, is that right?
So
we're using medium term, long run and forward estimates here. I want to just check I understand.
There's sort of a detailed forecast period, which is the first 2 years. Then there's the next 2 years, which are the rest of the forward estimates.
Yep.
And then the medium term is from
4 years onwards.
5 onwards. yes.
Year 5 onwards, okay.
That's right.
And the IGR, if you're using that as a reference point, goes out 40 years.
Yes.
Goes out, sorry, how many?
40.
40 years, okay. And now we're talking about the RBA's assumption there. So the RBA's assumption, as I understand it, is from their Statement of Monetary Policy in August of this year, and that's 0.7%. But Mr Cagliarini, you were saying that's over a different time period.
Yes, well, as the Secretary mentioned earlier, that the Reserve Bank's forecast horizon is typically over the next 2 to 2.5 years. Our forecast horizon and projection periods are actually over a much longer time horizon.
I see, okay. So when will Treasury reassess its productivity, so are we talking the long-range productivity assumption, your current assumption? There's an IGR due out next year, I understand?
There is an IGR next year. So, I mean, every forecast round, we think about what all of the parameters are, but certainly, you know, in the last IGR, we both adjusted. Well, not. I mean, as Dr. Heath says, it was before the last IGR, but it was in the immediately preceding budget. The productivity assumption was adjusted. And in the IGR, I mean, one of the things that we did in there was to illustrate what the impact of higher or lower productivity outcomes would be over this long 40-year projection period, because, you know, these are hard things to predict, and in some ways what's useful is to understand what the sort of variations in outputs could be if you had higher or lower outcomes over that length of time.
So does Treasury consider its current productivity assumption to be a good guide to policy making? The 1.2% figure?
So it is around the levels that other countries are using in terms of productivity growth. It's a bit below where the US is. It's a bit above, I think the UK's latest estimate's about 1. We have talked about the fact that, you know, across many of these countries, productivity growth has been lower than than in previous periods. That's one of the reasons why we reduced, and the government reduced their productivity assumption in the 23 budget.
From 1.5 to 1.2.
Yeah, it's hard. Frankly, it's hard to discern long-run trends in productivity. Because over any periods, and I think particularly the COVID period, there were very strong cyclical factors which affect productivity measures. Australia has another challenge, which is that outcomes in the mining sector have a pretty significant I mean, that varies a lot because you tend to get a lot of investment and then it's some time before you get output. So that also actually affects the estimates of productivity over long periods of time. So I think I would say that at this point, the current assumption that's used in the medium term is, you know, in the ballpark of other country assumptions, but it's a matter for government to consider that at budget updates.
Okay. Okay, can I make one last question? Thank you. Look, I just wanted to return, because I feel like I have to this Section 38 breach issue.
Section 83.
Sorry, Section 83 breach of the Constitution. Sorry. Look, you said in your statement, Secretary, breach to the Constitution and not to be taken lightly, and I agree, and you reflect, I think, quite properly in your statement on the seriousness and gravity. The thing that troubles me is the advice you received from your department that you do not consider there to be any suspected breaches of the APS Code of Conduct. Now, my reading of the APS Code of Conduct, Section 13.4 of the Public Service Act, is that an APS employee must comply with all applicable Australian laws. Now, it's not must endeavour to comply, must make a good faith effort to comply. It must comply. And I think it's perfectly reasonable for questions about culpability and intent to be considered in the context of dealing with a breach of the APS Code of Conduct. But I don't see how you can say when $2.3 billion has been spent in breach of the Constitution on 8 separate occasions that there has been no breach without conducting an investigation. Now, I don't need a response to that, but I just wanted to put that on the record because I think it's as a central agency with responsibility for a large, chunk of public spending, the signal you send in Treasury reverberates across the APS and across the public sector. And so I think it's important that this is treated with the gravity it deserves, not to hold someone unduly accountable for something that is not their fault, but to make sure that due process is followed.
Yeah, so I think I've answered this question already, Senator.
You don't need to respond. I think I needed to put that on the record.
Thanks, Senator Sharma. So we have our last questioner for this section, Senator Roberts.
Thank you, Chair. Could I have the International and Foreign Investment Group, please?
Yes.
Okay, thank you. Do you still maintain the view that foreign ownership of housing is less than 1% of the housing market in Australia?
Thank you, Senator. I'm Katrina DeMarco, Deputy Secretary, International and Foreign Investment Group. I'll hand most of these questions to Mr Tinning and Ms Sloan, who I think have got the statistics in front of them and can speak through any policies of the government. But I just wanted to sort of caution at the beginning of the session, if we start to get into questions of application of residential real estate, many of these questions may need to be taken on notice because that is the remit of the Australian Taxation Office. But I'll hand over to Mr Tinning.
Chair will be happy with that.
I will.
Senator Chris Tinning, First Assistant Secretary, Foreign Investment Division. So we don't have figures for the total stock of housing, but we do have annual figures for purchases.
You still believe they're under 1%?
We have figures for 23-24. That's the latest available figure, where purchases were 0.8%, so under 1%.
Thank you, you do. Do you honestly believe any real estate agent in Australia accepts the claim that foreign ownership is less than 1% of the housing market?
Well, these figures are from the ATO, and we have very strong faith in their ability to accurately monitor these figures. They have very strong systems, so we are confident in those figures.
Yeah, I've been on that merry-go-round. I used to ask you questions. You told me to go to ATO, so I went to ATO. Do you honestly think any Australian believes foreign ownership is less than 1%?
I can't comment on the views of the Australian populace, but we are very confident in those figures.
I'm asking you for your views.
My views are that those figures from the ATO are accurate.
Senator, I'm not sure it's for Mr Tinning to provide views on whether or not he thinks those figures are accurate. However, we have got those figures from the ATO, and just to reiterate his earlier point, the figures that we have from the ATO are about the flow, the number of investment that's been made as a proportion over the year, not the total ownership of foreign investment.
I'm concerned about both, but I understand that. He made that very clear. Have you ever conducted market research or any surveys around public confidence in your figures?
No, we haven't, Senator.
Why not?
Senator, the government made a range of announcements around ownership or around to strengthen the controls around foreign investment in residential real estate in April 2004. Sorry, no, this year, April 2005. But 2025, sorry, thank you. Thank you very much, Mr Tinning. But it's not really, I would argue, for us to go out there and conduct market research on these sorts of matters. Okay. The government's made a range of policy decisions and we're looking to implement those as quickly as possible.
Okay, thank you. Last question, Chair. Is she smiling?
She's smiling? Yeah, she even has the thumbs up for you, Senator.
Going to the vacancy fee returns for foreign owners, how many forms have been lodged since coming into effect?
I think we'd have to take that on notice, Senator. That will be details the ATO hold.
No, that's understandable. Could we have them on a yearly basis, please?
We'll see what we can get for you, Senator.
Okay. Thank you. Thanks, Chair.
Thank you very much. That concludes our session with Treasury, and thank you for staying the extra almost hour. I would just incorporate into Hansard your opening statement and the documents that were tabled from Senator Bragg and Senator Canavan. We'll now suspend for a short break.
I just note, Chair, before we break, that I had 3 lines of questioning that I did not advance to give other senators the opportunity.
Thank you very much for all those senators who withheld their questions. You can put them on notice. And we will be back at 12:07. Let's get going again. The committee now welcomes representatives from the Australian Office of Financial Management. Thank you very much for joining us, second day in a row. Do you have an opening statement?
No, we don't, Senator.
Thank you very much.
We're happy to take questions when you're ready.
Let's go for it. Senator Sharma.
Thanks, Chair. Thanks for your patience in coming last night and then returning today. What's the current level of Australian government securities on issue?
951.9 billion.
Okay. And you update those figures every week, roughly? Every week, is it?
Yes, we do.
On your website?
Yeah, so all of that information is published on our website.
Okay. When do you expect to hit $1 trillion? I know the Treasury expects that debt level to be hit this financial year. You obviously need to plan for that. What's your internal planning assumption?
Yeah, so we don't have a clear picture on when we'll actually hit the $1 trillion. We're essentially waiting for the issuance task to come from Treasury, which we're not expecting until after my EFO.
What is that comes from Treasury, Ms. Hughes?
It's the funding task for the year.
I see, okay.
Yeah, so we'll be able to put something out sort of post my EFO. But our expectation is we won't get to $1 trillion before the end of this calendar year.
Okay, not before the end of this calendar year, but still this financial year?
We'll just have to wait and see what's in my EFO.
Okay. And then I was looking through your recent bond issues. So I think you did a bond issue yesterday, the 3rd of December, a 10-year Treasury bond?
Yeah, so that was a tender, yes.
Yep.
Yep.
And so I saw that the weighted average yield of that came in at 4.63%. So that's what you needed to price it at to clear the market?
That's correct.
Okay. I looked back 6 weeks to the 22nd of October when you did a 10-year Treasury bond then, and I think the weighted average issue yield then was 4.1%. Mm-hmm. So it's gone up about 50 basis points in 6 weeks?
Yes.
Okay. What's causing that rise?
Yeah, so Australia, as a small open economy, our yield curve very much moves with what's going on in financial markets globally, and so the pricing moves up and down on a regular basis. So that's sort of one of the main factors. Demand has been fairly consistent, so there isn't any concerns around the demand for our bond. It's more sort of what's happening in global markets and what other economies and what other issuance there is at a particular time that can sort of drive that yield.
Okay, but if we're having to price at 50 basis points higher, it's going to add to our debt servicing costs?
It does.
Okay.
Yes. And so what we do over time is we try to sort of manage that as best we can, but there are a number of factors that are sort of out of our control. So some of the things that we do is we issue into the most liquid part of our curve. We make sure that we have a deep and diverse investor base. We try to be as transparent and as boring as possible, so that we are actually over time attracting that good pricing for our debt. The AAA and also the country's current credit standing also helps with these things.
Okay. Have you seen any impact to the increase in Japanese bond yields on our own market?
No, our yield curve is more correlated to the US, and it also depends on sort of where we're issuing across the curve, and so more at the front end. So the shorter term maturities, they actually are more driven by speculation around what's happening with interest rates in Australia. But then as you sort of go out the curve, then that sort of is, what's happening globally and, what's happening with other issuers and investors. And that will sort of impact that pricing sort of around that 10-year and further into what we call the long end of the curve, so the 30-year part of the curve.
Okay. Thank you. I had a report from a Kanga News Debt Capital Markets Summit earlier this year where I believe you were on the panel.
Yes.
Ms. Hughes. So someone, and this is hearsay only, so I don't know if this is true, but I believe you were asked a question, I think this was just before the so-called Liberation Day tariffs, what you would do if the Treasury bond market globally seized up, how you would place government debt. It was reported to me that you said you'd be on the phone to the Reserve Bank straight away.
Oh, not straight away, no. So we have lots of, so one of the things that we have done with Treasury, because we don't sort of operate on our own, we have our Treasury colleagues, and we also have the RBA, and we do speak to them on a weekly basis. And so what we would do is we would use all of our tools, and we have a toolkit. So and a great example of this was during sort of March 2020 when the pandemic hit. Yeah, so we needed to stay, we weren't able to issue a Treasury bond, but we were able to issue Treasury notes through that whole period. So they're the sort of 2 to 3 month, out to 6 to 12 month sort of short-term instruments, and that just sort of keeps us in the market, keeps the market going, and also means that we can fund the government. We also have a liquidity buffer as well.
I was going to say, don't you keep, like, I saw in the
we've got
annual
about
$65 billion?
So our liquidity buffer is around 30 billion, so we will never go below that 30 billion.
Okay.
And also that 65 billion was sort of a point in time at the end of the financial year.
Okay.
And so we did have a reasonable amount of cash on hand at that particular point in time, because we had a number of maturities sort of coming up this financial year that we need to prepare for.
Okay, so if the bond market did, in argument's sake, seize up, you would rely upon the cash you hold on hand to fund government operations in the first instance?
Yes, and then if the disruption goes on for longer, then we would actually, then that's when we would start using our other tools, which include having a conversation with the RBA.
Okay, all right, thank you. Now, I just had some questions about sort of corporate structure and human resources, if I can.
Yes, of course.
I presume we've got everyone at the table here. What's your overall headcount at the AOFM? Or
It's around 50 people.
Okay. And how many SES employees have you got at the moment?
So we have 3 now.
Is that everyone here at the table?
That's everybody at the table, yes.
Okay, and was there a restructure sort of last year sometime
so we
of the senior leadership?
Yes, so essentially historically the AOFM has only had one SES officer, and we went through the process of securing 2 extra positions, which is the Chief Operating Officer and the Deputy CEO position, so we now have 3.
Who are both at
the table. So those positions were secured from other parts of the Treasury portfolio. So they weren't new positions to the Treasury portfolio, but they were new positions to the AOFM.
Okay. So what was the what was the previous position before the Deputy CEO?
There was no positions there at all. It was just, the only SES was the Chief Executive.
Okay. So who was the second most senior officer at the AOFM? It was an EL2 officer?
It was an EL2.
Who had what title?
There were, at the time, there were several EL2s that had a number of different titles.
Okay, okay. And are you currently filling any vacancies? Not at the SES level?
Not at the SES level, no.
But at the lower levels?
Yes, we have some APS 5 positions that we're filling within our funding strategy and research team.
Okay, okay. And now I had some questions. I had a look at your APS employee census report, the highlights report. There are a few things that concern me in that. Page 5 of that report, which is Leadership SES Manager, so the index that assesses how employees view the leadership behaviours of their immediate SES manager, all of that data has been blanked out to preserve privacy, quote unquote.
Yes.
Why is that?
That's because there's only one of me. There's only one person, and so that is not uncommon for the APSC to exclude that information.
But aren't you the one who's publicly responsible for the organisation?
I am. That is correct.
So shouldn't the public have an opportunity to see what the view of your leadership is within your organisation? Where did you get this advice that you could do this?
That advice came from the APSC.
They said you should do it? They said you could do it?
They said we should do it.
Okay, I just find that a lack of transparency. So I would like to just ask you on notice if you could test that again with the APSC, because
certainly.
I think in an organisation where there's only one SES, but it is the leader in the organisation, I think it's fair enough that perceptions of their leadership are publicly available, as is available for the other one. So it was page 5, and then I think also page 22 of that same report. Where the two questions were, my SES manager routinely promotes the use of data and evidence to deliver outcomes. That's blanked out.
Yes.
And in my agency, the SES clearly articulate the directions and priorities for our agency.
Yes.
That's blanked out as well. So on notice, I guess I would like to see those figures, and you can decide whether or not, if you don't provide them to me, and then we can look at OPDs or something else.
Certainly.
Now, there were just two other figures that jumped out at me here. On page 16, so this is a retention question, and employees who indicated they were pursuing another position within their agency, another agency outside the APS, were asked for the primary reason behind their desire to leave. The overwhelming response here was that senior leadership is of a poor quality. That was 36%, 1 in 3, which seems quite high to me. Have you interrogated the reasons for that, or?
Yeah, we definitely have interrogated that, and certainly our census action plan for last year's results, we've been working really hard on communication. We've been working really hard around wellbeing. We actually, for the first time, have a wellbeing policy. And so we have been working really hard over the last 12 months to actually help improve some of those scores. And I think also having 2 SES, additional SES within the organisation just means that those communications channels are a lot more open. So it's a lot easier for an APS employee to sort of come to to either the COO or the Deputy CEO and have some of those conversations rather than needing to come to a Band 3. So that power differential has always been has been an issue, and so I think with having the additional SES in there will actually kind of help with some of that communication, some of that use of data. And certainly one of the things that we've been really focused on over the last sort of 12 months is actually creating jobs where people are working hard, enjoying what they're doing, and actually come to work and really enjoy what they're doing. So I think that's definitely been something that we have been very much focused on over the last sort of 12 to 18 months.
Okay, look, I think I'm keen to see the next census results on that, because that was concerning. Now, the other one was on page 19, which is the page entitled Unacceptable Behaviour. And the question was put to employees, during the last 12 months, excluding behaviour reported to you as part of your duties, have you observed a public official engaging in conduct in your agency that you would consider to be corruption? Now, 18% of staff, almost 1 in 5 of that said yes. Now, that's 16 percentage points higher than the overall APS, 16 percentage points higher than specialist agencies. And you're an agency that's placing billions of dollars of government debt in the market, but 1 in 5 employees say they've witnessed behaviour that they consider corruption within the office. So why is that?
Well, we have really worked really hard on trying to find out what that is actually about. So we've introduced things like anonymous surveys, so people who don't feel comfortable talking to their managers can report things anonymously. We've had a number of additional officers do their public interest disclosure training so that that we know what to do if those sorts of things come through. There's constant communication around who you can actually talk to, and nobody's come forward with anything. So we're still trying to work out why that score looked the way it did. So I don't have a ready answer for you on what's going on there. So it's something that we're continuing to work on and hoping that some of the sort of things that I've talked about will actually help improve that score.
Senator Sharma, we're at 13 minutes.
Okay, I'll just finish up. The challenge for us as sort of overseas is the follow-on questions: which of the following reflects the conduct you witnessed, abuse of office, a breach of public trust, etc. All of the data for those questions has been blocked again to preserve privacy. So, I mean, even, the body that's meant to be overseeing your agency, we don't have any data about what people are saying is corruption. But if we've got 18% of staff, that's like 10 people at least in your agency who say they've witnessed corruption in the past 12 months. And I couldn't see any mention of this on your census action plan for 2025. I don't see anything about encouraging or, weeding out corruption or the perception of corruption.
Yeah, I think we have focused on those open communication lines. So actually it's difficult to know what you're responding to, and I think really educating people around what constitutes corruption, what constitutes fraud. And so there is, that additional training so people know what they need to report, and also being really clear on where they can actually report that. So I think that we don't directly address it in the census action plan, but it's through that communication piece and trying to get to the bottom of what people are seeing that they think is corruption, so that we actually know how to respond and what we're responding to.
Have you invited an outside body like the APSC or the National Anti-Corruption Commission to come to your workplace and tell your employees what sort of whistleblower protections exist?
We haven't invited external parties to come to the office. However, we have offered, and there is online training that is available and compulsory actually for all employees to complete as part of their employment.
I'll just add also we ran a fraud and corruption stand-up for the whole office post the last census results to really dig deeper on what constituted fraud versus corruption, and then also focused on the template that can be used to report, but also the different channels that people can use to report their concerns. So that was run post the census results.
And who conducted that stand-up?
So that's conducted by our security team within the enterprise risk function, and it's captured in our fraud and corruption risk program, which is the articulation of the activities we're taking over the year to manage the fraud and corruption risk in the agency.
Okay. Look, I will follow up on this separately, but just on notice, and I'll finish up now. If you could take away the request to make this data that's been hidden to preserve privacy on corruption in particular, senior leadership and SES perceptions, if you could take on notice whether that data can be provided to the committee, I'd appreciate it.
Yeah, no problem.
Thank you.
Senator.
Thank you, Chair.
Thank you, Senator, and thank you to representatives from the Australian Office of Financial Management. There's no further questions, so you're free to go. And I would now like to welcome representatives from Department of Treasury Housing Group and Housing Australia to come up to the table, please. We got everything we need, everyone we need up the front? Oh. Okay, let's kick off. The committee welcomes representatives from the Department of Treasury Housing Group and from Housing Australia. Would you like to make an opening statement, either organisation?
Chair, Damien Tangi, Acting Chair, Housing Australia. Would like to make an opening statement. We have distributed the statement and I'm happy to speak to it and present.
We don't have a copy of it. We don't have a copy of it, sorry.
Chair. We have a hard copy here if you would like that.
Yep, okay, we'll table that. In the interest of time, if there's anything you'd like to call out just briefly, otherwise we will circulate it to senators now.
I will call out, Chair, thank you. I will call out a number of the programs that and the performance of them just quickly. So the Australian Government's 5% deposit scheme by the end of November has assisted more than 267,000 home buyers nationwide since its inception. Tomorrow morning at 9 o'clock, applications open for the government's shared equity scheme, Help to Buy, administered by Housing Australia for 10,000 places annually. So we look forward to that commencing tomorrow. And in relation to the delivery of the HAF rounds, we have 279 projects contracted in the first two funding rounds that are progressing now through the development pipeline. And the Minister is visiting one of those sites today to celebrate the topping out of the project in my hometown of Bendigo in regional Victoria. Of these HAF projects, we're expected to deliver 18,650 homes overall, substantially boosting housing availability for those in need of housing outcomes. This year, 889 homes have been delivered, allowing families to move into their houses before the new year. Today, the Minister announced that under the renamed HAF Crisis and Transitional Program, Housing Australia has been able to approve an additional 210 homes for women and children escaping family violence and youth experiencing or at risk of homelessness. The HAF CT is a $1 billion program dedicated to providing safe and secure short to medium term accommodation for the most vulnerable people in our communities. Importantly as well, that Housing Australia is pleased to be implementing the delivery of round 3 of the HAF in order to deliver the remaining 21,300 homes required to reach the national target of 40,000 homes by mid-2029. We're working closely with community housing providers, developers, investors and all levels of government to achieve this goal. We have a market briefing, which is a national briefing on the further details of HAF round 3 on the 10th of December. I wanted to profile quickly the year ahead as we see it. We have a suite of programs. Parts of, Senator.
Most of the other witnesses have just tabled this.
Okay, happy to take it as read from there.
Okay,
thank you.
Yeah, that's helpful, thank you. Mr Rimmer, do you have an opening statement?
No.
Okay, that's very helpful, thank you. Before we just go to questions, I neglected to just let people know that in order to try and manage the time, we are going to put the Productivity Commission, who are up next straight after the lunch break, and we hope to finish at 1:30 today. So I will immediately go to Senator Bragg.
Thanks, Chair. So Mr Tagney, so when were you appointed as acting chair?
I was appointed as acting chair on 2 moments. From last Thursday.
Okay.
Yes.
And have you been briefed on the governance issues that were facing the Board of Housing Australia?
So I was appointed to the board on the 18th of December last year. So
last year?
I have been an active board member over the course of this year.
Okay. And have you been briefed on this governance report that was done into Housing Australia, the intersection report?
No, I wasn't on the board at the time of those discussions, Senator, so I don't have a knowledge or briefing of that matter.
Okay. You haven't been given a briefing on that?
No.
Okay. Are there any governance issues at Housing Australia you've been asked to try and help clean up?
Every organisation looks at continual improvement, Senator, and we are working through that as an organisation does. Sure. There's no particular governance matters that I've been required to look at. The committees that we have, the board committees that we have, identify issues that come up to board, and there's ongoing discussion across a range of those matters.
So what are the major ones that have come to your attention?
We're always seeking continual improvement around culture.
I understand that, but this is Senate estimates. We're trying to work out what's going on inside the agency.
Sure. We are managing a range of measures in terms of new programs. So we have grown significantly as an organisation. With that comes some growing pains, from NIFIC at around 100 staff to approximately 230 staff at Housing Australia now, and the implementation of programs like the 5% deposit scheme and the Help to Buy scheme have been significant programs for us to build and stand up with the partners that we have.
What about governance and personnel issues?
Personnel issues, it's been discussed before this committee before, around the level of turnover that we're seeking to manage on an ongoing basis. Sorry?
What's driving that?
Change in the organisation and growth in the organisation, I think, primarily.
Okay. No other cultural issues?
There would be a range of issues across any organisation, Senator. There's no particular cultural issue that I would identify as the reason.
Yeah, how many organisational reviews have been conducted at Housing Australia in the last couple of years? Do you know of any?
I haven't participated in a full organisational review while I've been there, and I can't comment on the prior.
None?
I can't comment on the prior, Senator.
Pardon?
I can't comment on prior to my appointment.
No, of course, I'm not asking you that. So, do you know, was there one produced by Elizabeth Elmer? Did she do an organisational review for the board?
Is that the name of the entity that did?
Name of the person who did the review? No?
I'm not familiar with that name particularly.
Do you know Mr Langford?
So, Senator, I'm aware that prior to my appointment, there was some work being done by Elizabeth Elmer, and I'm not aware of the terms of engagement of that. I'm not aware of what the final output in relation to her full brief at that time was.
Has it been completed?
She's no longer engaged by the organisation, Senator.
Okay, so it was commenced but not completed.
Ms Elmer contributed, I understand, to what became a briefing pack for me when I joined the organisation. I think at the time it was drafted as an incoming brief. I understand she contributed to that. I don't know that there is another report that she produced.
Okay, there's been no other organisational reviews produced for the board in that time?
So when you say organisational review, Senator, because I want to just make sure I'm clear in answering the question.
Board commissioned inquiries or undertakings which look at the overall performance and structure of the organisation?
None commissioned by the board, Senator.
Okay.
But not since my appointment.
Nothing by you?
Yeah, I've undertaken a number of pieces of work.
You
Senator.
have?
Yeah, absolutely.
Okay. And that's into the executive structure?
It's looked at the executive structure and the way that the organisation works, yes.
Okay. So last estimates we discussed, I think it was with Miss Braid, we discussed some of the workers' comp issues. Is she here today?
She is, Senator,
yeah. So I think at the time you said that there were 4 claims?
I believe that's correct.
Do you want to come to the... Do you want to get Miss Braid to come to the table? Yeah.
Yeah, Miss Braid, if you wouldn't mind coming to the table, but yes, Senator.
Okay. Hello. So I think at the last estimate you said that there were 4 workers' comp claims?
Yes, 4 active workers' compensation claims.
Is that right? And are any of these claims against members of the executive?
Senator, a workers' compensation claim arises from an employee seeing a medical professional who determines that they have incurred a workplace injury, and a claim is then made to Comcare.
So my question is, where of these, is it 4 or is it still 4?
4 active claims, yes.
4 active, and how many are inactive in the last year?
I believe there have only been 4.
It's only 4. Okay. And do any of these involve allegations against members of the board or the executive?
Not to my knowledge.
They don't? They definitely don't?
Senator, we'll need to take that on notice because I think Ms Braid's just said to the best of her knowledge, but I understand you're pressing for more specificity.
Well, the reason I'm pressing for these answers is because you have had very high turnover. I think in the last estimates we talked about 20% of the staff has turned over. Is that right?
Ms Braid, you got the latest turnover figures?
Yes, the latest figure is 25% turnover as an average for the last...
I mean, it's a very high turnover. You've had these issues canvassed in the intersection report. You have these workers' claims. I just want to make sure we have the record right. So there's been no claims made against members of the board or the executive from these staff who are currently undertaking the claims?
Senator, we're going to take that question on notice because.
But do you know? Because if you know the answer, you have to provide it.
Well, I don't have knowledge of it.
Ms. Braid might know.
Ms.
Do you
Braid.
know?
I can confirm that no members of the senior executive or board are named in any of the statements that have been provided to us via Comcare.
Okay. Can I ask you about, did you have a piece of work done by Landers and Rogers?
Landers and Rogers are a law firm, Senator.
Yeah, what do they do for you?
They do manage a range of legal matters for us.
Okay. Who's the Chief Legal Officer at Housing Australia?
Ms Jacobs.
Okay, is she here?
No, she's not,
She's
Senator.
not here. Okay. Do you know whether or not she was a past and recent partner at Lander and Rogers?
I believe she was employed by Landers and Rogers prior to her appointment at Housing Australia.
Okay. And who decided to engage Lander and Rogers?
Well, there's been a range of matters we would have engaged them on, Senator, so I can't give you a comprehensive answer. There are a range of law firms that act for us across a range of matters.
Okay. But do you know of any conflicts, disclosures or anything else we should know about in relation to that engagement?
So if you're asking about Ms Jacobs...
I'm asking about the engagement of Lander and Rogers, yeah.
Well, Senator, I'm not aware of any, but we have a conflicts of interest process where people declare conflicts and there's a conflict management plan put in place if there are issues related to any individual, and the conflicts that they declare is in the normal course of business.
Okay. In terms of these other issues, are any of these issues in relation to bullying? The allegations that have been made inside Housing Australia, are any of them to do with bullying?
The nature of the claims varies and it relates to the injury that the employee has sustained in the workplace.
So it's kind of a binary thing.
Well, Senator, if I may, I think the nature of Comcare doesn't test whether there is a bullying claim. I think if you're asking about people's experience in the workplace, there's clearly some people
Okay.
who...
How many bullying claims do you have at the moment at Housing Australia, if any?
When you say bullying claims, so active claims that we're considering...
Yeah, how many active claims are currently being managed by Housing Australia about staff complaining about being bullied?
Ms Braid, do you have that information?
I don't believe there are any active complaints at the moment.
There's none. Okay. When's the last time you did a staff survey?
We're currently in the process of doing one right now, Senator.
But when was the last one?
It must have been prior to my appointment,
So
Senator.
you haven't done one. How long have you been there?
I've been here just over a year.
Okay. And when will this staff survey be completed?
Ms Braid, do you have the answer to that?
We're expecting the results the week of, I believe, the 16th of December, that week.
Senator Bragg, you're at 10 minutes. I'll give you another block.
That'd be good, thanks. Okay, well, will you provide us with a summary of those findings in due course in an appropriate way?
I'm happy to take that on notice, Senator, yes.
Okay. I want to go to this home guarantee scheme issue now. So we had a discussion with the Treasury Secretary before. She didn't promise to provide the modelling. This may be a question for Treasury. I certainly don't want to verbal the Secretary. She said that she will have a look at whether or not it could be provided. What's the answer?
Senator, the Secretary gave an undertaking that we would have a look at what can be provided, and we will do that. There's a range of FOIs and OPDs on foot. We will go back and have a further look at all of those and the questions that you've asked and see what information can be provided.
So what did you find? Did you get the pick and shovel out down at Langton Crescent and dig up a few holes?
I'm not quite sure how to answer that question, Senator.
What did you find in the last few hours?
Senator, we have not done the comprehensive search that the Secretary has committed to.
Okay, but does it really require a comprehensive search? I mean, the Prime Minister of the country has been talking about a 0.5% increase, which actually is apparently, according to you, 0.6% increase. I think you did the modelling, Mr. Dowie, and we had a conversation about 8 weeks ago. So, did you write this down onto a piece of paper?
Nicholas Dowie, the Acting First Assistant Secretary of the Housing Supply and Cities Division.
Yep.
So, Senator Bragg, I think as I answered in November when we previously had this conversation, we did provide advice to the Minister's Office in writing about the results of the modelling.
Great. Well, that's very helpful. So you physically wrote it down on a computer?
That information was transmitted via email.
And you wrote it, did you?
I personally didn't write it, but it was written by a Treasury officer and sent via email to the Minister's Office.
And how many people helped in the Treasury modelling? Which part of Treasury? Did you do it in the housing bit?
The modelling was emanated from Housing Group.
You did it in the Housing Group?
Yes.
You did it, okay. Did you have to build a model for this purpose?
So the model that was used was built.
The chalk model?
It's well, it was that was an input that was used, and it was based off that.
Yeah.
So the model has been built within the Housing Group to support a range of things.
Okay, that's very good.
So the model was built, and the model enables us to do a range of things, including about estimate the impact of prices on particular things, and that's what this model has helped us to determine.
Okay, so let's just go through it again. So the policy was announced in May, right, during the election campaign, I think it was. Then in July you received the request to do modelling. That request came through from the Housing Minister's Office. Is that right?
Yes.
Senator, can I just add some additional context?
Sure.
I think implicit in your question is the idea that the first time Treasury provided policy advice to ministers about the price impacts of this scheme was after the announcement, and that's factually not correct.
Not implying that. I'm asking questions just to try and stack up the sequence of events here.
So the sequence of
events... Because we can't get a piece of paper out of your department.
Sure.
And apparently, according to your own FOI response 3931, you've already identified the pieces of paper. So in fact, no pick and shovel or anything else is required to find the pieces of paper at Langton Crescent. You already know what they are. You've just decided not to give them to the public.
No, Senator, I think we've written to you suggesting that there's a charge to be paid for that FOI.
No, that's a different one.
It's
a different one. You're starting to sound like the ministers in the government complaining about us using the discovery processes.
Well, they're the ones.
Be careful who you hang out with.
They are the ones who have to do the enormous volumes of work that you create.
Sorry, we're
Senator.
asking questions.
I wouldn't be surprised if they complained.
This is a
because
democracy.
they want to be working. They want to be working.
Are we not allowed to ask
not working
questions
for you.
anymore?
No, well, you're here asking questions. I'm sure you're making some sort of progress. Keep going.
You're a generous king and ruler of this land. So what I'm trying to work out is how many people in Treasury worked on this exercise? 2 or 3 people?
So this work was done by some folks who are in the Planning, Cities, Infrastructure and Analysis branch, and the amount of people who work, and we have a small team who produce this work.
Okay, so they did it. How many pieces of paper was it on?
So the advice that was provided to the Minister's Office was a single email that explained the results of the modelling.
But like, was it a long piece? Was it a long thing?
Are you asking about the length of the email?
Yeah. Or did it have tables and graphs, and did it have sensitivities and other things written down in English?
Well, the email was written in English, and the email did contain what the results of the modelling were.
Okay. Was there a table?
I believe the email advice that we gave did have the high-level answer about what the impact of that was. I don't believe there was a table attached to that.
Okay, but were there numbers in there?
There were numbers in the email, and I believe that I highlighted the outcome of those numbers in the questions and the exchange we had last time.
Okay, let me ask you a really dumb question. When you read all the Prime Minister's transcripts, which I'm sure you read because you're very excited to hear what he has to say, and you heard him saying it was going to cause a 0.5% price increase for first home buyers, did Treasury write to the Prime Minister to say actually the number is 0.6%, or did you just let it go?
It's a vanishingly small difference, Senator, isn't it? Really, like so 0.6% over 6 years. 0.6% over 6 years, vanishingly small.
I don't know what was in the Prime Minister's mind. It might have been 0.5% over 5 years. I mean, that's well and truly short of the attribution errors that you made earlier this morning.
What did I get wrong?
Well, you tried to claim, as I recall, that all of the house price increases...
No, I didn't.
You did. That all of the house price increases over the last quarter
So it was a factor.
were somehow related to this program.
It was a factor. It is a factor.
No, you did.
It is a factor.
You did.
Nice diversion. What's the answer?
Senator...
Or have you forgotten the question because after that political speech?
Senator, I can answer that.
Sorry, I've asked the modeller.
They've both been
Senator...
concentrating.
Okay, well, you answer the question. Fine.
I saw the Prime Minister's comments on this. I made the assumption that there'd been some minor rounding or outcome in a number that is actually very small in the context of price changes that are happening in the market and over a relatively long period of time. This is a 6-year modelled impact. I mean, the prices in the housing market have gone up, I think, something like 7.5% over the past 12 months. We're talking about
Okay, so you didn't do anything.
0.6.
Of course not.
You didn't do anything.
Senator, I did
You
not.
left it.
I did not, and I'm very acutely aware of my obligations to make sure that the Prime Minister has accurate information as
Okay.
a public servant. That's a very important part of our job.
Okay.
And I did not read it as in any way problematic.
Okay, have you been... Okay, given the extensive public debate now about house prices and whether this scheme has or hasn't done something, most of the independent economists say that it has had an impact. Have you been asked to redo the modelling?
No.
Okay. So just to round out this, because it's quite important given we don't seem to be able to make any progress. So you transmitted an email to the Minister's office which did not contain any tables or graphs, but did contain numbers, and that's it.
So, I think, as we've said previously, we did provide advice to the Minister's office that outlined the summary of the results of the modelling.
Did it contain sensitivities and risks?
So what that advice did, it talked about the impact, which is the 0.6% nationally over 6 years.
Okay. So the question is, did it just say, this is the number we think it is, that the end, goodbye, all the best for the future? Or did it say, this is the number we think it might be, and here are some things that could impact it, including supply, other factors?
So we'll have to double check exactly what that email said, but my recollection is we did talk about the results of the modelling and the impact of on prices, which is what we were asked to do, and that's what we advised on.
Okay.
Senator, in this modelling work...
he'd answer the question. I'm happy with that.
Okay.
Yep. Okay, well, what do you want to do?
Or do you have any more to...
On this line, no.
Okay. Well, we can rotate then. So we'll go to Senator Pocock.
Okay.
Yep, Senator Pocock.
Thanks, Chair. Thanks, everyone. I have got a series of questions which will take more than one block, I'm sad to say, but really important program and very important for us to all understand it. I want to begin with some questions around specific programs, starting with the Social Accelerator Fund. I asked an OPD in relation to this program, and thank you for your response, a weighty response. Minister's made comment about the resources needed to respond to requests like this, and I want to acknowledge the work done to give me this, but I also want to make the point that every one of the documents that's been supplied to me in this pack, 400 pages, are pre-existing documents. Of course, they require checking by whoever checked them, thank you, but they are not new developments. They are not analysis beyond the provision of existing documentation, all of which is promised to go onto the public record. So I just want to make that point, that the requests are not onerous, at least in this particular case.
Well, they certainly are. I mean, they certainly are. Like producing
the pre-existing documents, there is not new analysis in these documents. The analysis is all...
Working through to see what else is available is an enormous task. And I don't think that it's appreciated by people who make these
and people are senators are entitled to make them. Other people are entitled to make freedom of information applications. There are more OPDs over the course of the last period than there have been since the history of federation.
I don't want to waste my time, Minister. I'm making the point.
There is real work attached to it.
This is a sizable request. I appreciate the data. It is not new work. It took me a day to read, which I really, and it's very useful information. But I want to make the point that this is an exercise in good government to allow us to understand $1 billion, more than $1 billion, $2 billion spent in this particular program, the Social Accelerator Fund. And I want to check my understanding that of the $3 billion of expenditure secured by the Greens in negotiation for the HAF in 2023, $2 billion went into the Social Accelerator building social housing in the states and territories, and the other $1 billion was used as additional spending on crisis accommodation for women and children via the National Housing Infrastructure Facility, which I think you've just told us has been renamed the Housing CT, Crisis Transition. Is that correct? Thank you. Great. So I want to turn to the substance of the OPD. On page 6 of the ministerial submission, there is a table laying out the completed dwellings by type to the 30th of June of this year, spending out of the Social Accelerator. The total number of homes built to date is 1,057, 25% of the 4,000 promised in the overall build. When I look at the way these houses have been developed, drawn into this, paid for through this program, 32% of this 1,057 were new builds, 48% were refurbishments, and 19% were acquisitions. That's a lot of refurbishment. That's nearly half of the entire program is refurbishment. Do you know whether the 509 refurbished social houses at the end of June this year out of this program were uninhabited before refurbishment? Because it's a critical question if we know whether adding to supply here, which is all about what this game is about.
Sure. Thank you, Senator. My understanding, Ms Lenthal may wish to come to the table and help on this, but my understanding is that the requirement under this program is that the house had to be effectively uninhabitable or deemed by the states to be uninhabitable in order to qualify under this program.
It's a different word to uninhabited.
Sure, Senator, and these are finer distinctions that are really up to the states to make in delivering this program. The state said to us this dwelling was not inhabitable and that it would cost money to refurbish that dwelling and get it back into long-term use, and that's an effective way of spending public resources.
So we don't do you know exactly how many were uninhabited?
Sorry,
it's okay to say no.
Assistant Secretary, Strategy, National Engagement and First Nations Branch. Like Mr Rimmer said, we know that it's additional stock, but I don't know if it's uninhabitable or not.
So given that half the money is going into fixing existing stock at state level, this is a real statement, is it not, about where we are in our public housing story. We have got so much stock that is in poor condition because of 20 years of a failure to invest in public housing. I just want to make that point. If you disagree with me, please do. But here we are using an enormous amount of money to fix what we should have been fixing over the last 20 years. Is that a fair statement?
Senator, I think it's a fair statement to say that there's a lot of social housing stock that needs repair, and the government through this program has created additional supply of public and social housing that's very important for the system.
By fixing things that have fallen into terrible disrepair. When I look at the amount we're spending on each of those houses to refurbish, it's a lot of money. It looked like over $80,000 per house when I do the averages.
Senator, some of these houses are 60, 80 years old. That, you know, there's a reasonable amount of money to be spent.
It's all about maintenance, and we have failed to invest at state and federal level in public housing. And most of the refurbishments were in New South Wales and Western Australia, 308 of them in New South Wales. What's going on that's that kind of imbalance is there in that refurbishment program?
So, Senator, I can start to answer part of that. So the way in which the program works is the Commonwealth provided the funds for the states, and the states, through their implementation plans, were able to identify where they wanted to spend the money to actually have the most effect. And so the decisions that the New South Wales and Western Australian government have made about where they're spending the money reflects their assessment for where they needed to actually spend those funds. So that's a function of what decisions individual jurisdictions have made.
Thank you. Almost 20% of the housing so far was through acquisition. How does it help with the housing crisis to be purchasing houses out of probably low-priced houses and, you know, drawing that supply out of the market for private purchases? Acquisition is not adding to the stock, is it?
So, Senator, I think it's worthwhile just correcting what that acquisition means. So there's some very clear rules that are set out in the Federation Funding Agreement that governs how this program operates in terms of what the funds can be spent on. And I'll just ask Ms Lenthal to explain what the acquisitions means, because they're only permitted in a limited number of circumstances.
Yeah, so under Clause 2A of the schedule, the states have to put in appropriate processes to ensure that the accelerated payment is only used for additional activities. And some of those activities include the direct provision of funding for new social houses, the purchase of new build properties or the conversion of non-residential properties, the extensions or additions to social housing, partnering and direct funding to community housing providers, and partnering with direct funding to entities whose primary purpose is to improve housing outcomes for Aboriginal and Torres Strait Islander people.
So I've read that. You've bought houses out of the market that are already built. That is it true?
I think it's important just to clarify this, and the point that Ms Lenthal made there, I think, is Clause 2.8.2, which is the purchase of new build property. So it's not purchasing existing properties; it's the purchase of new build.
The properties are out there; they're built.
No, Senator, I think we need to take a step back. I suspect Senator Bragg may have similar questions about another program. We just need to be very definitive that part of the way that the government is procuring social housing is through partnering with the states or with community housing providers, and through them with the private building and development sector. And that process happens at a range of different stages in the development cycle. And this is a good thing that adds to supply of social housing. It creates new supply of social housing. No one is going to, across the entire 55,000, I can tell you that there are 18 dwellings which fit, I think, the definition that you have in mind, Senator, about acquiring an existing property. 18 in 55,000.
So what does it... You've got a group of a third who are new builds in this 1,000 homes, and you've got nearly 20% are acquisitions. What does that mean?
So it means things...
These are properties that transact when the development completes. I've heard the Senator in other contexts describe it as payment on delivery, but they're properties that were contracted well back in the development process, and their supply of housing that would not have happened other than for the investment either through the states or through the community housing provider in relation to that.
So you contracted to buy them. A developer's building 100 homes, 20 of them you have contracted to buy as part of that. Is that how that's happening?
So, Senator, through the SHAP, it's the states that are contracting, not us.
Yep.
But a typical scenario is that a developer has a site, they're working on plans, they're working on getting financing for the development from the bank. They might say, why don't we talk to the state about 15 or 20 of the 100 units being purchased by the state. The state then goes ahead and contracts that well back in the development. This is when there's nothing happening on the site. And because of that purchase of 15 or 20 dwellings, that may well be enough to get the development project as a whole across a financial feasibility and make it bank financeable, and actually allow the developer to get bank financing and allow that new supply to hit the market. This is very important. This is an important part of building new housing supply in the country.
And how is that distinctive from a new build? Are you not? What's the difference?
The distinction is, in some cases, I believe this to be the case. We might take on notice whether this is.
I'm happy to be briefed offline on this, but I'm uncertain.
In some cases, the state goes out and contracts a builder, and
So
that's what we mean by new build. Right.
I'm going to rotate the call and we'll come back to you.
Okay.
So for example, the state may have the Social Housing Agency, Homes Victoria, Homes New South Wales may have a site that's vacant, and the state contracts a builder to build on that site. That's what I think what we mean by new builds.
New build. Okay.
As opposed to working with the private development sector.
Thank you. I'll come back to
Thank you.
Great. So you're not buying any houses? No, never. You never buy any?
18.
So we'll come to the half where you ask questions.
Okay, thank you. So I want to ask you about the round one tender. So when you awarded the tender, so this was a judgment by the board, wasn't it? The board decided which organisations would get funding?
Yes.
Okay. You're on the board, aren't you, Mr Langford?
No, Senator, I'm
you
not a
report
board
to the
member.
board, but you would have been a part of that deliberation, I imagine, as the CEO?
For round one, I was not employed by Housing Australia, Senator.
Okay, but you would be for future rounds?
Yes, Senator.
Okay. So when the HAF allocates funds to housing projects, does it allocate on the basis that it is fully funding a project, or is it providing a proportion?
So, Senator, the HAF has two funding mechanisms that we can use to support a project.
Yeah.
One of which is a concessional loan,
yeah,
which is a part of the upfront capital cost of delivering the home.
Yeah.
And then the other is an annual availability payment, which is committed to the project over the course of 25 years.
Okay, so I assume the availability payments is the reason that some of these dwellings, as proposed, look very expensive. Is that right?
Well, Senator, I'm not sure what you're referring to when you...
Well, I'll give you some examples. So the average cost to build a new house, as you know, is about $500,000. Right? Some of these dwellings, like you're building some in Geelong, they're going to cost $1.3 million each. That's no reflection on Geelong being home to a great football team, of course.
Beg to differ, Senator.
Well, I'm sure. 1 million in Canary. You've got 1 million in Shepparton. You've got other places around Melbourne, Sydney, costing $880,000 a pop. So is the reason that these are so much more than the average cost of a new build because of the folding in of the availability payments?
So, Senator, when you're referring to the costings there, I think what you're looking at is the total nominal value of the availability payment over 25 years.
That's right.
One of my colleagues from Treasury will be able to speak to what that represents in terms of present value. But what I would say is that the availability payment is funding a number of elements of the provision of social housing over that 25 years. So it goes to some of the cost of the capital cost of providing the house.
Yep.
It helps to cover some of the costs of operating the property, tenancy management and support that might be folded in. And then there are a range of projects in round one that have different service models attached to them that in round one were judged to be meritorious in context of providing for a specific cohort. So I think, for example, you mentioned the Kirinari project. Yeah. I understand, my recollection is that particular project is providing a large property for Aboriginal families with a particular support model attached to it.
So let's go to this one in Shepparton, because that's $1 million, and that's about double the price that it costs to build an average house.
Of course, Senator, you need land as well as the cost of building.
So you're paying for land as well, are you?
Well, it's the cost of the provision of housing, Senator. Which,
but this one's going to Catholic Care, so they don't already own the land?
I don't have the details of the project in front of me, Senator, but in many instances, community housing providers, faith-based groups have brought land.
They already have the land, usually, and they usually don't pay any tax, which is why they're actually not a bad idea in terms of this kind of space. It just depends on how you do it. So then what proportion would be going to these availability payments?
Sorry, Senator, I don't actually understand the question you're asking. When you say what proportion...
So, in this case where it's $1 million per house, right? Double the average cost of a new house.
Also, sorry, Senator, the example you're giving, you're saying the funding, the total nominal value of the funding over 25
this
years...
is your data. This is your data. You're
so
saying,
we're not saying it's the cost...
I'll tell you. You're saying you're going to give Catholic Care Victoria $43 million of taxpayer funds to build 41 houses, which is a cost of about a bit over $1 million per house.
Senator, I really have to correct.
So can I just finish my question before you intercede? So the question is, in that example, how much of that money actually goes to availability payments?
Senator, I'm going to intervene at this point and just correct the record. If I say to you, you know, let's go out and build a house, and the cost will be X. We don't normally think about what's the cost of maintaining that house for 25 years, replacing the air conditioning unit in 10 years, making sure that the screen door is fixed in 15 years. I understand that. That's why I'm asking for the
breakdown.
But just stop interrupting him and let them answer, and then you might understand a little bit more.
So it really is it's quite an uncomfortably unreasonable comparison between like an apple and orange to do this thing of saying, well, I can build a house for 600 grand. Why is this house costing $1 million? It's just comparing two completely different things.
So what's the breakdown?
Senator, what we can tell you is that the average total development cost for a home that's funded under HAF is $690,000.
So it's an extra 200 grand.
So of that, no, it's less than that.
Just wait and let him honestly, just let him go through it, and if you don't jump ahead and interrupt him and make it hard for him to answer, he will be able to answer in a way that...
I'm listening.
You're not listening. You're
he did interrupt my question before, which is highly unusual for an official to do, but yep, I'm listening.
Senator, the average total development cost for a home that's funded in the HAF program so far, and obviously round 3 has only just opened, is $690,000. When you think in today's terms about the value of the concessional loan contribution and the availability payment contribution, in today's terms, that adds up to $535,000.
How much?
So the right comparison to make, Senator, is between the total development cost of $690,000 plus the operational costs of maintaining that building for 25 years and providing a rent discount for social housing renters. That is compared against $535,000.
Well, you're missing one thing there, aren't you?
Which is what?
The subsidy that you pay investors, which is the availability payment. So how much is the subsidy on the average HAF build?
Senator, the subsidy...
But you're not doing subsidies anymore.
The availability payments, first of all, they go to a charity.
Yeah.
Right. So,
in conjunction with investors. Come on.
Sorry?
Come on. They're in conjunction with investors in many cases.
So I believe the government's policy settings are that it's a good thing for private investors to be involved in developing social and affordable housing in the country, and that is a good way of getting value for money out of limited government resources, crowding in people who want to lend money to community housing providers at reasonable rates, and making sure that all of the Australian financial system is leaning into the challenge of social and affordable housing.
I can tell you, Mr. Rimmer, that the company called Assemble, which the Housing Fund has given $2.2 billion to, is not a charity. It's owned by Hester and Australian Super. So it is not a charity, and you are paying, you're not, but you want to answer these questions, but your fund is paying them a subsidy of some form. So I'm wondering, what's the average subsidy that goes to investors? Well, because legally they can't invest unless they're getting a decent return. So if you go back and look at what Treasury Chalmers said, the whole point of this scheme was to subsidise the difference in the return. Yes. So I'm asking you, how much public money are you giving to these big investors to make it worth their while?
Well, the official will answer that question in a moment. Okay. Can I take it from this exchange that we've dispensed with the first part of the misinformation, right, which is your claim that you have made repeatedly in here and outside that these homes are very expensive to build and cost $1 million to build, when that is in fact not the case.
Are you asking me questions now?
The average total cost
happy
of
to
the
answer.
Commonwealth for the development and operation and maintenance of a HAF home over 25 years is $535,000. That includes an upfront contribution towards the building of the home, only $170,000, like much lower than the cost of a new build. Includes a Commonwealth contribution to operating costs, $365,000 per home. So if we can dispense with that piece of misinformation, then we get to the part that we disagree about, and that's okay. I don't mind disagreement. The Commonwealth Government is intervening in the market to build homes. That's what's going on. And the way that capitalism works is people want to make a return. People want to make a return, and they're making a return, and that's a good thing because more houses get built and more ordinary people get into homes. And now I'll let the official answer their question about what
As I said before, you're a
rate of
very
return
generous
is.
king, very generous benefactor.
Well, you want to stop spreading misinformation about this program and actually honestly deal with the difference.
Well, I want to know how much you're giving the super funds to buy these houses.
Well, you're about to find out if you listen.
I'm listening.
Okay. And we're at 10 minutes, so I'll rotate the call after this.
Okay.
Senator Bragg.
Sure. Well, we're all waiting with bated breath. This is going to be a very important answer.
Senator, the eligible funding recipients do not include superannuation funds. What I can take on notice, I'm happy to give you, because I understand you want to get to a better answer, is the availability payments, which provide for a range of things, and we do publish that information. We can make that available in terms of how much is going to a project. We don't have a component of the availability payment that is specifically named in the contract as going to an investor.
Well, sorry, Chair, I just need to check. So, sorry, who owns Assemble?
Well, so, Senator, the eligible funding recipient is not Assemble.
Who is it then?
I'd have to check and take on notice the actual entity name.
So they're getting no money?
No, Senator, what I've said is that the eligible funding recipient, and my recollection is that it's a charitable entity that is a community housing provider, and they have borrowed funds from the entity you refer to.
Which is owned by who?
I think that's public information, Senator, in terms of the Assemble being owned by superannuation funds.
So that's a shell company. It's a shell.
Which is responding directly to the policy instruction we've got.
Very
I'm going
murky.
to rotate the call. Senator Roberts.
Thank you, Chair. I'll try to be brief.
Thank you.
I'm going through a
I'd much
list of
appreciate that.
short questions, I think. I want to go to data on how people who are taking on these 95% mortgages are actually faring, because I have grave concerns that the government is just signing up first-home buyers to be debt slaves to the banks. Firstly, does Housing Australia track participants who later refinance or discharge their lower deposit guaranteed loans with a different lender?
Senator, I might pass that question to Mr Langford in a minute, but I can tell you, under the 5% deposit scheme, it's been in place for 5 years now. Over 250,000 guarantees have been issued, and only 11 of those 250,000 have been paid at a total cost of about $500,000. So a relatively small amount of payment per claim. So out of all 250,000 Australians who were supported into purchasing a house through this program, 11 have fallen into very significant arrears.
How do you, if you don't track participants who later refinance, how do you avoid a survivorship bias in your arrears metrics if the borrowers most at risk of stress are those who refinance?
Senator, we only have a relationship with the borrower up until the point that they exit the scheme. There is no ability for us to track what happens to them beyond that.
So for many people, it will be, well, for everybody who enters the scheme, it's their first home. It's not unusual for somebody to refinance, to sell. You know, they've got their foot on the ladder, so they might go and buy a larger home, or a different home, or a home in a different country town, or whatever it is. It's not. I understand. I think whether you're apprehensive that there might be something in additional to the 11 out of 250,000 people who experiencing difficulty. Everybody who has a mortgage, every Australian,
has challenges from time to time meeting their mortgage.
We certainly do.
That's right, but these people are no different to everybody else. It's just that they've got a leg up because of their because they fit the criteria of the scheme. Of course, we want them to have that first step in the ladder and to grow families and to grow in opportunity, and that's
my concern, Minister, is we're tracking to see if they're getting a leg up or a push down.
Yeah,
that's what I want to track.
The evidence in this scheme is it's the
I'm trying to go through
ladder.
this quickly for the sake of everyone. Could you please provide on notice counts by year since 2020 of scheme-backed loans refinanced or discharged?
Senator, we'll take on notice what information we have that could be useful to answer that question.
And where possible, with any available reason codes as to what they're doing.
Yeah, I mean, I just don't take it from. They'll do their best to provide that to you.
That's all we're going to ask for.
But don't take it from that those are bad outcomes. Those are overwhelmingly good outcomes.
What my office and I want to do is get the data to understand.
We'll do our best to provide what can be provided, Senator.
Your reports show the share of loans, quote, in advance / on schedule / 90-day plus arrears, end of quote. But you explicitly state you do not receive participants' current income or valuation data and rely on lender hardship programs. Why is Housing Australia not collecting borrower-level hardship outcomes?
Thank you, Senator. So the way that the scheme's designed, the relationship is between the borrower and the bank. We are providing a guarantee ultimately to the lender. So we, for a range of reasons, including for privacy reasons, we don't get updated information from the applicants. But I might just ask Ms Jarman, my colleague at the table at the end, who was responsible for the scheme,
Thank you.
if she wishes to add to that.
Yeah, Emma Jarman, Executive Leader, 5% Deposit Scheme. Further to that, we do get each month from the lenders the actual number of borrowers under the scheme who are in 90-day plus arrears or in hardship.
Okay, so you can then table or give me on notice the number of scheme participants flagged into hardship by panel lenders by state and lender? And
yes, I don't have the state breakdown here, but I do have the overall number, but we can take the state breakdown on notice.
Thank you. And the resolution pathway. I don't expect you to have the data here. Next one. How many scheme-backed loans have progressed from arrears to default and resulted in a Commonwealth guarantee call?
Ms Jarman?
Yeah, sure, I'm happy to take that. So 11 claims have been paid under the scheme since its start in 2020.
Could you please provide the number and value of claims against the guarantee by financial year, cohort in terms of which guaranteed scheme they are and geography?
Sure, we have that data.
Thank you. You previously told me that roughly 61.5% of scheme loans are ahead, 38.4% on time and 0.1% in 90-day or plus arrears at a point in time. Do you have an update on those figures?
We do. So as at the end of October, the in advance number is 75% of all loans. The on schedule is 23%, and then the arrears number is 0.6 and the hardship number is 0.8.
Thank you. What's the cohort composition behind those figures? Loan age, borrower, income band?
Oh, I don't have that breakdown in front of me.
Can we get that on notice?
Yes, we could provide some more further detail there.
Debt to income and loan to value at origination versus latest?
Just at an aggregate level, you mean?
I'd like to know per year.
Senator, you mean per year of origination of
yes.
the original loan? We'll do our best to provide what information we have on notice.
Without longitudinal borrower data, these metrics really are incomplete. So can you provide distribution tables for scheme borrowers by debt to income bands, loan to value ratio bands and income quartiles at origination and latest available?
We can take that on notice.
Thank you. The Reserve Bank finds highly leveraged borrowers are most likely to fall into arrears in the current environment. Of your 5% deposit borrowers, how many are in the bottom income quartile? Because that's the one that the RBA refers to as going backwards.
Senator, I'm sure Housing Australia will do their best to find that judgment, but my understanding is that the arrears rate for loans under this scheme is lower than the arrears rates in the market as a whole.
Let's see that.
Colleagues may wish to... Sorry?
Let's see that.
So colleagues may wish to to correct that if it's wrong. But
no, that's correct. So when we speak with our panel lenders, the feedback that they provide is that the cohort of borrowers under the scheme, the arrears performance is equivalent, if not favourable, to their other borrower cohorts.
Okay, we'd like to see that in the data.
Yeah, well, we'll certainly provide that, but that's the evidence that's been given time after time on this question, and it fits with our experience. Working people are very disciplined about meeting their mortgage commitments.
They certainly are good values.
That's what's going on here. That is a very good story. 75%, an improvement on the last set of figures to 75% are ahead Australians as a result of this scheme. That's a very good outcome.
What proportion of arrears and defaults sits in the going backwards quartile?
Sorry, what do you mean by the going backwards quarter?
The bottom income quartile.
I don't have any arrears data broken down by kind of borrower cohort like that in front of me.
Senator, as an offer, if there's a range of these statistical matters that you're interested in, we'd be very happy to receive those and see what we can provide.
We'll put them in writing for you.
That would be much appreciated, Senator.
Have you run... Thank you. I'm just trying to rush for the chair.
You're at 8 minutes, Senator.
Sorry?
You're at 8 minutes.
Got 2 minutes to go. Have you run stress tests for the guarantee book to estimate how many will go from on time to arrears or default by quartile and debt to income or loan to value ratio bands?
Yes, Senator, every year.
Could we get that?
Yes, you can.
Thank you.
Yeah.
One last question, Chair. How many minutes have I got? One? Yep. Once a participant refinances or exits, does Housing Australia have any visibility of their subsequent hardship or default outcomes?
No, we don't.
How can Parliament be confident that public reporting is not undercounting stress by removing the most vulnerable borrowers from your data?
Well, what that means, Senator, you can't refinance if you're in hardship, right? Like, that's not a realistic thing to happen. If somebody can't meet their obligations, they won't get refinanced. 11 people haven't met their obligations out of the 250,000. If they purchase a new home, then they're not doing it under the scheme. They're doing it using the improved equity. I mean, people point to bad outcomes out of house prices going up, but there's good outcomes. House prices lift, they get increased equity, they get up the next step on the housing ladder, then they're out of the scheme. That's a good thing. Like there's no downside to either of those propositions. But we'll provide what we can. I understand the point that you're making.
Last one, so I can finish on time. Could you please provide counts on notice of scheme loans exited via refinance and any post-exit arrears or default?
We can provide the discharge reason, but I can't provide information once they've discharged. I don't have visibility of that from the lenders.
You can't get it from the lenders?
That's not our position to get that information.
Okay, thank you, and thank you, Chair.
Thank you, Senator Roberts. Senator Pocock.
Thank you. Back to the social accelerator, if you wouldn't mind. I wanted to go to the question of permanency of housing established through this $2 billion program. Do all of the homes, whether they're built, acquired or refurbished, remain as public housing in perpetuity?
Senator, that's a good question. My colleague may be able to assist with that. The housing procured through the Social Housing Accelerator program is both public and community housing, so it's not all public housing. But Ms Lenthal, what are the obligations on states for permanency? If we have that information, we may have to take that question on notice, Senator.
I'm just seeing if I have something.
I hear the top clock ticking in my head. If you can come back.
Why don't we come back to you on that question?
Yeah, if you're able to, I'd appreciate that, because it's absolutely critical for all the programs on housing construction, clearly. Houses that disappear from a stock of affordable housing within 12 years, 15 years, let alone disappear if they're public or community housing. I'm looking at page 7 of the ministerial submission. There's a table that shows that First Nations priority social housing at the 30th of June 2025 is 427 social houses built but none of them were in WA, SA, Northern Territory or ACT. You've already said that states are really in charge of what they're doing under this program. Does that mean you aren't requiring them to meet any First Nations requirements? You know, given our housing goals under Closing the Gap, that would surprise me. But is that the story?
So, Senator, the states under this particular program, the principal metric was providing funds to states to deliver social housing, and many of those states, not the ones that you mentioned, but New South Wales, Queensland and Victoria, have built an extensive numbers of, or are planning to build an extensive number of homes for First Nations people. But I'll hand over to Ms Lenthal as to whether or not there was a particular clause relating to First Nations in the agreement.
Thanks, Mr Dowie. I think that he's correct in that there was no particular need that they needed to. It's up to the states.
There is no targeting in this $2 billion program. Thank you. How are you going on that earlier number on perpetuity?
Still looking. Sorry.
Okay, no worries. Onward. I wanted to talk about wait lists. Part 1 of the OPD contains changes in social housing wait lists between June 2023 at the beginning of the accelerator and how they are in mid-year of this year. It appears like, to me from this data, social housing wait lists have increased for all jurisdictions over the 2 years of this program, with available data from what I can see, except for 2 jurisdictions, South Australia and Queensland, where there have been some quite complex removals of people from housing lists, and so I won't go to those 2, but there really is an alarming increase in the wait list in New South Wales, despite this program actually putting quite a bit of housing into New South Wales and refurbishing it in particular. So the New South Wales social housing wait lists over the last 2 years have increased by 10,000 households, despite them removing nearly 20,000 off the wait list and with nearly 3 times the amount of households added to the wait list. So 20,000 off, 45,000 in. So it is really frightening that we have this program in place, and yet in a place like New South Wales, massive increases in wait lists. Nearly 3 times as many households are added to the social housing wait list, that's 92,000, than were housed from social housing wait lists, with 35,000 over the 2 years to June 2025 for all jurisdictions, based on what I can see on the data. So we're not touching the sides here in terms of wait lists. And we've got a new report today on homelessness that I'll get to, but it is scary what is happening out there. People are struggling, and 40% of our homeless now are women fleeing violence. We're not generating the public housing we need. What do you say to the inability of this program and all else that we're doing to meet the nature of the crisis? It is not working.
Senator, I mean, the government currently has a program of building 55,000 social and affordable homes before mid-2029. That is, in the context of Australian government history, that is a very large number. You'd certainly have to go back to kind of 1980s, early 1990s to see numbers anywhere near that scale. In addition, states are investing heavily in social housing, but your underlying premise is that there's a lot of demand in the community for social housing, and we would have to agree with that. There is a lot of demand in the housing market in general, including at all income levels and in all price brackets, but in particular for social and affordable housing. It's impossible to argue against that.
Thank you. I want to go to another program, and I've got similar concerns here. This is now the retitled HAF Crisis and Transition Program, $1 billion negotiated with the Greens. It's $1 billion to go into crisis and transitional accommodation for particular cohorts. Housing Australia has drawn down the funds middle of last year, 2024, not yet authorised to allocate it, I understand it. Is there any allocation out of this bucket so far? I'm looking at your OPD response, which says on the 24th of November, quote, there has been no expenditure on the NHIF-CT program to date. That's 2 years in.
You go, Mr. Rimmer. So, Senator, I'm pleased to say there is an announcement that was made today by the Minister that the first projects under the now renamed HAF Crisis and Transitional Program have been approved. In fact, we've approved more than $100 million of grants under the program. The first projects approved will support the delivery of 19 projects, 7 of those for youth who are at risk of homelessness, and 12 projects for women and children escaping domestic violence.
How many projects did you say? 19?
19.
And how many people will they accommodate? Or households? Whatever you've got handy?
Yes. Sorry, I'll just see if I've got that detail for you, Senator.
Why has this taken 2 years to get underway? I am really concerned, given, you know, 70% of people out there on the streets looking for a home are kids or women.
So, Senator, we launched that program earlier this year. So from the time that the government gave us the mandate, we've worked with states and territories. One of the really important design features of this program is that the bricks and mortar that we can fund need to be supported by appropriate services.
Wraparound services.
I can say from having worked in the sector previously that without the right support services, these projects wouldn't succeed. So we worked with states and territories to put in place a statement of priorities and then an assurance process that helps us to understand how it'll exist within the service system that the states are stewards of. We've worked very closely with them through the course of this year. There are a large number of expressions of interest in projects now on foot, and we are approving a number of projects almost every week now that we're starting to see flow through.
This is good, but it's just taken a very long time. I think you'd have to agree, 2 years. I'm not saying you have had 2 years, but the government has had 2 years since this money was allocated. I understand that the eligible projects to which funds may be reallocated after the 5th of January next year need not be crisis and transitional accommodation or even social housing. Instead, the, quote, eligible projects include new housing projects that may be new social or affordable housing, and housing enabling infrastructure for new housing, which may include but not be limited to enabling infrastructure. So is this correct, that this money can be used for other purposes than crisis and emergency housing?
Senator, I'm at 9 minutes.
Yep.
I think that I will take on notice to double check, but that is not my understanding.
Okay.
And there is an allocation that was done across states and territories that restricted the use of funds until I think it is January next year within the jurisdiction. So there was a jurisdictional carve-up of the funding that reserved that funding within each jurisdiction. The intent was that if projects hadn't been approved by that time, then it could be used in different jurisdictions. But we are working collaboratively with states and territories. We want to see projects because, sadly, as you point out, there is need almost in every jurisdiction across every part of most jurisdictions.
So just to be really clear, I'm looking for a guarantee that any reallocation of funds out of this fund, $1 billion fund, are to crisis and transitional accommodation or to social housing specifically, not for other lower priority purposes like new housing, enabling infrastructure or affordable housing. So I look forward to that on notice. Thank you.
Senator,
Senator, I'm advised, and we'll come back to you with the right names, the right programs, that all of that $1 billion must be invested in crisis and transitional housing. There is a similar program that sounds similar, so we'll just get that for you as soon as we can.
Plenty of hazards as you take off your L plates in this terrain. Thank you.
I think your L plates are well and truly off, Senator Pocock, but it's very easy to get in. There's so many programs with similar names.
Okay, we're going to go to Senator Bragg just to let everybody know, and those who might be following at home, that we are going to press on and finish with housing before the lunch break. So we've got a few more senators have questions. If we can be as efficient as we can, we'll get there as soon as possible. Senator Bragg, you're up next.
Just fly through a few things. So there was an article in the paper about the Minister Claire O'Neil reading the so-called RIDE Act of the Housing Australia Board. What happened?
I wasn't on the board at the time of that article, Senator, so I wasn't present in the meeting.
Were you at the meeting?
So, Senator, I'm aware of the media reporting. It referenced a meeting that I think was a couple of weeks after I had joined the organisation. My recollection is that the Minister attended. It was one of her first attendances at the Housing Australia Board. She made clear her priorities. It was a constructive discussion, and that's my recollection.
Doesn't sound like reading the Right Act then, does it?
Well, reading the Right Act's a pejorative expression, Senator. What you can expect is that ministers in this government, where they've got organisations that have got a responsibility, are very clear with them about our expectations.
That's good, okay.
And that's not an unconstructive thing to do, to have that engagement with the boards that you've got responsibility for.
That's right. So she wasn't angry or raised her voice or anything like that?
Senator, my recollection is the Minister made clear her priorities. She has a style about giving absolute clarity of what she expects of the agency, which is appreciated. And as a very new CEO at the time of the agency, it helped me to understand where the priorities lay in terms of working with the board to implement those priorities.
Okay, Mr Rimmer, you've been going to the board meetings now. How many board meetings have you been to?
I believe I've been to 3.
Okay. And what sort of things do you comment on in the board meetings?
As a general rule, I comment when asked to comment by the chair or the other members of the board.
You're not. Do you wait to be asked to speak, or do you just throw your opinions on the table whenever?
As a general rule, I wait to be asked to speak, Senator.
Okay. Do you comment on funding judgments?
No, Senator. I'm not there to to get into the details of the commercial assessments that the Housing Australia Board is making. I'm there to ensure alignment between the government's policy objectives and their expectations of Housing Australia as an agency and the work of Treasury with the work that's actually going on within Housing Australia as an agency. I'm not there to second guess whether one provider or another should win a contract.
Fine, I wouldn't think so. So, but it is unusual. So, do you go in there with a list of issues you want the board to consider?
I wouldn't describe that as being my approach. I mean, the board papers are made available to me, as other people would in a similar circumstance. I read the board papers. I think about issues that are of interest and concern to me, if any, in a very normal and appropriate way.
Okay. Have you raised at the board meeting your concerns or the government's concerns or the minister's concerns about the staff turnover?
I have not. And I just, at the risk of frustrating you, Senator, the organisation has changed significantly in the last 2 years. Another way of looking at staff turnover of 25% is that the average tenure of staff is 4 years. This is an organisation that's only been in existence for 7 years and the first 4 to 5 years of those 7 years were frankly in a completely different operating model. So I don't actually consider staff turnover of 25% in this context to be unreasonable.
Okay, but you've been appointed to this role so you work in the Treasury, right?
Yes, Senator.
Okay, and you've been appointed to a new role, which is called Director General of Housing.
Yes.
Okay, and how did this role come about? Were you approached by the minister or by a minister, or how did it come about that you ended up in this job? Did you apply for a job?
There was a normal APS SES recruitment process.
Okay, so you applied for the job?
Yes.
Okay. You saw it in the Fin Review?
I can't recall how I saw it, Senator.
Okay. But did you have any informal discussion with the minister before you were appointed?
No, Senator.
Okay. So who made your appointment then?
The Secretary to the Treasury.
But your appointment to the board as an observer was done by the minister?
Yes, Senator.
Okay, so how often do you talk to the minister about the issues at Housing Australia?
Well, I talked to the minister about the programs that Housing Australia is running and the governance and performance of Housing Australia. I'm tempted to say daily. It's probably a slight exaggeration to say daily, but certainly very frequently.
Okay. And do you have a personal phone number?
I do, Senator.
Okay, yeah. And do you meet with her at her electorate office?
I have yet to meet with the minister in her electorate office, although I expect that to happen at some point. I understand she works from that office from time to time.
Okay, good. Now, I want to just quickly fly through Help to Buy. So you said that's opening tomorrow, Mr Langford or Mr Tagney?
Yes, it is, Senator.
Opening tomorrow?
The program commences from tomorrow.
Now, how many banks will offer it?
So initially, Senator, there are two banks in the initial
CBA
stage.
and is it Bank Australia?
Bank Australia, yes, sorry.
Okay. And will you be offering it will you require them to offer it through their broker channels?
Well, Senator, the distribution of financial product, including their loans, is a choice for them.
Matter for them. Okay. Now, what about the application of the credit laws here? So effectively, the Commonwealth puts forward its 40%, and then you hope that it'll be returned in future. There's no further checking, is there, other than what the bank does?
So, Senator, we do not undertake a credit, or have no plans to undertake a credit assessment of the individual. And we are operating the program within the legislative framework that's been set for us.
Okay, so just flying along to the next thing, the taxpayer may be worried about that, but it's probably above your pay grade. I just want to ask you do you know about a thing called the Federal Safety Commission?
I think you're referring to the Office of Federal Safety Commission in relation to construction?
Yeah, you know about it, do you?
Yeah.
Yeah. So is it true that you have to be in the FSC to be a HAF builder?
Well, Senator, not as a blanket statement, no.
No. But is it a question you ask?
So, Senator, we are, like other federal agencies, required to administer programs in accordance with the law. The law requires that where we're providing funding over certain dollar figures, and I'm sorry, I just don't have a recollection of those off the top of my head, that where it's funding construction, that the builder is accredited under that scheme. So that's set out in federal legislation. The Office of the Federal Safety Commission provides guidance on their website to assist builders to navigate whether that is a requirement for projects they may be undertaking in relation to Housing Australia programs.
Senator, you're at 8 minutes.
Okay. Well, are you collecting... does it worry you that the CFMEU could be involved with these projects?
Well, Senator, that's not something I'm going to speculate on. I don't have knowledge of their involvement.
It's not something you're worried about?
Well, Senator, I expect that where we're funding projects, they will be built in accordance with the requirements of each state's building requirements and lawfully.
Okay. My two final questions are you collecting income decile information on people using the Home Guarantee Scheme?
Senator...
by that I mean the, whatever you call it now, 5% deposits.
Yeah, look, my colleague Ms Jarman's just come to the table, but...
Senator, yes, we do have information on individual borrower income. I don't have the decile breakdown in front of me, but we do have that.
You do have the income?
I think we undertook to come back on notice to Senator Roberts on exactly that question.
Okay. Because previously there was no... Sorry, there were income caps before, now there's none, so I imagine you're collecting that information. So
that's right.
You'll come back and provide that, will you?
We can provide that, yep.
Okay. Finally, I just want to check with whoever answers the corporate style questions. Do you know how much you paid Lander and Rogers in the last year?
Senator, we'll have to take that on notice. You can back across all matters they may be negotiable.
No one else here knows?
Sorry, Senator, we'll have to take that on notice.
Thanks a lot. You've been very generous.
Thank you, Senator Bragg. I'm now going to go to Senator Whitten.
Thank you, Chair. Housing Australia's 2025-2026 corporate plan stated structural issues such as planning delays, low construction productivity and skilled labour shortages are further limiting the sector's availability to respond to demand. I'd like to focus on the labour shortages, and can you elaborate on what specific trades, if you know, we are short on to be meeting the targets?
Senator, I think that may be a question best directed to my colleagues at Treasury but I think we have in mind, and some of it is anecdotal, that there are challenges, there are constraints on labour across a number of construction markets. So we know that it can be challenging to find a range of trades to the extent that I think some of us have occasionally thought we should go and get a trade and get on the tools.
So you don't collect any of that data?
We don't, because we're funding through eligible funding recipients, so we don't have access to the builders' records to tell us if there are particular shortages.
Do you talk to developers or people in the construction industry and they don't tell you that there's shortages in specific areas?
We have a lot of ongoing engagement across industry. I mean, Mr. Tangi is himself involved in the industry and may wish to comment, but I'd say it varies across different markets right around the country, and it will reflect the different drivers of different types of construction work underway.
Senator, if I may, there are a range of policy measures in place to try and expand access to skilled labour in the construction sector, including with our colleagues in the Department of Employment and Workplace Relations, and with the Build Skills, Jobs and Skills Council. In fact, I believe I'm meeting with them tomorrow, and working with the states on fee-free TAFE and related issues. And in recent times, there has been some evidence that the pressure on construction workforce has eased a little. It's still above pre-COVID levels in terms of challenges, but it has eased a little, which is good. I'm not sure, frankly, many builders or developers would be willing to say that it is easing for them, but overall the statistics that we have at a whole of economy level are that skills shortages in the construction sector are easing a little.
But they don't have they don't have a research capability that they engage to that. They are relying upon what other government agencies say and what developers say.
Yeah, look, I'm a tradie by background. I understand upward pressure means only one thing: I'm having a much better Christmas. So it does put upward pressure on pricing, because that's just the nature of the beast, supply and demand. If you're demanding more of me, I'm going to demand more of you. So we saw out of the ANU that only 12% of the skilled permanent visas were going to genuine offshore skilled workers. I've asked Home Affairs on notice for a further breakdown of how many tradies are coming in as part of that, but I have not as yet received a response. We keep hearing that we need to bring in more skilled trades, but it seems that we aren't targeting the construction sector well. Have you provided any advice to ministers around the high demand that has been driven by the mass immigration program, given how the low numbers of skilled labourers?
Well, the only thing that's imported there, Senator, is that phrase you just used. But this agency's job is to deliver housing, not to do analysis, and I don't think you get much joy there.
Okay. Just on the social and affordable housing, is all of this housing for Australian citizens?
Senator, the eligibility requirements for state social housing registers is a matter for them. As a general rule, it's primarily focused on Australian citizens and in some cases permanent residents. But I think further detail than that would be really something that is a matter for each state and territory.
Could you take on notice, please, of maybe a breakdown of Australian citizens to non-Australian citizens that are...
To the extent that we have that information, we're happy to take that on notice.
Thank you. Thank you, Chair.
Thank you, Senator Whitten. We'll go to Senator Payman now.
Thank you, Chair. We'll try to go through these questions as quickly as possible. I know everyone's wanting to get out for lunch. It was reported in November that Victoria was the only state on track to meet its national housing targets while also adopting the livable housing design standard. So I was wondering if you could provide the latest figures for each state and territory for houses built under the National Housing Accord, as well as affordable houses built under the National Housing Accord.
Senator, in relation to the second part of your question, the Commonwealth Government has a target of 55,000 homes, social and affordable homes, over the period until June 2029. In addition, the states and territories have committed to another 10,000 on top of that. Of the 55,000 that the Commonwealth has committed to, I think 5,500 are now complete, and approximately 24,000 are in planning and development. And the opening of HAF round 3 is another 21,000 of those homes, which takes us pretty close. I believe that takes us to about 50,000 of the 55,000 from the Commonwealth perspective. The state and territory 10,000 is a matter that they're responsible for. Mr. Dowie might be able to give you an update about how we're progressing against the 1.2 million accord target, which is, as you'll recall, is a target agreed to by all jurisdictions and industry and local government. It's sometimes reported as the Commonwealth Government's target, but it's actually a much broader commitment than that.
So just confirming, Senator Payment, you're after the number of homes that each state and territory have built in the first 12 months of the accord. Is that right?
Yes. So just the latest figures for houses and affordable houses. So just that there's the two separate categories I'm after.
So I know that the Australian Bureau of Statistics records how much each state has built. I just don't have those information at hand but I'm happy to provide those to you on notice.
Thank you. Can you also provide a breakdown of the latest projections for both the number of affordable homes and the number of just normal homes constructed in each state and territory as part of the National Housing Accord?
So I might draw attention to part of that I can answer here and part of it I'll need to take on notice, but in terms of the projections that each state and territory, in terms of their built, I'll draw you to some forecasts the National Housing Supply and Affordability Council has done. So in their State of the Housing System report for 2025, they have forecast that New South Wales will build 246,000 homes over the life of the accord period. That Victoria will build 300,000 homes, that Queensland will build 194,000 homes, that Western Australia will build 105,000, that South Australia will build 59,000, that Tasmania will build 13,000, the Australian Capital Territory will build 16,000, and the Northern Territory will build 4,000 homes.
Okay. But yeah, if you could do the breakdown and take it on notice, that's totally fine. Thank you. I was also curious to understand a breakdown of the difference between the current projections and the projections made at the announcement of the National Housing Accord. If you could point out any particular differences that you'd like to talk about now, or would you like to take that on notice?
So just to be clear, I understand your question. So when the accord was announced, there was an initial target of 1 million. It was then subsequently increased to 1.2 million. There weren't any forecast per se around that. It was just an aspirational target that people were working towards.
And when do you assess how well that's faring?
Oh, sure. So that the National Housing Supply and Affordability Council does do forecast each edition of their State of the Housing System report. And the figures that I quoted earlier were from their 2025 version of the report that I think was published in around May of this year. So the expectation is that the National Housing Supply and Affordability Council will update those forecasts when it publishes its 2026 report in probably around April or May of next year.
Okay. Is there any particular penalties that will apply to state and territories who fail to meet housing targets, given that the investment the Commonwealth has made in funding state and territory governments to build housing?
Absolutely, Senator. There is $3 billion on the table for states and territories who achieve the appropriate share of the National Housing Accord target. Our current estimation is that 3 states and territories will be eligible for funding under that arrangement. So there is a very clear financial incentive or conversely penalty depending on performance against the National Housing Accord.
What are those 3 states?
They're Victoria, WA and the ACT.
Okay. Is WA signed up to the Livable Housing Design Standard?
I'm not sure that officers at the table could answer that question, Senator. We're happy to take that on notice for you.
My understanding is that they haven't signed up, and I was just curious to understand what explanation the WA government may have given you.
I believe that all jurisdictions are required to follow Livable Design Standard Silver standard as of the 2022 Building National Construction Code. But instead of me just speculating at the table, why don't I take that on notice?
Thank you.
Or Beck can...
I can provide some information, Senator. Rebecca Wilson, Acting Assistant Secretary of the Housing Industry Capacity Branch. The 2022 edition of the National Construction Code included the livable housing provisions, which roughly matched to the Silver Standard. That was adopted on a varying timeline of states and territories. It's my understanding that WA has adopted livable housing, or will. They may be on a pathway still to adoption. I can take on notice their exact kind of date and timeline if that would be helpful.
Thank you, that would be very helpful. And just finally, what policy decisions have the Victorian government made that have caused it to outpace the other states and territories in meeting the NHA targets?
Senator, I think that's really asking for a little bit of opinion or speculation. I mean, the reality is states have different policy settings in relation to land release, in relation to long-term strategic planning, in relation to planning system performance and delays, in relation to investment in social and affordable housing, and all of those in relation to skills formation. To be honest, to the questions that were being asked earlier about construction skills, there are different performances between states on that as well. So if you take all of those things together, you get the eventual outcome for housing supply. And there's no doubt that Victoria is currently experiencing better outcomes on housing supply than other jurisdictions.
Yeah, I'm just curious to know what's leading them in actually,
It's a combination
faring so well in this out, and
it's a combination
getting good outcomes, because other states can actually learn, or senators from various states can actually lobby their state governments and make sure that they're, if we've got a gold standard, let's follow that standard, right?
Well, Senator, I mean, there is a lot of very good work going on in states and territories on housing supply. I think the Secretary gave evidence earlier today that she's rarely seen heads of treasuries as exercised on an issue as she did on housing supply at the recent meeting of heads of treasury. I don't believe I've verbaled my Secretary in that description. All jurisdictions are very focused on this. Queensland has a $2 billion fund, the name of it, which escapes me right now. New South Wales is doing planning reform. The WA government is pursuing a range of different initiatives, but the outcomes are the outcomes. So that's
absolutely. Thank you.
Senator, my apologies. I'd just like to correct my earlier evidence. WA has not committed to include the livable housing standard, as you noted. That was my mistake. It was a different jurisdiction.
No, that's okay. But if you could, on notice, let us know if there is a projected timeline of when they might sign up and what explanation they've given for not signing up just yet.
Of course. And would you like also the timeline of all the other jurisdictions' adoption of those provisions?
That would be great. Thank you.
Senator Payne, if I just might come back to answer the question you asked me about how many homes each jurisdiction have built. I've just got that information, which I'm happy to give that to you now. So in the first year of the CORD, New South Wales has built 42,581 homes. Victoria has built 55,764.
Sorry. And is this just homes or affordable homes?
Total homes.
Total homes. Would you be able to break that down? And I know the Chair would like to rotate the call. If you could provide it on notice and do the breakdown as affordable homes and normal homes. That will save us all a lot of time and get us out for lunch. Thank you. Thank you.
Thank you, Senator Payman. Senator Kovacic.
Thank you. I'd like to start by getting a better understanding of where the Safe Places Emergency Accommodation Program is up to in terms of delivery. Treasury's public material states that Safe Places is funding 40 projects to deliver 423 dwellings and approximately 890 new safe places nationally. Are you able to tell me, as of today, how many of the 423 dwellings have been completed, how many are under construction, and how many are yet to commence?
Senator, I might ask Ms Lansfield to... no, not Ms Lansfield. It's you, sorry.
It is
Nerida.
me. Sorry.
I apologise.
That's okay.
Dr Nerida Hunter, First Assistant Secretary, Homelessness and Housing Policy Division. So I can provide you with the information I have on safe places and take anything further on notice. So a total of 36 safe places projects, 34 from round 1 and 2 from round 2, or the special inclusion round, have commenced assisting women and children. These projects have delivered 195 dwellings, which equates to approximately 770 safe places.
So just to clarify that, the safe spaces are per individual. So if it's a mum and 3 children, that's 4 safe spaces. Is that how it's calculated? Or if you can provide that on notice.
Recall. So I think
because that was something that confused me as well. I couldn't work out how they don't correlate. So I was trying to work out.
I think we make an assumption, and I'll correct this on notice as needed, that 1 bedroom provides 2 safe places.
Right. Even if there's only 1 person in it?
So our assumption is that those places would be fully utilised. Yes.
Oh, right, but if it's just a single woman on her own in that 1 bedroom, you would still calculate 2 safe spaces even though there's 1 individual in it, because there's a potential for 2 people to be in it, because it could be a mum and her child. Is that what... Just so I have my understanding of how the methodology works.
So the methodology is 1 bedroom is 2 safe places.
Right.
I will take on notice the very specific example of, a single individual in a home and how we would count that. But the general principle is that 1 bedroom is providing 2 safe places.
Okay.
Currently, around 7,290 women and children experiencing family and domestic violence are being supported by Safe Places dwellings. And just to look further ahead, a further 3 projects are expected to be operational by 31 December 2025, and an additional 17 dwellings, providing 56 more safe places and assisting up to 300 women and children experiencing family and domestic violence will be available each year. The remaining 3 round 1 projects are scheduled to be delivered by mid-2026. Together, these projects have made significant progress and are meeting established deadlines.
Thank you. So you'll provide me the data on how many dwellings have been completed under construction and yet to commence, specifically on notice. And then my next set of questions, which may need to be on notice as well, of the dwellings delivered or underway, how many are new builds, how many are purchases of existing stock, and how many are renovations of existing properties. If you don't have that at hand, if you could provide that on notice. And my other question relates to the comment about 1 bedroom equaling 2 safe spaces. Is there ever more than like 2 people in a 1 bedroom? What if it's like 1 mum and 2 small children? Is that then 3 safe spaces? If I could get an understanding of the broader methodology, or if you could provide on notice, how that actually works and the different calculations that are provided, that would be really useful. Thank you.
Take that on notice, yeah.
So just want to confirm how many women and children are currently housed in safe places accommodation under this project. I think there was a figure of 7,290. Is that the current figure? Or is that the figure in total?
It's an each year figure.
That's an each year figure. I might need to just confirm that.
Sure, if you could do that on notice for me as well, that would be great. Could you tell me how are women and children prioritised for entry into safe places accommodation, and is there a nationally consistent prioritisation framework?
So the Commonwealth is funding the capital build of safe places, and those services are being operated outside Commonwealth frameworks.
I understand.
So we're not involved in the operational detail of those properties.
Does the Commonwealth have any expectations or requirements in relation to how that prioritisation works, or is the Commonwealth just providing the capital investment and leaving it to, let's say, the social housing providers or whoever it is to make a determination about how those places are allocated?
Senator, that will vary wildly between different jurisdictions. I mean, different. I have some understanding of how that would work in Victoria, but New South Wales is different, Queensland is different, different regions are different in different jurisdictions as well.
So the Commonwealth doesn't have any expectation or set any expectation in relation to consistent frameworks as a condition of the funding, as an example?
No, the Commonwealth's expectation is that these safe places are well integrated into each state's system. I think that's a fair way to describe it, and that's the way we ensure that they're going to deliver outcomes on the ground.
Right. So they would then, so effectively the state governments would only have oversight of their delivery of services and to ensure they're delivering the services appropriately, but the Commonwealth has no oversight, guidance, or doesn't have any criteria set in relation to that, is what I'm just trying to understand. So it's just you're just going, here's the money. Yep.
That's broadly correct, Senator. The Commonwealth is not providing operational funding through this program. I mean, the Commonwealth does support the homelessness system more generally through the national agreement, but through the states, and the states make the funding decisions as a general rule about operational funding on these matters and how the system is designed to work together. For example, in Victoria, in the context of Orange Door initiatives and other things, the kind of system reforms there.
And again, this may need to be on notice. What is the average and highest cost per emergency accommodation place funded under this program? Do you have that band?
In operational terms, or in
the capital cost? Yeah.
I do not have that. I'd need to look through sort of large numbers of spreadsheets.
Yeah. No, if you can provide that to me.
I can actually go back and just confirm the number of places supported. So for projects that are completed under Safe Places, as I said, there's 7,290 safe places
so that's
supported
the correct
per year.
number.
And when fully completed, Safe Places will support around 10,500 safe places.
Okay. At any one single time?
That's right.
Yeah. Okay, great.
And so the expectation is that families and women that are utilising these services will move on to more permanent housing solutions, and new families will utilise
transitional housing and onto permanent housing. Thank you. I'm trying to talk fast, I think you've noticed. Yes. Treasury's website states that the government is investing $175.1 million in safe places, including $75.1 million between 2021 and 2025-26. Grant Connect shows $95 million roughly awarded under grant GA 396135 between August 24 and September 27. Adding those figures up, is it correct that the total funding committed to safe places through to September 2027 is approximately that $170 to $175 million? And is Safe Places being funded beyond 30th of September 2027, or is it your understanding that the program will currently end at that point?
So in relation to the total funding commitment, so my understanding is that we have a small residual contingency, so I might need to take on notice the detail, but obviously, I think as we all know that when you construct a home, sometimes unexpected things happen, so we retain a small number of funds to support those projects. As to the future funding of that program, that would be a decision for government.
Sure. And just very quickly, if the Chair will indulge, I've noticed that the ANAO has flagged this program as a potential for a potential performance audit. Would you have any understanding of why that is the case, or has the ANAO communicated to you why it has flagged it for a potential audit?
I haven't had those discussions with the ANAO. I do know, and Ms. Rimmer might have further comments, but a number of programs and policies are flagged as potential audits, and some of them are audited and others remain on the program for some time. It is usually the case that when an audit is commissioned, that we would have engagement with the ANAO about the program at that time and how they intend to audit that program. At this stage, we've not had those conversations with the ANAO, or I have not yet.
And do you have any concerns about the program?
So, by and large, Safe Places is proceeding on track. The builds are largely on track. The delays are minor. So, government's expectations around timeframes and the number of safe places that are met are being delivered in that program. So, I'd say implementation is proceeding, as well as can be expected for a program such as this. And so, it's obviously a matter for the ANAO what they wish to look at.
And finally, I don't think I got an answer before. Do you expect the program to continue after 30 September 2027?
So the funding is terminating funding, which means that we are allocating all the funding we have available to build as many safe places or achieve as many safe places as we can. And it will be a decision for government whether there's a further allocation to the program.
Okay. But you have no information on that at this stage. As far as you're aware, it's ending on the 30th of September 2027?
Yeah, it's a decision for government.
Thank you. Thank you,
Thank
Chair.
you, Senator Pocock. David.
Can I just confirm how many homes are being delivered under the $2 billion Social Housing Accelerator program, both nationally and then in the ACT, please?
Sure, Senator. I'll just get those figures. So as of 30 June 2025, 1,057 homes have been completed under the Social Housing Accelerator program of the total number of expected dwellings of about 4,400. So there's another 1,666 that are in the commenced construction one way or another, and a remaining 1,528 that are committed but haven't yet commenced construction. But that data is now, 5 months old. So I would imagine that the numbers have gone up since that time, but that's the most recent data we have available.
And thank you. And of that 1057, how many in the ACT?
17.
And of the expected 4,400, how many in the ACT?
Somewhere around 60.
It's not a lot, is it?
Is that I'm trying to think of the population share of 4,400. Is that? I don't know, Senator.
Is it by population or by need?
So the way that the program works is that the funds were allocated to particular jurisdictions, and then jurisdictions took those funds and converted them into number of houses.
How much was offered to the ACT?
Senator, the ACT received $50 million.
50 million of the 2 billion.
Yep.
Okay. Which was a number above the population share. The three smallest jurisdictions were each given a minimum allocation of $50 million.
Okay, thank you. You mentioned in response to Senator Barbara Pocock's question that you've just signed off on the first tranche of projects under the recently renamed NIF, now HAF CI.
CT.
CT.
The Crisis and Transition. Love an acronym.
How many projects have been approved in the ACT?
Do we have... Sorry, Senator. Ms Harris will just come to the table. She's got the list of projects, I believe.
Right. Maybe while conscious of time, while we get those numbers, Senator Bragg was asking about Help to Buy only having 2 participating lenders, Bank Australia and CBA. Whereas I think the 5% deposit scheme, there are 38 lenders. And I'm just interested, why is that, and will that disadvantage borrowers under Help to Buy?
Thank you, Senator. So we're launching Help to Buy with 2 lenders. We are currently in the midst of an expression of interest to expand that panel. The decision was made to launch with 2 following an expression of interest process around who was ready and able to help us to implement. And we wanted to ensure that we built out the technology and interfaces appropriately. We anticipate expanding the number of lenders that will work with us on Help to Buy in the first half of 2026. We would suggest it will be a lower number than the number of lenders that participate in the 5% deposit scheme, on the basis that it's a much smaller program, so 10,000 places on a national basis. Then lenders have to make a commercial decision about willingness to participate.
Yeah, 95% mortgage is pretty profitable for banks, I imagine. Can I confirm that all buyers in all jurisdictions, including the ACT, will be able to participate in Help to Buy from tomorrow?
No, Senator. There are some jurisdictions. The ACT is able to participate from tomorrow.
The ACT is from tomorrow, but from memory, WA has legislation in Parliament, and Tasmania does not yet have legislation introduced into Parliament. So the Northern Territory, the ACT, Queensland, New South Wales, Victoria, South Australia are all starting tomorrow.
Okay. At Housing Australia, you're taking steps to reduce the 30 million you spend annually on contracts and consultants. It seems like an extraordinary amount of money.
Yes, so Senator, thanks for raising that. That number's been used previously, and we're not able to. I mean, I don't think that's the annual spend. I think that's a cumulative over a couple of years. But if we just talk about the principle, sorry, Senator.
Sorry, I'm just looking at your annual report.
Okay. Yeah. So sorry, I thought the reference was to 30 million.
We had a good look, and I'm pretty sure it's pretty close to 30 million.
Yeah, so I guess to address the principle, we are absolutely taking steps to ensure that we're building the core capability. Over the course of the 12 months, or just over 12 months I've been at the agency, we've been investing significantly into building a staff capability. It has been a tendency for the agency to use a lot of consulting support during the build of new programs, so large novel programs, so HAF Round 1 in particular. Had a lot of involvement from external support, and we've used consultancy support with the assist with the build of Help to Buy. But the intent is that we want to build a permanent capability within the public sector that supports programs of this nature, and so there's steps that we're taking. So with Round 3, for example, we will have a lower reliance on external support to enable us to deliver.
But what's going on in Housing Australia to spend tens of millions on consultants? Like, it's, you know, things like running processes where people put in submissions and you go, you know, you have a portal, etc. There's a bunch of departments who do that on a huge scale. And so, like, what is so unique to Housing Australia that you need to spend 30 mil on consultants?
So, Senator, a large part of that expenditure related to the establishment of and the running of the first round of the HAF.
Yeah, but that's exactly what I'm asking about.
Yeah, so it's a fair question. The HAF, though, I would put is a complex and novel program. Certainly it was in the establishment of the first round. It involves a range of different funding products and a range of different assessments that needed to be made. And it was at the first time that the Commonwealth was doing something of that nature at that scale. And so the organisation, and I'm speaking partly on the basis of information I've been given because I wasn't there when round 1 was designed, but made choices to access in a short space of time to establish the program capability that was available outside the agency, but didn't have the agency didn't have staff with the requisite skills and experience to build that from scratch.
Okay, thank you. I'm conscious of time, so I might come back to that. Is Housing Australia doing any work on what comes next after HAF Round 3?
Well, that'd be a matter for government, Senator.
But is Housing Australia doing any work on that, or are you waiting?
Well, Senator, what we're doing is ensuring that we've got capability to deliver the programs that...
I understand that, but are you doing any work on
Senator, it's not Housing Australia's role to do forward policy work. That's the role of, in this case, the Treasury, and providing advice to ministers about those matters.
Sure. I understand that, but I'm interested if Housing Australia have done any work on that.
Well, Senator, the work that we've done has been about how do we provide an efficient, effective capability so that different programs, like Help to Buy, can government, if they make a policy decision and instruct us, we can stand those programs up effectively.
Based on the applications you've received under HAF round 1 and round 2 and HAF round 3, do you believe that there is capacity to actually continue with this model and expand it?
In the broadest sense, right through the industry, absolutely. And in fact, my view and my experience prior to joining Housing Australia has been that where there is repeatable and scalable efforts, you start to build a system that can work to deliver much needed housing. And we've seen the community housing sector really step up. We've seen an increasing appetite from state and territory governments to work with Housing Australia, and then with the focus that colleagues in Treasury are bringing to this. We do think that there is a pathway, and certainly our focus will be to relentlessly execute round 3, because we will be supporting industry to deliver 40,000 homes by June 2029.
Thank you. And then on HAF round 2, do you know, out of the 5,001 dwellings in projects approved under HAF round 2, how many of those had been already proceeding under state and territory government self-funded programs, and then how many are sort of truly additional that wouldn't have happened without HAF round 2?
So, Senator, we went through a fairly rigorous process for states and territories to seek their assurances that these were additional, and we were provided information on each of them. We rejected some project applications in early discussions where we felt that there had already been a funding commitment made. One of the observations is that it's not uncommon for state agencies to have a forward pipeline of projects and for governments at state level and territory level to talk about those projects, but often there is not a funding commitment that's been made out of the state budget. So we are very focused on how we bring additionality into the pipeline, and one of the ways of doing that has been the partnering approach from round 2, and then subsequently a number of states and territories are taking up the nominated funding recipient pathway, which allows them to put the project to a community housing provider who will provide long-term stewardship of that.
Thank you. And in a similar vein, given we know that a lot of social housing that is built often comes at the expense of existing social housing, where there's a sort of knockdown rebuild or consolidation, where ACT government is selling off well-located social housing and then building out in the new suburbs. In HAF round 1 and 2, how many existing public housing dwellings will be lost as a result of the projects approved under HAF round 1 and 2? And what's the difference in terms of additionality?
Yes, Senator. Look, I understand your question, but I don't have that data.
Okay. Maybe just on notice.
I'll see if we can get that on notice. I'm not sure if we do have that data.
Thank you.
Senator, you asked a question about ACT and crisis and transitional earlier, but I believe
Ms.
Harris can answer.
You're over time. I'm just letting people know we're going to break at 2:30 because people haven't had a lunch break yet. So if you could wind up, that would be helpful, please.
2 quick questions.
Well, it's 2:29, so 2:30 is when we are stopping, and we'd come back after lunch for the rest of the housing questions.
Preeta Harris, Chief Investment Officer, Housing Australia. Of the 111 million approved to date, the ACT has received approximately 10% of that commitment under what is now called the HAF Crisis and Transitional. So $10.1 million across 21 dwellings contained within 3 projects.
Thank you very much.
It's 2:30. I'm going to suspend now for lunch. We will be back at 3:15. I know senators have more questions, so we will be back to finish that before we get to Productivity Commission. Thank you, everybody. Let's go back to Senator Pocock, who is just going to finish his block, which 3 questions. Thank you very much.
Thank you, Chair. I've got 3 final questions. What is Housing Australia's target for the duration of HAF round 3 funding bid assessments? So the time between the bid deadline and the announcement of provisionally approved bids, and how does that compare to HAF round 1?
Thank you, Senator. So we are introducing a multi-stage process. So one of the pieces of feedback from round 1 was about giving people clearer guidance and then giving a multi-stage process. So an initial expression of interest, and once that's received, we'll be aiming to process that within around 4 weeks, on the assumption that the information provided at the expression of interest is complete. We'll then give approved expression of interests a period of time to make a full application. We're intending to brief the market next week and in around the duration of that, but at this stage we're thinking that'll be around 8 weeks, so that they have up to 8 weeks to make the application. Some applicants may be ready to make it almost immediately. And then we are working just to finalise our assessment process at the moment in terms of the duration of the assessment of the application. It's likely that that will relate to what funding products they ask, but I think we're looking at around 8 weeks for the assessment of applications. In some cases it might be up to 12 weeks if they've asked for a number of different funding products. So in terms of the time that the application sits with us, we're looking at in total up to 3 to 4 months across the expression of interest and the application stage. By comparison, round 1, the applications were submitted in March. The preferred list was announced in September, so around 6 months. And then it was a longer period of negotiation of the funding contract. So the other thing we are seeking to do is to provide clear documentation and key terms to applicants, so that when we've made a funding decision, then we're readily able to enter into a funding agreement straight away.
Thank you. And for HAF round 3, are you taking on board some of the things we've learned from NRAS? The thing that I've heard is that NRAS properties that were with CHPs, they found a way to maintain them as affordable. In the private market, they've basically just gone back to full freight. And so I'm wondering if you're going to actually preference applications that make it clear that beyond the 25-year availability payment, this will actually be affordable or social in perpetuity.
So I might ask my colleague at Treasury to comment on the overall policy position, but in relation to the mandate and the funding products we're offering, we are weighting the funding products, particularly in some streams of round 3, to encourage community housing providers to have a solution that enables them to retain the value for the long term. And we've certainly learnt that good partnership with community housing providers and states and territories, and in round 3 also with First Nations organisations, and offering funding products that can support them to do that. It won't be, the mandate we have is for a 25-year period, but it's about the funding supports that we can provide that best enable that, and for community housing providers, as with, I understand some of the examples in NRAS, where they're able to layer other funding supports, be it from state and territory governments or the charitable sector and others.
Okay, thank you. And just noting from your annual report, the agency has pledged to commission evaluations of round 1 and 2 for completion during financial year 25-26. I'm interested, who will undertake these assessments, and will the evaluation reports be published?
Look, thank you, Senator. Look, they're matters that we're in discussion with Treasury in relation to, because there would need to be a need to jointly scope what elements, because some of the program design relates to activities undertaken by Treasury. So I don't have an answer for you at the moment, but I'm happy to share that once we've made a final decision.
Can you answer if they'll be published?
I don't think I'm in a position to, Senator, but I think the intent is to make information available about the effectiveness of the program. So because we haven't commissioned it and the board hasn't signed anything off, I can't give you an answer today.
I can add, Nerida Hunter from Treasury, that under the HAF Act there is a statutory review required of the housing outcomes achieved from the HAF before the end of next calendar year.
Chair, if I may just take the opportunity to correct the record on something, evidence I gave earlier. I said in relation to the Canary project that it was for First Nations families. I misrecalled that. It was actually a project I'm advised for women and children escaping domestic and family violence.
Okay. Senator Pocock. Thank you.
I just want to pick up on an issue that the other Senator Pocock raised around consultants. I'm looking at your annual report, and Senator Pocock used the $30 million figure. I'm looking at 2025 with external supplier expenses of $299,000, of which over $7 million is to consultants. The major consultant being a contract to EY, I understand, for $3.2 million. Is that right?
That sounds right to me, Senator. We'll ask Ms Braid to come to the table just while we're working through this, but yes, that sounds right to me.
And what did EY do?
So EY were engaged to assist with the design and the evaluation of round one of the HAF. Sorry, when I say evaluation, I mean evaluation of applications, not of the program.
Evaluation of applications. Now, I'm also looking at your annual report. You've got 160 odd ongoing employees, is that right?
Currently, we've got more than that, Senator. So since the annual report date, we continue to add additional staff because we're really focused on building core capability within the team.
Great. And you supplied, thank you, on notice some information about salary levels. And I was interested in the structure of your senior team. Of your 160 odd people, it looks to me like you have 35 people who are earning more than $300,000. Is that right? That would be 22% of your entire workforce.
Ms Braid can confirm that, but that sounds right to me, Senator.
Apologies, Senator. So the annual report figures show that we had 26 staff earning more than $300,000. $300,000 to $400,000, and then 8 additional staff earning above that.
Exactly. So 35 people are more than $300,000. That strikes me, and then you bring in EY to do all the very important critical tasks in a very highly paid workforce. I am taken aback by that, and it seems to me when I went back and looked at other annual reports of other departments, and there isn't a direct, you're not a department, I understand, but that is a very top-heavy pay structure, it seems to me. Do you want to make some comment on that?
Look, thank you, Senator, for the opportunity to comment. So a couple of key elements to this, and what I'd say is that the organisation is very much in transition, and I want to be upfront in saying that we are in a position at the moment where we're reviewing our approach to remuneration and the long-term staffing of the organisation. When I joined the agency in last year, the principal means of our remuneration framework relied on benchmarking against the FIRG, the Financial Industry Reference Group. And so a lot of the remuneration approach and the capability assessment had been based on the agency's history as NIFIC, as a specialist financing agency, so drawing skill sets principally out of the financial sector. I introduced late last year a hybrid structure, so that reflects some greater reference to the public sector benchmarking, and we've also been reflecting on the statement of expectations that we received from the Minister in the last couple of months, and seeking advice about the appropriateness of how we set ourselves up for the long term. A lot of the choices about staffing up have been responding to compressed timeframes and a need to build a staff structure quite quickly. So we've brought in more senior people with more experience as we've needed to build functions. As we begin to mature those functions, I think it'd be reasonable to expect that you will see a normalisation of the sort of shape of the organisation going forward. But that will take some time to implement. And certainly in relation to round one, that was commenced when there were a far fewer numbers of staff, and so there has been a transition and a handover as we've transitioned the arrangements where there was greater reliance on external so EY in particular, to staff then leading the process and being on the tools and doing all of the assessment work, particularly, for example, through round 2.
So EY are still offering you advice in that capability in round 3? Is that still part of their $3.2 million contract?
Not in relation to round 3, Senator.
So they're done? They're out of there?
They've finished in relation to that contract. We have recently run a tender for the provision of benchmark data, which is input data, and EY were part of a successful bid with MBM and I just can't recall the other, it might be Catality, and they'll be providing us some benchmark data, but that they're not undertaking what was called, I believe, commercial advisory role that they did in round 1.
And why can't you do that internally?
The benchmark data,
Yeah.
we simply don't have access to that data.
And how much is that contract for?
I don't have that on the... Ms Braid, do you know the value of that contract?
It's approximately $400,000.
And will you be placing all of your external contracts on a public display through the Commonwealth's contracting portals so that the public have a view about how our money's spent?
We're under an obligation to report on contracts above $100,000 in response to the Murray motion every, I think it's every financial year and every calendar year.
And where do you report?
On our website.
On your website.
Yeah.
How do you evaluate whether the public receive value for money for a $3.2 million contract?
So the upfront assessment, well, Ms Braid can talk through the procurement process that's currently in place. I can't talk to the procurement process that was run when EY were appointed. Unfortunately, that predates me.
No, but this is a major piece of work. How do you know you got value for money?
So, Senator, one of the proxies is the ability to convert the contracts in round 1. So EY, the support they provided through the procurement process has enabled us to contract 177 contracts from round 1. I think that's right, which is supporting in the order of 13,700 homes when we didn't have the ability to otherwise do that. I'm happy to take on notice how as we exit that contract, because it's being wound up, it was extended for time, not value, recently. As we wind that up, I'm happy to provide further detail of how we look at value for money.
And did EY transfer to you and your staff the skill set that they used and charged you a great deal of money to deploy into your agency so that you have those skills for that work into the ongoing profile of your organisation?
As a general comment, I would say yes, and it's been a key feature of our staff structure as we've started to build the capability to perform a number of the functions that they were otherwise performing at a time where the agency just simply didn't have staff, was building up its staff in response to the expanded mandate.
When I look at your external services, you employed or spent over $2 million on recruitment services in a staff of 160 people. That's a lot. What's going on there?
It's been, as you've noted, the increase in staffing levels, and so the ability to attract the people into the roles. We've needed to use a lot of external recruitment at a time when the jobs market has offered a whole range of talented people lots of different opportunities. So we have had a heavy reliance on external recruiters. We now have an internal HR function that is more fully established, and I expect that we will be able to continue to use that as the first port of call for more of our recruitment activities going forward.
And nearly $7 million on contract. What are the contractors doing?
So there'd be a range of contractors in that, some individuals and some teams that provided what we would call surge support or specialised support for different programs at points in time. So I could provide further information on some of those if that's of interest to you.
Thank you. I would like to know what's in that bucket. That would be helpful.
Senator, you're at 9 minutes.
Thank you. Your total operational budget, there was a little bit of clarification last time we met. Can you just give me the figure for 2025 on your operational budget?
Ms Braid, have you got that in front of you?
Yes, I do. Apologies.
Sorry.
Sorry, Senator.
The operating budget is 59.6 million for 24-25.
24-25. 59.6 million and spending 27 million on external suppliers just does not stack up for me. I'm sorry, and I look forward to meeting you again. And from what you've said about staffing, I've been a little coy about it, but I'm expecting you will have a more a distribution that's less top heavy in terms of salary levels. If I'm reading between the lines about what you said, is that what we're looking at?
Well, yeah, we are, Senator. It is going to take some time for us to do that, but you'll see meaningful progress. I mean, I'd also like to point out that the 27 million comprises all of our external spend, so it does include things like travel, it does include things like our insurances and a range of other categories, technology, for example.
They are very small spends relative to the ones at the top.
Technology Centre is 4.7 million.
Yeah, that's huge, it's true, yeah. And with 25% staff turnover, which is also, I must say, a real concern, then there are opportunities clearly to shift your salary profile. The question I noticed referred me to another document website for your chair's fee, but I understand the chair is paid $125,570 a year. Is that right?
It sounds right to me, Senator. The remuneration for the chair and the board members and my remuneration are all set by the Remuneration Tribunal,
Yeah,
so it's a matter of public record.
$62,000 for your board members.
Yep.
Thank you. Do you want me to stop there? I can keep going.
Well, you're at 11 minutes.
Okay. I need one more spot.
We need to move on from Housing Australia, so are we nearly...
Can I put a few things very quickly?
Please, as quick
earlier
as you
we
can.
spoke about the ongoing nature of housing, and we didn't come back with a stat for the social accelerator, so I'm waiting on that. If you would take it on notice.
So the social accelerator,
yes,
that's the Treasury
perpetuity.
That's on me, Senator, not on Mr. Langford.
Sorry,
but we'll take that on.
Take that on notice. And similarly, I asked last time about the HAF perpetuity, and we didn't get an answer back on that. So I'm very keen to hear the perpetuity within the HAF, what your goals are there by type of housing. Zooming through. Okay, yep, that's that one. I was in Newcastle on the weekend, and I understand that the City of Newcastle has not had any HAF funding. Is that correct?
Not to my knowledge, Senator, but I don't claim to have a comprehensive view of every HAF contract. So when you say the city, you mean
I
as
mean
an
the City of
applicant?
Newcastle, which is, I was meeting with three local councillors.
So within the regional area.
They're very keen to have some HAF. They haven't had any as yet. So I'm wondering what assessment and mechanisms you're using to make sure some of our regions who don't have a very large community housing infrastructure, and I know that HAF3 is looking at some very sizable grants. How are you going to make sure, with that shift to scale, which I understand, actually means we get some housing out to regions?
One thing I'd say is I know there's some great community housing providers in Newcastle, so I'd love to talk to you about if there's some stakeholders to connect there. But we, at the market briefing next week, we will talk about part of the stream design is encouraging packages that will address regional need, that they reflect the scale of projects and opportunities that may more readily be deployed in regional areas. We also expect that there will be a lot of opportunities because we're encouraging what we've called housing diversity, but a diversity of housing type. So we think that one of the ways to get people into homes quickly is to encourage a different ranges of builders to participate with community housing providers. So that might be detached housing or semi-detached housing, which will suit regional areas. So we're going to be working with a range of stakeholder groups, local governments and others to really encourage and promote the opportunity for applicants to come forward with proposals in round 3.
Nearly 2,000 people on the wait list in Newcastle City alone for social housing, so plenty of scope there. They raised with me an issue, and I want to make sure this isn't the way HAF funding is being used, about the transfer of land from one New South Wales department to another, which some HAF funding could be used to purchase land. Is that a practice which is permitted under HAF?
Senator, I'm not aware of states' arrangements at an interdepartmental level, at a state level. We provide, if it is a state-only project, then we provide an availability payment, so that wouldn't be an upfront contribution.
To land purchase. Thank you. Have you done any modelling, I'm back to Treasury, on how far short we are likely to fall from the $1.2 million homes target by 2029?
Senator, the National Housing Supply and Affordability Council has public information about that matter. The most recent public report was the State of the System report that was published from memory in May this year.
Okay.
Yeah.
Do you want to supply that to me on notice rather than walk me through what it says? Is that appropriate?
Sure.
That might save time. I know
it's on the website, but
thank you. I'm sorry, I did not realise that.
No, that's okay.
My last question. The government promised to release a national housing and homelessness plan. The people I consult, the experts in the field, tell me that this is a really critical linchpin for a proper response to the crisis we find ourselves in. It's some years since it was promised. When can we expect the plan to be released, Minister?
Well, you're right that it's been a big process. I think 1,700 participations in the consultations on the plan. The government's, of course, been using those consultations as it deliberates upon the policy measures that we're actually implementing. The release of the plan is a matter for the Minister, and if we've got anything to add on release dates, I'll come back to you.
Okay, thank you. Thanks so much. Thanks for your indulgence, Chair. And
okay, so we can
everyone.
release the Housing Australia and Housing Group people now. Thank you so much for your time.
Thank you.
We can, I think, go straight now to the... Oh, we did have the Productivity Commission on the screen. They appear to have disappeared. Hopefully we can get them back. Okay, here we go. Senator Smith. Oh, sorry, before I do that, I'm getting well ahead of myself. I'm really wanting to move this on. The committee welcomes representatives from the Productivity Commission. Would you like to make an opening statement? We can't hear you. Hello, we can hear you now, I think. Would you like to make an opening statement?
No opening statement, thank you.
Thank you very much. Let's go straight to Senator Smith.
Thank you. Good afternoon, and thank you very much for your participation. My brief line of questioning just goes to the Productivity Commission inquiry into GST distribution reforms. And just at a high level, just to be clear, will the PC conduct public hearings around the interim report that is expected by the 28th of August next year?
Yeah, Alex Robson, Deputy Chair of the Productivity Commission, Senator. Yes, we will conduct public hearings after the interim report has been released in accordance with the usual practice.
Great, thanks very much. Who are the actual Productivity Commission reviewers? Who will have responsibility? Who will put their name to the interim report and the final report? Or will it be a Productivity Commission report standing in the name of the chairman? You'll be familiar, Mr Robinson and others, that sometimes PC inquiries are allocated to specific PC commissioners.
That's right, Senator. Danielle Wood, Chair of the Productivity Commission. All the reports that we put out are under the auspices and are signed off by the Commission as a whole, but we typically have certain commissioners lead the work and handle the external facing pieces and provide sort of more active hands-on leadership with the team. In this particular case, the two commissioners are our Deputy Chair, Alex Robson, and our Commissioner, Angela Jackson.
Great, thank you very much. Will they be supported by any independent expert advisors?
We don't have an associate commissioner allocated to this inquiry. We don't have any sort of formal process at the moment, but certainly we're expecting the review will consult very widely, including with a range of different experts on topics around federalism and horizontal fiscal equalisation.
Great, thank you. An element of the review is, a critical element of the review is whether alternative arrangements would better achieve some or all of the outcomes that are contained in the 2018 legislation and the GST distribution system more generally. What expert advice or modelling will you have access to or will you seek to examine alternative arrangements?
Senator, we put out an issues paper canvassing the terms of reference and asking a range of questions. So we're expecting and hoping to get feedback on that issues paper and submissions to the inquiry and putting together our interim report. We're meeting with the state and territory treasurers, and so that's part of the process, but we will also consult more broadly than that.
It is free for the Productivity Commission to come up with its own ideas, though, isn't it? It's not constrained to just those ideas that are put forward through the submission process. Is that correct?
That's broadly correct, Senator, but we do take the submission process very seriously, and that is a very important part of that process. We make our own analysis and judgment on submissions and other evidence as we look at the inquiry going forward.
And just to confirm that submissions will be published shortly after they're received, subject to any, confidentiality requests, but subject to any sort of extraordinary sort of decision by the PC because the content might be offensive or inflammatory. Not that I expect this to be the case on a dry matter like GST distribution issues, but submissions will be, as a general rule, published on the PC website shortly after they're received. Is that correct?
That's the usual process, yes.
Thank you.
Can I just, the official who is speaking now, would you just mind putting your name on the record? Our eyes cannot see your name tags there, and just helpful for the Hansard, please.
Yeah, Alex Robson, Deputy Chair, Productivity Commission.
Thank you.
Okay. Mr Robinson, you just mentioned a moment ago that you were expecting to meet with state and territory treasurers soon. Did I hear that correctly?
Yes, Senator. So we have met already with Queensland, Tasmania, South Australia and Western Australia, and expect to talk to the other states and territories over the coming weeks.
And they were the treasurers themselves or officials from their treasuries?
Both.
Oh, Miss Rita Safiotti made herself available. Oh.
Yes, sorry, we've lost lighting here. Yes, we
Chris Bowen gets around, doesn't he? He really does get around. Oh, there we go.
We met with Western Australia yesterday.
Right.
He keeps the lights on.
Okay. How long did you meet with the West Australian Treasurer for?
The meeting as a whole lasted an hour or more.
That was obviously by Zoom or Teams video conferencing meeting?
No, I was there in person,
Oh,
Senator.
and you're back from Western Australia already?
Yes.
Oh, excellent. Was the WA Treasurer, Ms Safiotti, convincing? You don't have to answer that.
Yeah, okay.
That's right. Okay. Do you currently have a forward program of which interested stakeholders that you'll be meeting over the next, between now and the end of December, for example?
It's currently work in progress, I would say, Senator. We've completed the issues paper. The priority was talking to the state and territory treasurers, and then other meetings will occur as and when we arrange them.
Yeah. Has the government issued you with any advice or instructions to not make any changes that would make things worse for Western Australia?
We've got the terms of reference, Senator. That is our guidance for this inquiry.
Are you aware that the West Australian Cabinet Minister, Madeleine King, said on ABC Radio in recent times, I think just in the last 2 weeks, when asked about GST review and distribution, she said that there would be no changes that make anything worse off for Western Australia, I can assure you. Are you aware of that statement?
I haven't seen those comments, Senator. No.
What are the possible risks to Western Australia from the Productivity Commission review process?
Senator, it's hard for me to answer that question. Our review is focused on the terms of reference, which discusses a range of issues for the Commonwealth and all of the states and territories. If we get a submission, if and when we get a submission from Western Australia, we'll consider it along with other submissions.
The deadline for the final report is the 31st of December 2026. Is there a legislative requirement that, having received the report, the government has a certain time in which to respond to the report or to make the report public? I thought that there might have been some sort of legislative guidance about how final reports are treated by government.
That's right, Senator. So any inquiry report, which this one is, will need to be tabled within 25 parliamentary sitting days.
Okay.
Senator, you're at 9 minutes.
Great, thank you. Thank you very much for your evidence, and we wish you the greatest of success in delivering a fantastic WA GST outcome, or at least preserving the good one we've got at the moment.
Thanks very much, Senator Smith. Okay, the committee... Sorry, you do have questions for the PC, rightio. Senator Canavan.
Thank you, Chair. I won't be too long. I just wanted to ask some questions about the Productivity Commission submission to the National Electricity Market Wholesale Market Settings Review. In particular, can I take it from your submission, I've read it, and it seems to me that you're placing a higher priority on getting to net zero than delivering low electricity prices. Is that fair?
Senator Barry Sterling, Commissioner, I don't think, I think we would be interested in achieving all the goals that you want to set out in energy in some sort of optimised way. So I don't think that would be a characterisation.
I'm just saying, what's the binding constraint? Because right through this this submission, it takes as a given in fact, not only just the net zero target, but the state-based emissions targets as well. They have to be met, don't they, under your proposal, regardless of what the cost of them to meeting them is?
Senator, we are taking, as given the emissions policy context, there's various ways of meeting that. We're also taking it as important that reliability goals are met in the national electricity market.
Okay, so yep, reliability is important. I think we can all agree on that. But by taking net zero then as given and letting prices potentially go up and down to meet that, doesn't that necessarily mean you're prioritising net zero above achieving the lowest possible prices?
It's just not how I'd put it. We're taking the policy settings in the NEM as important ones to meet.
For you?
No,
Sorry.
just as it's in the National Electricity Law, some elements of that, where our submission was aimed at, what would be the best market arrangements that can meet that at lowest cost. That's sort of the framing that we've followed in our interim report on cheaper, cleaner energy, and and in that submission they'd have a similar framework.
But there's a submission into changing the national electricity law. In fact, you suggest it should be, so this ESEM, which I'll come to, should be a permanent change to the national electricity law. So I'm just wondering, why didn't you have a look at the overall objectives of the law and see if they're fit for purpose, especially given how terrible our energy competitiveness is right now?
So we were responding to the interim report that was there and that terms of reference as well.
Right. Is the relative price of energy in Australia compared to other countries a concern for the Productivity Commission?
We would want to see all of Australia's energy goals met at least cost.
Right. Okay, well, it's definitely, I don't know how you define least cost, but we now have some of the highest electricity prices, especially for industry in the developed world. It's causing massive heartache and harm, costing jobs. It's surprising that the submission doesn't focus a bit more on that. Especially given your role in productivity. Going to the specific change that you comment on, you hinted at, the so-called ESEM. I'm just trying to find what that, there's more acronyms in here than a dictionary. Electricity Services Entry Mechanism, this thing, the proposal. I think you're suggesting this should be open to gas as well as renewables, is that right?
The proposal, that's the proposal in the inquiry, the NEM inquiry, and we agree with that.
But only to gas peakers, is that correct?
That's the service, the service being procured, as I understand it, and remember we're not writing that inquiry, but the firming part of the ESEM is focused on achieving the reliability goals of the national electricity market, and including it includes gas as well as other technologies, and we agree with that.
But isn't the ESEM more about capacity necessarily than just firming alone? Firming's a component of that, but if in a particular model, so why wouldn't combined cycle gas be eligible as well? I mean, particularly given the relative cost. I'm sure you're aware that combined cycle gas is much, much cheaper on a LCOE basis at least.
Well, the ESEM has, again, this is another report that we're commenting on, but it has three components there. The bulk energy, I think, the other one's called shaping, and the final category is firming. And gas peaking is well suited for that latter category. It's according, my understanding of that report is consistent with the with the goals set out in the NEO and the emissions reduction goals. They're accepting zero emission.
So we come back to net zero issue
in the bulk energy part of it.
But just taking to the shaping thing then, so why shouldn't, if gas is okay for the firming, why wouldn't combined cycle gas be eligible for the other parts of the ESEM? Did you consider that, or I'm just trying to understand the logic for why some type of gas is good but other types of gas is bad?
Well, firming is the one that's likely to be competitive for. When you're looking at all the goals of the system, the shaping ones mainly to do with batteries through the day, shaping of the system for bulk energy. Consistent with those overall goals. Combined cycle wouldn't be consistent with both the cost and emissions reduction goals of the national electricity market.
Yeah, so we come back to this net zero binding constraint, which is then therefore by definition, as I said earlier, excluding cheaper forms of power. What about coal? So coal can't, well, you don't think coal should be able to compete in this? It's a reverse auction process, is my understanding, as proposed. Why not coal?
Again, we're taking the goals of that. Stepping back, we're supportive in a general sense of Australia's efforts to contribute to global climate arrangements, but for the purposes of this inquiry, that particular inquiry we think, we're happy with the fact that that's focusing on meeting all the goals of the NEM, and that, that would be inconsistent with that.
Senator, you're at 8 minutes.
Okay. So you haven't actually looked at the relative cost of coal? You've just dismissed it outright?
Oh, well, we're observing, like you, the views of other experts in this, and it's not the renewable and other packages along with gas looks like the lowest cost form of energy for the NEM.
Not according to CSIRO. Not right now. I mean, well, I don't want to, I've only got 2 minutes, so just unbelievable that you wouldn't, given how close it is, even if you agree the 2030 numbers, which are projections, it's very, very close between coal and renewables. So unbelievable we'd restrict them from a competitive tender process. I just wonder if you had a look at the Energy Security Board's report that was released in May 2022. That was a report authored by effectively the regulators, AER, EMO and AMC were on the board at the time. And they recommended a capacity mechanism, which is very similar to this ESIM. Effectively, the ESIM's an outgrowth of this recommendation. But they recommended a technologically neutral capacity mechanism. Indeed, they said the proposed capacity mechanism design will be technologically neutral. The ESB intends that all capacity types, for example, thermal, renewable storage, demand response, as well as both new and existing capacity, will be eligible to participate in the mechanism. I'm just trying to understand if the energy regulators could recommend a technologically neutral system with the same rules and constraints that you say are preventing you from making such a recommendation, why can't you? Wouldn't the Productivity Commission normally have always preferred to have a balanced playing field and not restrict through regulation certain types of production, because necessarily that has to mean that it can only be less efficient the fewer options you have to produce something?
Senator, we take into account all the goals of the energy system, and meeting emissions constraints is an important goal along with the others. And in that context, there's been a lot, there's been some changes since that ESB report. And so when we use the word technologically neutral, we're using it in the sense of technologically neutral ways of achieving the full set of energy and climate goals.
You're saying your recommendation excludes coal, excludes combined cycle gas, but you're describing as technologically neutral? I mean, are we speaking the same language? I mean, that's not technologically neutral. You are excluding certain types of power.
We're saying if you have a given emissions reduction constraint, you want to be technologically neutral.
But hang on, the energy regulators had the same constraint. They made this recommendation under the same rules. They were clearly, obviously, aware of the rules, given they're the regulators that actually are responsible for implementing them. And they came up with a recommendation that is more neutral, more expansive than the Productivity Commission. I just never thought I'd see the day that the Productivity Commission is recommending a more restrictive, more regulating approach than regulators.
No, in the context we're doing this report, where our work in this area, we're looking at the emissions reduction objectives and including that in a consideration of the policy suite you need. In that sense, we think you want to get the lowest cost way of meeting those constraints. You want to be technologically neutral with regard to those constraints, and that's been a change in
You're not
since
being
that period.
technologically neutral. You're not being technologically neutral.
The world's moved on, Senator.
It is. It moved on from net zero. That's for sure,
The
Minister.
world's
It
moved
sure
on.
has. Sure has. Bill Gates has moved on.
Australia's moved
US has
on.
moved
The
on.
world's moved on.
Canada's moved on. Canada's just signed a massive pipeline overnight. We are being left behind, and unfortunately, our economic agencies are not focused on our economy. It's very sad. Thank you, Chair.
Thank you. Senator Hume.
Thank you, Chair. I just have one question, which was about the PC's latest trade and assistance review, which was 23-24, so it's not that recent. But it stated, and I'm quoting here, industry policy initiatives come up with risks that require careful policy design and implementation. Crucially, the process for determining who gets assistance must be transparent and rigorous. Ms Wood, just reflecting on the recent spate of bailouts that the government has been involved with. I was wondering whether the Productivity Commission is monitoring these bailouts closely and whether they've sent up any red flags for you.
Thank you for the question, Senator. We're certainly aware of those bailouts. We anticipate that type of assistance we will document in our next trade and assistance review, and that's the purpose of those reviews, is to provide a snapshot at a point in time of different forms of assistance provided to industry. I don't have visibility on the process that went in behind those particular decisions.
Okay, well, we'll wait with bated breath. Thank you.
Thanks, Senator Hume. So the committee will now conclude its consideration of the Treasury portfolio for today. I thank the officers of the Treasury portfolio who've provided evidence. The committee will now commence with the Industry, Science and Resources portfolio. If those officers could please make their way to the table. Hopefully they're on their way. We'll kick off, I think. The committee welcomes the Department of Industry, Science and Resources, Corporate Enabling and Business Services. I remind senators and witnesses that the committee has set 11th of December 2025 as the date by which senators are to submit written questions on notice, and 29th of January 2026 as the date for the return of answers to questions taken on notice. The committee welcomes Senator the Honourable Tim Ayres in his capacities as Minister for Industry and Innovation and Minister for Science, and I welcome Ms Helen Wilson, Acting Secretary of the Department of Industry, Science and Resources. Ms Wilson, do you wish to make an opening statement?
No, thank you, Chair.
Thank you. The committee, we will go to questions now, and just to note for everyone, we will break at 5 p.m. for a 10-minute break. But I will throw to Senator Hume for the first set of questions.
Thank you, Chair. I first want to ask Ms Wilson, can I confirm that the department has received notice to identify efficiency dividends of up to 5%?
Yes.
Thank you. And was that letter, did you receive that from Minister Gallagher, from her office, or from the Finance Department?
Senator, any questions about the correspondence should be directed to PM&C and Finance.
Are you saying you won't tell me, or you can't tell me?
I think at this point it's better that questions regarding that correspondence should be directed to PM&C and Finance, but I can confirm we did receive the request.
Look, I just want to understand whether the letter was a direction from the Minister, was it a direction from another department, or was it a direction from the Minister's office? I don't think this is a particularly difficult question.
No, thank you, Senator. The government has asked all portfolios to review existing expenditure and consider what is still aligned with priorities and what can be reprioritised to meet future spending pressures.
Right. So when you say the government, was it from the Minister, was it from her office, or was it from the department?
I'm going to take that on notice, Senator. As I said, questions really should be directed to PM&C or Finance, but it's the government that has asked all portfolios to review their expenditure.
All right, if you would take that on notice, I would appreciate that, because I don't think this should be a particularly contentious issue and certainly not a good start.
Where the letter came from, is that right?
Yeah.
We'll see if we can come back to you later on about that.
Can I ask how this request will impact your department?
We're working that through, Senator, and look, consistent with the usual approach of expecting agencies to think about offsets for new expenditure, to think about the government's priorities. We're absolutely working that through in collaboration and consultation with our portfolio ministers.
Are you expecting ASL cuts, program cuts, or both?
We're still working that through, Minister, so as part of our just regular exercise to think about these things, about the government's priorities, we'll take that on notice.
Are there any specific divisions that were either targeted by the government or will be in the sights of the department, including the Resources and Strategy Group or Industry and Commercialisation?
So, Senator, we're going to continue to work that through. As I said, we have regular business planning processes where we talk to our heads of divisions, where we look at our programs, where we consider the priorities, we engage with staff. As we undertake that exercise, we'll consult with our ministers, and that process is still ongoing.
So the letter that was received didn't specify any particular areas that you should be targeting?
As I've said, we'll take on notice what the letter said and where it came from, but I do just want to assure you we are working all that through.
Do Geoscience and NOPSEMA have to adhere to this order?
How we're considering which areas, which of our portfolio agencies, we're absolutely still just working all that through.
So that's a yes or a no? They could be, is that what you're telling me?
Well, I think the Secretary's indicated, the Acting Secretary's indicated that the department has a regular assessment of the priority activities in the department. This process is not about a 5% target. It is about identifying activities that are higher priority and lower priority. This department does that in any case. It's what you would expect. A prudent approach from the departmental management. What that would reflect. And that'll feed into the normal processes of government and budget. It is an opportunity for the department leadership to have a look across the department and consider what they want to do more of and what they might want to do less of. But that's a pretty normal management function.
Miss Minister, have you provided any advice or communications about this order?
No, I haven't. I have, of course, talked to the Secretary about the normal process that the Department of Industry goes through in making an assessment on a regular basis, and that this process, the process that you're referring to, is really going to look a lot like that again.
What about Minister King? Has she provided any advice or communications about this order? Acting Secretary?
No, Senator. Again, as I said, we just continue, as the Minister's indicated, we have a very regular business planning process. We're working it all through, but we are doing that in consultation and collaboration with our ministers.
What period will this process take place? Is it the next 6 months? Is it a year?
We are going to come back as per the budget processes. So this will be considered
for the May budget
in a budget process.
Okay. And has the process commenced, or is the department still waiting for further guidance?
That is a matter, I think, best directed to the Department of Finance.
So Finance has indicated this position. As I've said to you, the department has a regular assessment of the priorities that will work its way through in the normal budget process in the lead up to May.
But with an additional 5%?
No, as I've indicated to you, there's a requirement for the department to make an assessment of the lowest priority activities. That does not mean that those activities aren't necessary or that they won't continue to be funded. What it does do is encourage some discipline in the process and some consistency. As you would expect, that kind of rigour is part of the normal function of the management of the department, and I'm completely unsurprised, I have to say, by the approach that they are taking on that, and it will feed into the normal budget processes.
So has the department commenced any hiring freezes or natural attrition processes?
As we go through our regular business planning processes, we do consider the current ASL, the ASL that we're allocated through the budget. That is just normally what we do. We've got a range of, we consider a range of things like natural attrition, but that is all just part of our regular business planning processes.
So is that a yes?
It's a no. The department is looking to what resources it can free up to invest in the things that the department's got as higher priorities.
Acting Secretary.
This is not a spending cut target or anything of that nature. It is a prioritisation exercise. The department would normally do it. This department would normally do it anyway. I haven't been engaged with other departments on these questions. I don't think it's unusual or controversial for governments to do that.
Deputy Chair, at 8 minutes.
The Acting Secretary, you confirmed that your department has received notice, that letter from, whether it be from the government. I asked you whether it came from Minister Gallagher, whether it came from her office, or whether it came from the Department of Finance. Do you know who it came from?
I'll take that on notice.
No,
Senator,
do you know? I mean, you must know whether who it came from. I mean, either you know or you don't know who it came from.
I don't have the letter in front of me. As I've said, I'll take it on notice. So in order to get you the most accurate answer, I wasn't acting secretary at the time the letter was received.
So again, I'm going to ask you the question one more time. You know that a letter exists. Do you know who it is from?
Senator, I don't, and I've said I'll take that on notice.
Right. If you don't know, that's fine. If you do know and you're not telling me, that is not an excuse to take it on notice.
No, I will endeavour to find out as soon as I can. I just don't have it in front of me, and in order to just give you the most accurate answer that I can, I'll take that on notice.
Okay, thank you.
Ms Wilson's been the acting secretary for just a few days, Senator.
Fair enough.
And,
I just wanted to know.
she won't have seen that. I'd be very surprised if she had the letter in front of her at all.
Okay. I have more questions for this group.
Okay, well, I might rotate to Senator Canavan and then...
Okay, thank you. Can I just on this issue, has Geoscience Australia and NOPSEMA received their own letters? Like, did they receive letters as well?
I'll take that on notice, Senator,
Okay.
but let me assure you that not just the department but our portfolio agencies regularly think about their business planning.
In regards to efficiency dividends more generally, would they typically only be applied to the unfunded appropriations parts of the department and or agencies?
Well, these are not efficiency dividends, Senator.
I wasn't asking about these ones. I just asked when efficiency dividends, I think there's a 1% efficiency dividend at the moment or some such. So when efficiency dividends are applied, would they normally apply to the whole expenses of the department or just the appropriated funding, the non-funded? Some parts of, I think both NOPSEMA and, or maybe Geoscience, I can't remember, get actually some funds from the private sector.
Senator, I'm just going to see if my Deputy Secretary, Neil Mason, can provide...
Neil Mason, Deputy Secretary, Enabling Business Services. I wouldn't want to generalise, but certainly government asked us to look at specific saving measures in the last budget around contractors, consultants, travel, and those things are focuses that we built into our internal budget and are working towards as part
Okay,
of
well,
the
let's get more particular. Is there a 1% efficiency dividend, or has there been one applied in the last budget round?
I'll just check whether we've got...
I thought there was something. Certainly in other departments there has been.
Just over the terms of government, Senator, you'll appreciate things change based on budget, so I don't want to speculate on...
Good afternoon, Senator. Leanne Yiannopoulos, the Chief Finance Officer, and I've got with me my colleague Joe Stone. So the efficiency dividends that are applied appear as part of the presentation of the appropriations given to portfolio entities, and those, I've got the numbers here, which I'm just trying to read. Those numbers appear in the budgeted year and then in the forward years as well.
Okay, so what proportion of the department's expenses are appropriated, including agencies?
What proportion of the...
Like the entire department's expenses in any one year?
Okay.
Let's take
the
this financial year. I don't mind though, if last financial year is easier. What proportion are appropriated and what proportion are funded, if you like?
So the total appropriation the department receives is to deliver the priorities that the department is delivering.
I'm talking
upon.
about agencies though as well. It's been a while since I was minister here, but doesn't NOPSEMA receive funding from industry for its?
Yeah.
So we wouldn't need to appropriate those amounts, would it? It'd only appropriate the elements that aren't funded. Is that right?
Yeah.
That's right. Okay. So that's what I'm asking. What parts, the whole kit and caboodle of your whole department, how much is appropriated and how much is funded?
Okay, we might actually have to. We might have to take that on notice
because but you know what I mean.
I do understand what you mean. You're asking the direct appropriation
now,
versus the cost recovered amount. Yes, we'll give you that detail. I don't have it in front of me. Sorry.
Okay, all right. What's the current ASL level?
The PBS ASL
for the
department.
Senator, is that the department?
Sorry,
you're asking the current department ASL number?
Yes. What does PPSA stand for?
The portfolio budget statement. So that
PBS.
So per the portfolio budget statement, the
okay.
ASL for the department is 3,323.
And that includes agencies?
That's just the department. So
that's just the department.
We can get
Do you have a figure for agencies as well?
Not in front of me.
Senator, if you're after the ASL allocation from budgets for the portfolio entities, that'll be in BP4. Budget paper 4
I know
spells
that.
out the
I
total.
just thought you guys would have the number as well.
Yeah. We'll just give it. It is actually published in the PBS as well. So my colleague will just get that and we'll give you that number as well.
All right. Okay. All right. Well, I'm happy to hand back to Senator Hume for now.
Thank you, Senator Hume.
Yes, thank you. I have just one quick question on corporate, which is about there was a government's target to create 1.2 million tech-related jobs by 2030, but the department's annual report shows that Australia's not on track to meet that target. That was an election commitment, so I suppose, Minister, I'm just asking whether that 2030 target, that election commitment, remains government policy?
Yeah, it was a target that the government and the last minister announced. It was supported by the Tech Council of Australia, and we are working hard to support the tech sector in that work.
Right, so it's a target that remains under you as Minister.
We want to see as much activity and investment in this sector as possible.
Agreed. Yes. So it's a target that remains under you as Minister?
Yeah.
Yes, thank you. Okay, I would like to move on to outcome 1, if that's okay, program 1.1.
Yes.
Are you happy for me to move on to that?
Yeah, let's welcome representatives from the Department of Industry and Science and Resources for Program 1.1, Growing Innovative and Competitive Businesses, Industries and Regions.
Hello. So at the last estimates, I asked about industry facilities that are at risk, and there was a question on notice, SI 225, where I asked how many industry facilities is the department aware of and tracking as of October 2025 that are A, at risk of entering a period of reduced operations, B, at risk of closure. And the department responded and said the department engages with at-risk facilities as necessary. The department does not maintain a list of all facilities in all industries at risk. In that answer, the department obviously has admitted that, of course, it does engage with at-risk facilities and that it is aware of at-risk facilities, but I'm interested to know why the department couldn't then provide me with that information that I asked for.
Senator Julia Pickworth, Deputy Secretary, Industry and Commercialisation Group. So we certainly do engage with companies and with jurisdictions around a range of pressures that companies are under. I think in that answer we were getting to we don't have a standing list that we maintain of facilities which we're engaging with. We certainly and I know we've answered other questions and subsequently provided information around points in time. We've provided briefing that have outlined facilities we're engaging with, and I think what we're getting at is that there's not a list of facilities that we are kind of keeping and maintaining, but we certainly are engaging with companies and jurisdictions around a range of facilities and pressures that they come to government and wish to engage with us on.
So there is a list that exists, though, and I know that the list exists because we got it via OPD in the end.
So Senator, the OPD, there was a briefing that was provided at a point in time where we put in there a list of the facilities at that point in time that we were engaging with. We don't, as a department, have a list of sort of that we maintain or that we're running of all of the, of the way you've characterised that around facilities that we're tracking, but we certainly do engage with companies and engage with jurisdictions as part of our work.
Right. So what are the facilities that you're engaging with?
So, Senator, I'll pass to my colleague, guys. There's certainly a series of facilities that we can go to, including the status of where we're up to in our engagements and negotiations, and so I'll pass to my colleague who'll run through some of them.
Thank you, Senator. Louise Talbot, Acting Head of Division. So in the Order for Production of Documents 207, there were 5 companies listed, and I'm happy to talk to those if you would like.
Yeah, how many companies?
5.
5. Yes, if you could speak to those, that would be terrific. Could you give me an indication if they're at risk of entering a period of reduced operations or expected risk of closure, and particularly if they're expected to close within the next 12 months, and how many jobs might be implicated in that?
Yeah, okay. So I'm happy to run through those and their status. So the first company on the list is Nearstar. That does cover 2 facilities. Their Port Pirie Multi-Metals smelter facility, and that employs approximately 1,050 people. That also includes Nearstar's Hobart facility, which is a zinc smelter, and that employs approximately 650 people. The government did announce, I don't have the date in front of me, a support package for the Nearstar facilities of $135 million. They are not at risk of, I can't remember your question, sorry, if you could just, at risk of, what was that, at risk of closure?
Reduced operations, closure, and particularly if they're expected to close any time in the next 12 months.
So no. The second company listed on that list is the Tomago Aluminium Smelter. That is located in Newcastle or the Hunter Valley, New South Wales. And that is obviously an aluminium smelter, and that employs approximately 1,200 people and is not currently at risk of closure that I'm aware of. The Glencore Mount Isa copper smelter is the next one on the list.
Sorry, so these are the 5 that you've already told me about, yes?
Yes.
Right, so I suppose I probably should have been a little clearer. Are there any additional ones to the 5 that you've spoken to?
And so just before we move to that, Senator, on Tomago, we're obviously in discussions and working with the company and with New South Wales around the smelter and its future operations. So just to
clarify, did I hear that Tomago is not at risk?
Yeah,
of closing?
so I'm just correcting that. That was a
right because
yeah. So
because I don't know if the workers.
So no. So sorry,
Okay.
that was a so correcting that.
Okay.
Tomago, we are in discussions with the company and with New South Wales, and obviously we're alive to the consultation, including with workers, that's been undertaken around the future of the operations there. So that was a misspeak.
Sorry.
Okay.
So sorry.
Senator.
That's all right. So the 5 that you'd given me there were NiStar, Glencore, Tomago, Bell Bay and Bell Bay Aluminium, is that right?
That's right.
Okay. So are there more than that? Are there more? Are there any addition into the ones that were contained in the order for production of documents that you gave me?
So, Senator, across the group, and in fact across the department, we engage with a range of companies on a range of issues and a range of pressures that they're experiencing. As I said before, there is not a list that we are running or maintaining of the companies that come and talk to us or raise concerns or engage in consultation and those sorts of things. So I'm not sure that I can. I'm not sure how best to kind of run through that, because the extent of engagement we have with companies at different points in their sort of growth and choices is extensive, and so there isn't a single list.
Right.
So the reason that there was a list produced was, of course, as part of briefing me upon my appointment. That's been the subject of the OPD. There is the normal work that this part of the department and the department more broadly engages with. So that is the reason for the difficulty in answering your question, because it's quite, it's the Department of Industry. There's a lot of industry to engage with. They are fully engaged with companies that have large problems and small ones. But that was the priority list of facilities where there were immediate challenges.
Whyalla?
The department is obviously deeply engaged with Whyalla. This OPD related to a particular attachment, and certainly it's not proposed or designed to have excluded Whyalla. It was around a particular a set of facilities that we included in this part of the briefing. I don't know off the top of my head where Whyalla would have been included in the briefing pack, but I can assure you that we remain deeply engaged on Whyalla.
I'm confident we spent a bit of time.
Was Port Pirie on the list? Or?
Just dealt with that, yes.
So NiStar was on there for both Hobart and Port Pirie.
One of the two NiStar facilities is Port Pirie.
Yep.
Can I ask, if you can't give me a list of the companies, and fair enough, okay, can you give me an indication of how many companies that you're engaging with, what regions are more at risk than any other regions, how many jobs might be involved in those companies?
So, Senator, I can certainly take on notice to try and get you a sort of a sense of the scan of the engagement that we have. Across the department, we do obviously engage with a range of sectors, with a range of companies, in a range of different locations. We work closely with our colleagues in the Net Zero Economy Authority. So I absolutely am happy to take on notice a sort of a way to scan that. We also engage deeply with companies on our Office of Supply Chain Resilience, and so we've got deep connections and deep analytical capability as well that is engaging extensively with companies across Australia.
Okay. All right. I want to ask again about another non-answer to a question on notice, which was S1226. I asked, what is the current quantum of funds overall being asked of by the Commonwealth that the department is aware of, by industry facilities and their owners seeking financial and other in-kind assistance. Now, I kind of think this is a pretty straightforward question, and not just a straightforward question, but one that is entirely appropriate for Senate estimates.
It's not possible for the department to... I mean, every firm in Australia who thinks that they should receive assistance from the government like that is, you know... Yeah. I mean, that's not a thing that would sensibly be kept track of. There are a range of, as you would imagine, commercial in confidence discussions that are undertaken from time to time. We have to account for those, but you know, I mean.
There's just too many, Senator Hugh.
Well,
it's not. It's just this government's destroying so many manufacturing jobs.
Well, I'm not a smart ass who uses blue collar workers for political props, right? And that's not me. That's not me. What we do is we do the work seriously and we don't crap on.
Let me just
do a question and answer in a civil manner.
I understand where you're coming from, Minister, but I'll try and make it a little bit more specific, and that will make it easier to answer in a fulsome manner. What's the current quantum of funds overall being asked by the Commonwealth, or from the Commonwealth, that the department is aware of by industry facilities and their owners seeking financial and other in-kind assistance from companies that are deemed at risk of closure or facing a period of reduced operations?
We'll take that on notice and see what we can sensibly come back to you with.
Yep. So that's just not just not broad brush everybody that comes to the government with a handout. Yeah.
I understand what you're driving at. It may still not be possible to give you a range on those questions because there is some commercial sensitivity to those questions.
I don't need the names of them.
I understand that, but just the kind of things that I and the department will be considering. We will understand our obligations here. We will take it on notice and see what we can come back to you with.
Okay. All right. I have some more questions.
I'll rotate the call and come back. Who are we going to? Senator McDonald.
Thank you very much, Chair. I've got some questions about Glencore and the Mount Isa smelter. Been publicly very supportive of the state and federal government partnering to provide that relief. I do want to ask you some specific questions, though, about the transformation study. It's my understanding that this study will be between the federal, state and the recipient, the proponent, to do. Oh, I should ask, is that correct?
I'll let the officials ask, of course. I anticipate it would be broader than that and engage some of the other industrial facilities that are related in that region, and some of the miners as well.
Good. So, Senator, the transformation study certainly will include the Commonwealth, Queensland, and Glencore. It is designed to look more broadly at the region and about the kind of opportunities and what's needed in that region for it to realise its potential and to grow. So it is designed to be broader than the three parties of the two governments and Glencore. It is alive to both the sort of what is needed to come into the smelter, but also the value chain further down through that entire region and across from there. So it's envisaged around really kind of providing the platform for that region to achieve the vision and the potential that everyone sees in that region.
Yes. So specifically, will there be a place at the table for the Mount Isa City Council, Townsville Enterprise Limited, as well as perhaps the Eva Copper Mine and those?
Yeah, I'm
seeking to understand specifically, not just we will consult, but what will be the structure?
So Senator, the transformation study is envisaged to be through 2026 and certainly kick off intensively through the start of 2026. My sense is that it is designed to meaningfully engage with parties who are vital to that region. We've certainly been in close engagement with the local council and others as part of this this body of work. I'll just check if my colleague wants to add. I think the thing that has been the focus for the period through the last sort of month or two has really been around the sort of the other aspects of the agreement, and that the design and kicking off in 2026 for the transformation study. We've started some of the groundwork, but we haven't yet worked that through to that level of specificity with Queensland Government and Glencore.
Yeah, so that's right, and we are turning to the scope of that transformation study now, and there will be more information about that likely early in 2026. But it is absolutely the case that it is broad, and will be covering engagement with the people that you have mentioned and organisations that you have mentioned very specifically.
So given that the state, the feds and the company are all given seats at the table, what I'm urging is that the Mount Isa City Council and Townsville Enterprises and probably MyTES be permanent seats at that table. It's too important for them just to get a 1 hour consultation meeting. This is incredibly important for the viability of the copper supply chain and the national interest for Northern Australia. And to your point, important, but I'm seeking to get assurance that those parties won't just get standard consultation.
Senator McDonald, of course, the officials are a bit reticent to, give you a list, because one of the things that's been really important to the success so far of this process has been in lockstep with the Queensland Government and with Glencore, and reaching specific agreement about things and then communicating them publicly. There's nothing that you've said on that isn't consistent with the discussions that I've had directly with colleagues in the Queensland Government, but it's a first quarter 2026 piece of work, and I do want to respect the process, but I've met with all of those people and organisations myself. I'll be up there again soon to do the same thing. I met with the Townsville Enterprise crowd just maybe a week ago.
Yeah.
Doesn't seem like very long ago, I can't remember. That's definitely an important part of the next phase of activity.
All right. Thank you. And I appreciate what you're saying about the process. I take that on board. I'm putting a pin in that for next time we meet. Can we get a copy of the heads of agreement on the transition study tabled?
Senator, I'd have to take that on notice, just around assurance of commercial confidentiality and those sorts of things, but I'm happy to take it on notice and see what we can.
This is the most important study of next year for this region, and I think the more transparency and the more engaged everybody is, the better outcome we'll all have. So
we'll see what we can do.
I think it's been very useful to this process having a pretty broad-ranging public discussion over the lead up to the agreement between the three parties that we're talking about, and it's encouraged a lot of interest in the facility, and that's been very helpful.
And I think, whilst this is a commercial discussion, it will also be important that there is a genuine discussion about government policy, regulatory settings, energy market and energy costs to secure the ongoing performance of the copper supply chain in the north. So thank you, Chair.
Can I just follow up on a couple of those, Chair? Just on Glencore, Minister, your media release on the 8th of October said that the package is contingent on two things: the transformation study that my colleagues mentioned, and other review points. Now, I asked in a quan what you meant by other review points. The response was that review points were annual, but it didn't really explain what review points were. So I'm wondering, can you tell us now what the review points are and what sort of the conditions that have to be in existence for those review points?
I think I don't have that note in front of me, but I think there were 250 questions on notice in the last ISA estimates.
That's true. 37 still outstanding.
We will 12,616 in total.
I'm very productive.
8,739 of them from you, Senator.
That's exactly right.
So,
Minister, if you're finding this job overwhelming, I know two very capable Labor colleagues that you could turn the reins over to. I'm sure they'd handle it.
There's no lack of depth in the Labor team, Senator. But that is an historic level of questions. We'll look at that question about how much we can say about the review points. It's consistent with the question that Senator McDonald was asking as well, because of course that's all contained within the agreement that she was referring to, and we'll come back in due course.
Okay, thank you. Could you also let me know whether the transformation study could conclude that further government investment is required?
We'll see what we can do.
That is, you'll see whether you can tell me that, or you will...
It's a bit... Yeah, I mean, it's not my habit to advertise the possibility of future government assistance. We are running a pretty disciplined show in here.
Right. I have some more questions about some other facilities. Specifically, I want to know, Liberty Bell Bay, I know that there's been some work done here. Has that now been abandoned? I get a sense that the Tasmanian government has approached you many times about this, Minister, and this is not something that you want to engage upon.
There's very regular discussions with the Government of Tasmania. This facility is owned by the Liberty GFG group. It has it has not been capitalised properly, and as far as I can, or colleagues in the department can work through, has had a significant amount of capital removed from it. We are watching the facility very carefully, and engaged with Tasmania about it. I'm not in a position to say very much more at this stage.
No, and that's fine. I understand you've said that you won't be discussing the findings of the assessment process because it would reveal cabinet deliberations, and I understand that entirely. Can you give us an indication, I suppose, more broadly than what you see as the future of this plant?
I really can only say what I've just said.
Okay. I have some questions on Tomago as well. It's a matter now of public record that Tomago in the Hunter is facing operational and financial challenges because of, amongst other things, particularly the renewable energies rollout. So I want to understand what specific aspects of the rollout and current renewable infrastructure does the department understand Tomago to be concerned about?
Well, the challenge for that facility is not the renewable rollout, it's that it hasn't happened as fast over the course of the last 15 years as is necessary, and that's very much the focus of discussions between the Commonwealth and the state and the owners of that facility.
So is there a quantifiable shortfall in energy that Tomago isn't receiving from renewables that it has to find through other means or generate through other means?
Yeah. I'm not inclined to offer up the nature of the discussions that are being undertaken at the moment. They are part of a process, and you know, I'm very happy to be accountable for all of that in due course. But we're, as has been canvassed, very engaged.
Okay. Okay. Is Snowy Hydro being used as the vehicle to deliver that support package to Tomago, which might see an underwriting of energy supply?
Just can't. I'm a chatty kind of character most of the time, but I'm reluctant to divulge the nature of what are commercially sensitive and sensitive for all sorts of other reasons engagements between us and New South Wales.
Okay. So Tomago has specifically said that it is unable to secure sufficient renewables contracts due to delays in the rollout.
Yes.
That's exactly what it said. So is Snowy Hydro expected to provide electricity to Tomago below market price, where taxpayers might cover the gap between the contract price and the cost of supply?
I really have to take it. The best I can do is take it on notice, but not make too many commitments beyond that, Senator.
Okay, a week ago, or just over a week ago, New South Wales Premier Chris Minns told the media that the federal government had various funds that could be tapped to help Tomago, to bail out Tomago. I wonder, has the New South Wales government made any formal requests of the Commonwealth for funding? And if so, for how much?
I just have to rely on my previous answer, I'm afraid. Yet we're in the mid-step on these processes. There's no guaranteed outcome here. We're very focused on the importance of this. If there's something that we can tell you, the reason I'm taking on notice is if there's something that we can tell you, then we will.
Has Tomago then advised the department as to when it might have to reduce operations or close operations?
Senator, where we are in discussions with Tomago and with the New South Wales government, and that's the extent of what I'm able to share today in terms of details around that. And as the Minister said, I'm happy to take on notice what further we can provide.
Okay. All right. So just to be very clear, the New South Wales government has made a request. It's just that you cannot tell me about that request.
A better way of describing it is that the two governments are in constant discussion about the shape of, with the owners, bilaterally and trilaterally, if that makes any sense, on all of these questions.
All right. Well, we'll keep asking the questions until we get an answer. I have some more questions, but they are... Sorry, go ahead.
That's okay. So just... Minister, you tweeted on the August 11th, 2021 that industry walking away from Morrison on climate and energy, good for jobs and industry, but no leadership or assistance from Morrison or Taylor. You linked to an article in the AFR in that tweet, which headlines saying Tomago aluminium to go green. And the article says the country's biggest electricity user, this was from the same date as your tweet, the country's biggest electricity user is aiming to switch to a predominantly renewable power supply in 2029 in a groundbreaking move that would dramatically reduce the carbon footprint of one of New South Wales's largest carbon emitters. How come you got it so wrong?
Well, got it dead right.
Well, that's not happening in 2029.
Got it dead right.
You got it dead right. The workers are facing a loss of their jobs. You got it right.
Rio has been the owner of that the largest owner of that facility has been very clear. Coal is too expensive. Coal is too expensive to... Don't interrupt me. Listen, if you want to pose about this, run around with, pretend, then go and pretend outside. But in here, you don't interrupt me. And what Rio, who are not a bunch of hippies, have made very clear is that coal-fired power is too unreliable and too expensive to sustain that facility. Now, no matter how much you posture about this, that is the reality. And every time you go and stand in front of some new wind development and say that it shouldn't happen, you are killing blue-collar jobs. Every time you campaign against solar or transmission, you are killing blue-collar jobs, and you ought to stop.
Minister, are the jobs at Tomago at risk or not?
We've just canvassed the fact that
are they at risk or not? Because from what you're saying there, you say you got everything right. You're a perfect minister.
I think we agreed that you weren't going to interrupt me.
Are the jobs at Tomago at risk or not?
We've just canvassed that facility.
You won't say it, will you? Because you don't have the guts.
No,
you don't have the guts to actually admit the risks that those workers face.
Do you know what
you're saying?
What I won't do is to
excuse me, Senator
is to have.
Minister, let's refrain from arguing. If you let the minister finish, and then if you want to,
if you want to continue these sort of grubby assertions,
answer from you, Minister, not trying to hide behind the shield of your public service.
What they've got from this government. Is a government that's got its sleeves rolled up working to secure the future of that facility.
Okay,
what they got with the last government was a government that planned for its closure. What they got with the electricity proposition that you took to the election was a requirement for its closure. And Rio itself, of course the facility is in very challenging circumstances. Of course they are considering the future of that facility. They've gone out and talked to workers about that. That is why a serious government doesn't posture, gets into the weeds of working through what it is that can be done to secure sufficient renewables for that facility.
A serious government wouldn't be blaming others. A serious government would not, every time I'm asked for I'm like maybe 5 seconds into it, Deb. So, mate, I will get to a question. But I think after 5 seconds, that's not exactly a reasonable point of order. A serious government, as I was saying, would not seek to blame others. They'd seek to find solutions. But right now, you can't even admit that you did get anything wrong. So it's hard to know how you'll get a solution when you seem to simply be doubling down on failure. That article I quoted from said that renewable, and I quote, renewable energy sources, say firmed renewable power is available at around $70 per megawatt hour. Is that right? Have we got firm renewable power at $70 a megawatt hour? I mean, I'm happy for officials. I mean, presumably you're looking at this at the moment.
Well, we're not looking at the article that you're quoting from 2021.
I'm just asking for a factual answer on the price of firm renewable power right now. Presumably is a key consideration in regards to the future of Tomago. And I presume
Senator, I think what we'd say,
getting anywhere close to $70 a megawatt hour for firm
I think, Senator, what we'd say is that we are engaged in discussions about all of these questions.
Can I just? I asked a question. If there's somehow, I'm not sure how there'd be a public interest immunity on that. Are you seeing offers of $70 a megawatt hour for firm renewable power?
Well, I'm answering, and the answer is we're engaged in discussions about all of these things, including the price for electricity for that facility.
Oh, that must be a no. In that article, Mr. Howell, who was then the CEO of Tomago, said that price, the $70 a megawatt hour, that price, and I quote, would put us out of business. What is the sort of price here now that Rio needs to keep this facility open in terms of electricity? Well,
it's pretty consistent with what you said in 2021. In 2021, you said electricity prices for manufacturing businesses in Australia have gone up 91% over the past decade.
And
more worryingly, the last decade has been the first decade on record where our manufacturing output has fallen.
Yeah.
So we produced fewer manufactured goods in 2020 than we did in 2010.
Am I wrong? Was I right?
Well, you were right then. The difference is you've got a government that's working on it.
Thank you for saying I'm
right.
Got
a government that's working on it.
Just going to your government's performance then, if we go to the ABS statistics, for total manufacturing employed. So in August 2025, 860,000 Australians employed in seasonally adjusted series. Just before we signed up to net zero in August 2021, there were 967,000 people employed. Why have we lost 107,000 manufacturing jobs since we signed up to net zero?
Well, one of the reasons, Senator, is that over the course of the last decade, under the previous government, 24 out of Australia's 28 coal-fired power stations announced their closure. And the only effort to open another coal-fired power station under that government was the sort of boondoggle that you engaged in Collinsville.
Before we get to the rhetoric,
nothing was built. Nothing was built. And a decade of disinvestment and delinquency has created some challenges. Of course it has.
I've been pretty upfront with some of the things that went wrong about that. It's just you can't seem to admit errors. I can admit mistakes, absolutely. So I've made mistakes and I'll do that. I'll embarrass myself by those omissions before I will sell out people's jobs like yourself. So I'm just trying to establish the facts here. Have we lost 100,000, just over 100,000 manufacturing jobs since we signed up to net zero? Presumably you track this, being responsible for manufacturing. Can I just...
Yeah, Senator, can we take that on notice? I don't have that Australian Bureau of Statistics publication in front of me.
You're responsible for manufacturing, right?
I will get that publication, and we will come back to you as soon as we can.
Hang on.
Senator, we've got, you're at 8 minutes, and we're going to break it at 5 o'clock in 2 minutes, just letting you know.
I'm just trying to say that this is the part of the government responsible for manufacturing. Is that correct? Is it?
Yes, Senator.
Okay.
Do
you keep an eye on... Sorry, you finished.
We do, and we've got a range of areas of the department that work, including from an analytics perspective, closely with ABS about their reports and the trends out of their data. We absolutely
keep an eye on it. I mean, we'd had such a dramatic fall. As I said, in August 2021. We had 967,000 employed in manufacturing. Today, 860.
Yeah, there are 7,500 more manufacturing businesses now than in 2020.
Do you care about the workers or business?
Well, it turns out, all of it.
Those businesses are.
Of course,
they could be.
Of course,
they're probably They're probably illicit cigarette tobacco manufacturers. So. What's the just trying? My question's about workers. My question's about workers.
Yeah,
are there 100,000 fewer manufacturing jobs in this country since we signed up to net zero?
Well,
you do track the data.
It's got nothing to do. It's got nothing to do with net zero, Senator.
Okay.
It's got nothing to do with net zero.
Then we can have that argument.
Nothing at all. It does matter if you have a decade of dysfunction and delinquency, and it turns out that the kind of net zero fetishism that you and others have engaged in has consequences for ordinary people.
I think that's you guys.
When it takes hold of a government and wrecks a government and causes it to create disinvestment and sovereign risk, it has a consequence.
Okay, Senators and Minister, we're going to break now. Yes, we can come back, but we're going to break now for a short one, and we'll be back at 5:10. Thank you.
a question on notice that we got back on Tuesday, so I'm just responding to some of the answers in there. So help me help you on these ones. The question time brief that was released, Minister, under FOI laws said that you have responsibility under Future Made in Australia Act for the community benefit principles, the Future Made in Australia plans, and prescribing Future Made in Australia supports. Now, that responsibility applies to all schemes that rely on the Act, not just programs that are administered by DISA. Is that correct?
Yes.
Thank you. In the question on notice that I referred to earlier, the one we got back on Tuesday, it mentioned two programs that currently meet the definition of supports, and they're already named in the legislation. They're the FEMA Innovation Fund, which is administered by ARENA, and the Export Finance Australia, which is administered by GQ. Can you just confirm for me that no other supports have been prescribed under the Act?
Is that right? Yes.
Thank you. Have Future Made in Australia plans been developed for those two supports?
They are still the subject of design discussions and
yeah, exactly that.
Right.
I just wanted to check one detail. Yes, that's right.
Okay, so if Future Made in Australia plans are required to incorporate the community benefit principles, without plans in place, how have the community benefit principles been applied to the two designated supports?
We'll be out talking to industry and more broadly about the community benefit principles over the course of next year.
Over the course of when?
Next year.
Next year. Okay, so
That's right, isn't it? Yeah.
One of the community benefit principles is about promoting safe and secure and well-paid jobs and building skills. So for each of these two supports, how many direct jobs are expected to be created and how was that assessed?
Well, we want to make sure that where there's opportunities to promote local supply chains, for example, or local contractors, we can. We want to work through that.
I dropped my tag, Senator, so...
Oh, that's all right.
Sorry.
Go for it.
I apologise for that. Thank you.
That's all right. There's not a target number that's been set for that. We want to work with local communities and with industry to identify what's the smartest way of delivering the best outcome beyond the actual enterprise that's the subject of the support itself.
Right. Is that analysis that's undertaken by region?
The design is not an analysis process. It will be consulting with industry and local communities to try and work out what is the best way of framing those principles.
Okay. All right. So Future Made in Australia is obviously a $22.7 billion cross-government program. Can you please tell me all of the Future Made in Australia programs that DISA administers?
Yes, Senator, I can. Well, I will cover the industry and commercialisation aspects, but we'll defer to others if you want to go into detail on critical minerals and resources. So we lead on the design of specific Future Made in Australia components. So we've got batteries, green metals, and critical minerals in our department. So we have the battery breakthrough program. So we lead on the design of that. It is administered by ARENA. We have the Building Future Battery Capabilities Program.
Mm-hmm.
We have the Building Future Batteries Capabilities Program. There's two parts of that. There's the Powering Australia Industry Growth Centre training stream and the Future Batteries Industry Demonstrator stream. We have the Green Metals Innovation Network. We have the Green Aluminium Production Credit. We have the Green Iron Investment Fund. And we work closely with our colleagues in Department of Climate Change, Energy, Environment and Water on the Future Made in Australia Innovation Fund. We have lead on the green metals and clean energy manufacturing streams of those. And then in the department we also have the lead on the Critical Minerals National Productivity Initiative.
Okay. So in the question on notice that I got back on Tuesday, Part 10 says there are no programs or initiatives that have been prescribed as Future Made in Australia support, as a Future Made in Australia support, except for the two that we've already just spoken about. Is that correct? So none of the programs that you just referred to have future Made in Australia plans in place. Is that right?
Yeah, that is right, yes.
Okay. So why aren't any of the programs prescribed supports under the Future Made in Australia Act?
Can you just try that question again for me?
So why aren't any of those programs that are prescribed supports under the Future Made in Australia Act? It does seem to be inconsistent that the programs that are run by DISA are not programs prescribed that have the Future Made in Australia support. Is that right?
So a very large part of the program is tax credits that are administered by Treasury, and that would attract the community benefit principles and the plans. The programs that you've just been referred to are administered by DISA, so have a different shape.
Okay. So in response
and are on foot, are
Yes.
moving towards yep.
So in response to question 11, the department will commence a public consultation on the implementation of Future Made in Australia community benefit principles and Future Made in Australia plans shortly.
Yep.
That is exactly what you said also, Minister.
Yes.
Can you clarify exactly which ones you're currently consulting on and when you'll be in a position to make a determination if you will describe these as supports?
So, as the Minister outlined, we expect to commence public consultation on community benefit principles shortly. And then as part of that consultation process, it's envisaged, and part of the Act is that then the Minister would then consider a range of factors whether to designate an initiative as a Future Made in Australia support. So on the public consultation, we're expecting to commence that shortly.
Right, so all of the ones that you just listed are not a support.
So the designation the designation that's already been, like the ones that you've identified that have already been designated, and then the others are subject to Minister's decision as to whether they become designated under the Future Made in Australia legislative rules.
So that question on notice again shows that the consultation on implementing the community benefits principles and the Future Made in Australia plans has not yet occurred and rules have not yet been made. So why has the government only now just begun consultation nearly 18 months after Future Made in Australia funding was announced?
So Senator, there's been extensive work done, obviously, across the Commonwealth on Future Made in Australia, both the legislation and the pieces underneath it, and the timing of when that public consultation opens is a matter for government, and we do expect it to open shortly.
Well, that's what I want to understand. So, Minister, why wouldn't the consultation begin during the design phase, when you're developing the programs, rather than once the funding has already been announced, and in many cases the funding's already been spent?
We're just moving through the design and consultation in an orderly way. There is some of these arrangements are consistent with the announcement. Don't start immediately. There is some programs that have just been that you've been taken through have been recently announced and are moving ahead. We're just working through those in an orderly way.
But
Senator, if it's useful, my colleague can outline some of the consultation that's been done across a range of parts of the Commonwealth to inform the implementation and design of this work.
Well, that might be helpful, but first of all, I want to understand how you can have programs where money has come and gone, like it's gone out the door, and these are all under a Future Made in Australia heading, but there's no Future Made in Australia plan, there's no community benefit principles, there's no reporting as required under the Act, it's just money out the door, which doesn't seem to be consistent with the Future Made in Australia Act.
So, Senator, the elements and the components that run through, all of those obviously have their respective guidelines, and those guidelines were written and designed and informed by the Future Made in Australia framework. And as we've stepped through, there's sort of further steps to be taken around consultation on a couple of the elements, and also what becomes designated under the legislation.
Yeah.
So certainly in the design of those various components, they have been informed by the Future Made in Australia legislation and architecture.
So Section 10.1 of the Future Made in Australia Act requires that decision makers to have regard to community benefit principles when deciding whether support should be provided. So how did you meet this legal obligation if community benefit principles aren't yet prescribed, if there are no supports that have been designated, and no Future Made in Australia plans exist?
So, Senator, the guidelines for those programs that we ran through, those guidelines will underpin the decision making for those particular elements. So,
but some of them you've already made the decisions. The money's gone.
Well, there are programs like Solar Sunshot, which sits outside. It's part of the Future Made in Australia program. Sits in DQ. That is out there. It has a set of community benefit principles that apply to it. People who make applications, have to have regard to those. The legislative rules may later define some mandatory requirements within the programs that we have responsibility for, and we're working through those questions through next year.
All right, that's good. So I want to understand, consistent with your responsibility under the Act, are you monitoring what consultation on community benefit principles or Future Made in Australia plan development is being undertaken by other departments?
Yeah, we're very engaged, yep.
Yes, absolutely. You are? Yes. All right, terrific. So for each of the following initiatives, can you please advise on notice whether, 1, a community benefit plan was formally considered, 2, whether you're consulting on or whether they should be designated supports, and 3, when a decision will be made on the Solar Sunshot program that you mentioned, Minister, administered by ARENA, the hydrogen production tax incentive, the critical minerals production tax incentive, the Townsville Hydrogen Hub that's administered by DQ, and the Battery Breakthrough Initiative that is administered by ARENA.
We'll see what we can provide you on notice.
Yes, you can provide that on notice?
On notice. We'll see what we can provide you.
Yes, because obviously there are sort of legal obligations to have all those things, so that would be terrific. Should be public knowledge. Okay. Finally, just to clarify, the government's $600 million support package for Glencore's Mount Isa operations and the around, I think it is, $135 million support for NISTAR were not funded from Future Made in Australia envelope, were they? Were they?
Not from the original envelope, no.
Yeah, not from the original envelope, no.
Okay, thank you. And they certainly weren't designated as Future Made in Australia support. No. I'm getting yes, no.
So, in line with that question, I noticed the 2 that have been designated we've covered, and then the others have other elements that have not been designated. No, they have not.
So no,
they have not been designated.
All right. And the $2.4 billion Whyalla package, that isn't a Future Made in Australia support either?
So, Senator, there is an element of that sits into the Green Iron Investment Fund. So there's a link across there, but not the full Whyalla
And the Green
package.
Iron Investment Fund is a Future Made in Australia support?
So it is one of the elements that I ran through before in terms of it's part of the Future Made in Australia agenda, and one of the components is the Green Iron Investment Fund.
Okay.
Of which some of it is for Whyalla.
So I would have thought that if there was ever an opportunity for oversight of taxpayer funding, these bailouts would be the occasion to appropriately use the Future Made in Australia Act and its reporting requirements. There's $22.7 billion in this program. It's not small. But, Minister, you haven't designated a single support, you haven't issued a single plan, you haven't applied a single safeguard, that the Parliament required you to do. This is a Future Made in Australia that's running entirely outside of the Future Made in Australia Act.
Well, we've done everything here consistent with the obligations in the Act. The intervention in Whyalla that you referred to, and the packages that we've delivered in relation to Near Star and Glencore are decisions of government. What the official has indicated to you is right. Part of the Whyalla package is a portion of the Green Iron Investment Fund. That is part of the total of that package, but it is a decision of the South Australian and Commonwealth governments.
Okay, if anybody is to believe that Future Made in Australia is anything other than a slogan, we would hope that the legislation that was put forward, necessary or not, is at least adhered to as this money goes out the door. And it hasn't been.
It will be adhered to consistently.
In the future?
Has been and will be.
Has been? Can I hold you to that?
Has nothing happened inconsistent with the legislation?
Nothing happened consistent with the legislation either, as far as I can see.
Well, we're building these programs.
After the money's gone out the door, retrospectively.
Not sure what you mean.
Well, there are programs here that we've listed before where the opportunity to access money has opened and closed, and yet there haven't been community benefit principles and there haven't been Future Made in Australia plans that would allow them to be designated.
Senator, just to what I was covering before was around the community benefit principles have been referenced in the grant guidelines.
Aren't you still consulting on them though?
So across the suite of grants that I ran through, some of those guidelines are out, and so referenced in those grant guidelines, the community benefit principles. Therefore, because they're in the guidelines, they'll be referenced in the assessment of grants. And also, as the Minister said, those principles have informed all of our engagements and the government's agreements made since the Future Made in Australia legislation was passed. So the community benefit principles are embedded within those guidelines as well as in our dealings with proponents.
Okay. I'll leave it there. I have some more questions about the National Reconstruction Fund risk appetite, which falls here rather than when NRF are here. Are you happy for me to continue on, or do you want to switch the call?
Why don't we break it up a bit? So we've got Senator Pocock and then Canavan, and then we'll come back to you.
Thank you, Chair. Ms Wilson, I have some questions about the industry growth program, if that's all right. And looking at the portfolio budget statement, it says that to date you've approved 61 million in matched grant funding. Is that correct?
Senator, just while my colleagues come to the table, I might get you to repeat the question, if that's okay.
The industry growth program, looking at the portfolio budget statement, it says that you've approved $61 million in matched grant funding. Is that the correct total?
Senator David Shooter, Executive Director for Industry Growth. As of the 31st of October this year, 96 industry growth program grants worth a total of $142.3 million have been approved by the program delegate.
Great, thank you for that update. And can you tell me how much of that funding went to applicants from female-led businesses with female founders or female venture capitalists?
We might need to take that on notice.
Yes.
I don't think we've got that level of detail here with us.
Are you actively monitoring that?
Yes, we do monitor that. When companies apply for the industry growth program, initially for the advisory service, they provide details on their business, which includes demographics, and that includes whether the business is women-owned or whether the business is women-led, and we collect other demographics as well. And that is also carried over into the grant applications that take place once a business has been through the advisory service and if they choose to apply for a grant.
Okay. That's good to know. So you collect that data but are you sort of actively monitoring what the ratio is?
We have that information, and we can.
I know you have the information. I'm just wondering if you're sort of looking, it's 142 mil. Are you kind of looking and going, well, it's only a few million to female founders, or like what's? I appreciate you collecting the data and look forward to seeing it on notice. But I'm just wondering, is there some sort of process where you're keeping an eye on the ratio?
Senator Carl Chang, I'm the Head of Division for Commercialisation. So in terms of the question you asked earlier, out of the 96 grants that have been approved, 9 are from women-owned businesses, and we have 10 which are women-led.
Sure. Wow. Okay, so 9 out of 96 are women-led businesses. This is something that's been raised with me by a number of female founders, including some of the successful recipients of IGP funding. And there's also a concern that the matched funding structure of the IGP disadvantages female founders because VC companies are less inclined to lend to them. And so I'm wondering if this is something that you've considered in the development of this structure.
We don't. The program's been designed for companies to come through the advisory service first, and then they have the choice and the option to pursue a grant opportunity should they choose. There are no specific eligibility or preferential requirements for any particular demographic other than having an innovative product, process or service that will grow their business, to operate within one of the priority areas of the government and to meet the SME turnover threshold. And so there's no specific preference, if you like, that's called out for any other particular demographic. So we track that data, but it is based on the demand from the market and their journey through the industry growth program, as also whether they go for a grant or they seek other form of investment funding.
Sure.
And Senator, before you said women-led, so just to my colleague was saying, so women-owned was 9 and women-led was 10. So just to make sure that we're tracking both owned and owned and led.
Are those 9 part of the 10, or the 10 are additional to the 9?
I am presuming they are additive, so it's 9 plus 10. Is that right?
I think so, but we'll
okay, maybe on notice if you can clarify that.
Yes.
I guess one of the reasons raising this is I saw that Cut Through Ventures had some analysis, and they showed that women-led startup funding in Australia has hit a record low in 2025, with women-only teams raising less than 0.5% of capital in the second quarter. And in 2024, just 2% of all capital went to all women founding teams, down from 4% in 2023. And it's just sort of interested, that's sort of in the private venture capital space, but it sounds like in the government space it's maybe slightly better, but not far off.
And Senator, in the commercialisation division, we also have a team that does engage on venture capital and including venture capital kind of trends and things. So we're certainly happy to take on notice, not just from an industry growth program perspective, but broader elements within the commercialisation division around some of the trends and the other things that we have within that division that engage with those companies.
And when the IGP advisory team was being set up, was there any thought given to this? I note that there's 29 men and 11 women. I'm just wondering if that's something that you're working to address, given the government's gender equity targets.
The advisory process was done through 2 rounds of procurement, and so it was an open tender out for industry experts and people in the private sector to apply. There were a range of, qualifications and skill sets and capabilities that was sought after, predominantly around priority area experience to provide that level of expertise. There wasn't anything specifically called out for specific demographics. We have run so far 2 procurement rounds, and 2 tenders have been successfully concluded, the most recent of which saw an additional wave of advisors join in around about March earlier this year.
Sure. I'll take that as a no. Not not enough women applied, or there's not enough good women out there. Like it's a fairly skewed advisory team. I'm just wondering if you're looking at gender at all, given we know that this is a space where.
Senator, can I just jump here? Thanks, David. As the team looks at all the applications for the advisory services, there's a range of data that they do gather and they do analyse, and that goes to whether it's Indigenous owned, women owned, persons with disability, culturally and linguistically diverse. So as applicants come in to the advisory service, the team does analyse who those applications are coming from.
Senator, you're at 8 minutes.
Okay, thank you. I've got some questions about AI, but I'm not sure if that's this section or the next.
Program 1.2, Senator.
I will come back. Thank you very much. Thanks, Chair.
Thank you, Chair. Just going back to these jobs figures. Before the 2022 election, the Labor Party released a policy called Powering Australia. In that policy, they said, and I quote, that 306,000 jobs from increased trade and domestic benefits of low-cost renewable electricity production would be created. As I went through before, we've actually down 100,000 manufacturing jobs since net zero. Are we on track to create these 300,000 jobs from low-cost renewable energy?
Yep. It's a DQ program, Senator.
So, but this is in the manufacturing section. These jobs were meant to be from low-cost electricity production. Well, have we created them? If you're not tracking them?
Have you got questions about a DQ program?
Well, this is not a DQ program. This is a Labor Party policy to increase manufacturing jobs in Australia.
Program.
So you're the industry minister. Are you tracking the Labor Party's election commitments to create manufacturing jobs?
It's a government program.
You're not tracking it, and we're actually going backwards, not forwards. How many insolvencies of manufacturing businesses have we had in the past year? Earlier, the minister could tell me how many businesses were created. I presume we also have the figure for how many have gone out of business.
I think we do have that figure, Senator. They will just get the relevant official to the table for you.
So Kate Penny, Acting Head of Division, Analysis, Insights and Strategy Division. For the last financial year, the number of insolvencies in the manufacturing sector were 636.
636 went out of business. Okay. All right. Thank you. I'm going to try and whip through quickly. Did Glencore write to the Minister or the Department before the finalisation of the assistance package?
Senator, sorry, so your question was, did Glencore write?
Yeah, did they write a letter saying, hey, look, we've got some issues? I mean, obviously, publicly there was commentary about issues and there were, I think, some commentary from Glencore about the need for assistance, need for government assistance. I'm just wondering, did they formally write to the Minister or the Department about that issue? Or about any issues, to be honest?
There's certainly correspondence. I'd have to, whether it came to me or to the department.
Okay.
Same effect, really. There were multiple engagements with both Queensland and with Glencore over quite a sustained period of time.
Okay. Could we get a copy of any correspondence that Glencore sent to you this year?
We'll take it on notice.
Thank you.
With the
did Glencore in that letter or any other communication mention the costs of the safeguard mechanism to you?
Not that I recall, Senator, but we'll take it on notice.
Right. Have any other businesses mentioned the cost of the safeguard mechanism in regards to their ongoing viability?
To me,
yeah,
or to the department? To me, I can't recall. I mean, there's been a lot of backwards and forwards about the framework as I engage with businesses around the place, including the safeguards mechanism. It's in my experience, it is welcomed as a framework with some certainty. That's been my experience. If there's anything in correspondence that looks different to that, we'll let you know.
Have any businesses in the cement industry mentioned to you the risks, ongoing costs, of the safeguard mechanism and the impact on their business?
Well, I've been engaged directly with heavy industry for quite some time, and there are businesses that are anxious, of course, about energy costs. They have been for 20 years.
I'm trying to isolate the impact of the safeguard mechanism in particular. Has anyone in the cement industry raised with you, any businesses raised with you the costs of the safeguard
certainly
mechanism?
Discussed all of these questions in cement and more broadly.
Including the safeguard mechanism?
Yes, I think so.
As you'd probably be aware, the creation of carbon dioxide, or the liberation of carbon dioxide from the cement making manufacturing process, is an inherent part of it. There's nothing they can do otherwise. You can't make cement from lime without releasing carbon dioxide. The discussions I've had in that industry is it's a very big issue at the moment, particularly potentially post-2030. I know you haven't made a decision on that. But what is the status at the moment of the cement industry in Australia, in particular competition from Indonesian cement? I'm hearing a lot of Indonesian cement is coming into Australia and undercutting the sale of Australia, the market share of Australian-made cement products.
Hello, Senator. Tara Oliver, Head of Heavy Industry Division, and hello to all senators. If you just bear with me, I'll find my snapshot on cement. Okay, so one thing I would first say is that we engage regularly with all of the companies and facilities that are safeguard mechanism facilities. And of course, we've had conversations and consultations with the full range of subsectors under the Industrial Net Zero Sector Plan as part of developing that plan. We were aware that all subsectors have very different pathways to decarbonisation, some where there's ready technology available to deploy, and others where it's in the R&D and innovation phase. And certainly one thing I would say is that cement and concrete is an area where there is more challenges to abate emissions, and where there is active effort to invest in R&D and innovation. We do have some case studies in our Industrial Net Zero Sector Plan, and from memory, one of those is around cement and one of the big cement facilities, the investigations that they're doing. As far as any further detailed conversations, I'd probably have to take that on notice, Senator Canavan, particularly with regard to your question about Indonesia. That could certainly be something that my team would be aware. I might ask Leah Watchick if she has anything further to add, but we're very happy to take on notice and come back to you.
Okay. Yeah, happy to take on notice. I would just mention in regards to your question on safeguard, that the safeguard mechanism is under review next year, so in 26, 27 as well.
Yep.
But certainly as Tara Oliver mentioned, that it is one of those sectors that is a harder to abate sector. But we'll happy to take on notice, especially in terms of the
9 minutes.
Okay, I haven't. I don't pretend to have extensive contacts across the cement industry, but just even a few people I've spoken to anecdotally say, yes, there's enormous amounts of Indonesian cement products coming into the country, but you're not aware of...
Notice, Senator.
Okay, all right. It's just a bit of a concern. Regarding, I might just, with my limited time left, just finish on the safeguard mechanism. You'd mentioned that review ongoing. The government's announced a 67% cut by 2035. My estimates are that to go from 43 to 67, we'd need a decline rate of nearly 8% a year, up from 4.9, to proportionally reduce emissions in that sector to 67%, or to the 219 odd businesses. Is the department looking at that right now?
Senator,
Given
any questions relating to some of the modelling are best directed to Treasury.
But are you involved? Like, my question is, you, given your, just if I could just finish, my question is on the basis that you're looking after manufacturing. Hopefully you have a fair amount of knowledge and connections with the people who actually make this stuff, and hopefully that input would be part of any decision on decline rates post 2030. What is your involvement then with JQ in determining the future of the safeguard mechanism?
Of the safeguard mechanism for the review in 2026-27, we'll be actively, intensively engaged with that, because obviously it affects all of the industries for which we work with very closely and for which we want to succeed as part of the net zero transition. So particularly we put more effort in to those large industrial facilities and subsectors where we know that there is a lot of effort yet to be done to identify those technologies that are available.
Okay, all right. I might have some more too if there's time. Thanks, Chair.
Okay. Senator Hume. Thank you. I've just got some questions about the NRF, specifically about the investment mandate. There was reports on Monday, Minister, that you'd signed off on a new investment mandate for the NRF recently, or that you were going to. I'm just wondering if that's true. Have you provided the NRF with a refreshed IM?
Just want to make sure we're talking about the same thing. The government made an announcement some weeks ago in relation to the net zero plan that the $5 billion net zero fund within the National Reconstruction Fund. So a component of the $15 billion would be directed to supporting manufacturing with loans or equity on the same basis that the fund does now. There is a range of design questions that are decisions for government at the moment and are working their way through the normal processes.
Right. So does that mean that for that particular investment class or asset class, that it will have a different risk return profile to the original investment mandate?
Well, that's a design question that the government is working through at the moment.
Right. So that will require a change to the mandate, though?
Well, all I can say, it may do. It's subject to final design.
Right. And what is that design process? When will we expect it to be made into an instrument? Put it that way.
We will make decisions shortly.
Okay, that's pretty vague. Okay.
All I can say is it's, we've announced the headline amount. There are some design questions there. We've been out to industry to consult, including me directly on these questions, and we'll have more to say about it shortly.
Okay. So the previous rate of return was 2% to 3% above the 5-year government bond rate over the medium term. Will that need to be changed in order for this new investment mandate to be implemented?
I think it's the same answer that I just gave you, Senator. It's a question for government at this moment.
Okay.
I read the same article that you did.
Yep.
Of course, but I really can't add anything at this stage.
Okay. So the announcement's been made, it's been worked on, and you can't answer anything about it, but it's a decision for government. Is that what you're saying?
Yep.
Okay. Has the department provided any advice to the minister that taking on risky investments might decrease the overall rate of return?
Senator, we provide advice through to the minister and into government on NRF and design elements of that. It is a decision of government and is into government, and so I can't go into sort of specifics of what is included in that advice.
There seems to be a bit of a sort of black hole thing going on here. I asked Minister in a question on notice, a series of detailed questions about how the National Reconstruction Fund manages risk. The response I got was 4 sentences, and the NRF's risk appetite statement has still not been released publicly, and that's despite multiple requests from the opposition. So in the National Reconstruction Fund's answer, it was stated that the National Reconstruction Fund's mandate allows us to take additional risk in the case of emerging technologies, strategic interests and long-term payback periods. Now, noticing that you're now considering changing how the NRF considers risk in view of the answer that I just read out, which says that the current mandate does in fact allow already the NRF to take additional risk, why is the current mandate not fit for purpose?
Well, I issued a statement of expectation some months ago, I suppose it is now, that also gave my views about how aggressive and purpose-focused I wanted the fund to be, and their attitude to risk. They've replied in relation to those issues. There is a design process that, as you say, decisions that we make around that $5 billion component may well have implications for the fund more broadly, and we will. I'm not trying to be tricky about it. It is a decision that is actively being worked through right now.
With the rate of return that's expected now, the 2 to 3% above the 5-year government bond rate over the medium to long term, I should say. Medium to long term, you're measuring in calendar years, or do you measure it in quarters? How is that measured?
Well, I think the fund will be in a position to answer those questions about their approach to all of that. But as I say, the Net Zero Fund is designed to support large facilities and manufacturing facilities to improve energy efficiency, and scale up local manufacturing. There has been an extensive design process. I think we've received more than 100 written submissions, but I attended one event where there were many manufacturing leaders there, so there's active discussion with the manufacturing sector and the investment community around these questions, and they do go to all of the issues that you raise, but it's a process that is in train as we speak. So,
obviously, you are responsible for the design of this fund and the changing design, should it be adjusted. In your mind, Minister, when should we expect to get a return on investment from the National Reconstruction Fund?
Well, Senator, again, I'd rather let the fund speak to the return approach. There's in my mind, the objective here is to secure a return at the rate that's set out over the medium to long term.
But I know, but I
there are examples, of course, of the fund making investments that have done very well in the short term, of course. But I think I am very focused on what is the purpose of this fund. And
yes.
The purpose
so
of this
just
fund
can I just be clear on medium to long term for you?
Well, I'd love to. I'd prefer to engage on those questions when the fund is here. But medium to long term for me, it's just my view. is over years, not months.
So do you personally have an appetite then for the National Reconstruction Fund to be more aggressive?
Well, I'm very focused on what the purpose of this fund is and what its ambition, what the government's ambition is here to achieve, and that is to achieve more investment in manufacturing, in technology, in the priority areas that are set out as the mandate of the fund.
I know what its purpose is. I'm just wondering if you're going to do the work to revise the risk appetite of the National Reconstruction Fund, is consideration also being given to changing when the National Reconstruction Fund might be required to deliver a return?
Well, I think I'll leave it where I've left it, which is that we will come out, as I said, the approach that we take in terms of this component of it, it's a large component of the fund.
Why is it deemed necessary to change it in the first place?
Well, we are, as was indicated at the time, aggressively seeking to support industry, blue-collar jobs in outer suburbs and regions.
Yes.
With a practical way of providing support that supports their capital investment.
Yes, and it's already doing that. Why does it need to be changed?
Well, I want to see it do more, and I want to see it do it in a way that's measurable and sustained. And I'm very confident that we've got the framework that we need to do that. The additional $5 billion commitment does require a consideration of all of those questions, and we'll reach a conclusion.
A more aggressive risk appetite.
Shortly. It requires a consideration of what's the best way to deliver that result.
Is there a way to deliver that result that would require a less aggressive risk appetite?
That's a matter for the design process to consider.
But you're in charge of the design process.
Indeed, but we're a cabinet-style government, Senator, and we
You're
do.
a very secretive statement.
No, well, I don't think that's fair on this on this point.
Once again, you've announced it.
Yeah.
You announced it, and then.
Well, it's hard to consult with industry if you don't announce it. You can't say, look, we've got a secret, Australia. And we'll consult with industry about the secret. We've announced the broad parameters, and we've said to industry and the investment community, here's what we're prepared to do. What's the best way of us delivering this? It involves the investment community and industry.
It's not that old. You did it a couple of years ago.
Yeah, and we are working hard to deliver the best outcome that we can for industry, and I think it's a fair enough thing.
And a return for the taxpayer.
To take a heartbeat here for a moment and engage with industry to make sure that where we've got an opportunity to lift performance, that we're doing it.
And a return for the taxpayer.
Yeah, well, this fund is designed to operate as a fund that has a return.
Yeah, otherwise it wouldn't be off balance sheet.
Yeah, that's right. That's right. So all of those matters, as you can imagine, it's been dealt with by me and by colleagues across government.
Thank you, Deputy Chair. Senator Canavan's just got a very short.
Keep us on time. Just leading on from the safeguard mechanism, I just wanted to check whether the department's involved with the review of the carbon border adjustment mechanism, or I shouldn't say of potentially applying a CBAM.
Oliver, Head of Heavy Industry Transition Division, joined by my colleague Leah Watchick. So I'm glad you asked me that, Senator Canavan, because I was just sitting there thinking that I didn't mention the one thing that the concrete and cement industry does talk of,
yes,
and that we hear from them, is that they are interested in a carbon border adjustment mechanism. And I think, as you're aware, that review process has been led by Professor Frank Giotto. They have put out 2 consultation papers, in fact, and I understand final advice will be coming to government at the end of the year. Government hasn't yet made any decision about a carbon border adjustment mechanism.
So, sorry, I didn't mean to cut you off.
No, go ahead. You were asking about the safeguard mechanism.
Just trying to, who's that report going back to?
I understand it will go back to government, and it is being progressed.
I meant which department within government?
It's the Department of Climate Change.
Okay, I thought it probably was. But so what? Just explain to me what your involvement is in that review.
So we've been involved in all stages of that review. We work very closely with DQ on that review. Again, as I said earlier, like the safeguard mechanism, these are key mechanisms that affect and drive industrial decarbonisation. So they're front and centre for us, for our policy and for the advice that we also give to our Minister.
Okay. And as you say, the cement industry is requesting a CBAM right now, that's correct?
That is my understanding, yes. And in fact, the second consultation paper that was issued late last year did indicate that cement and concrete was the more likely candidate of any of the subsectors where consideration could be given.
Can I just try and understand if net zero is making things cheaper, why would the cement industry need a tariff to protect themselves from countries that are not pursuing net zero or the same climate reductions we are?
So I guess I would say a few things, and that is that the government has committed to net zero, and we know that most of the world is moving in that direction. I think it's around 140 countries that have got their own net zero commitments. We know that Australia writ large stands to benefit from that shift and to incur costs if in fact it does not transition. We know that the various subsectors, and there's 9 covered under the Industrial Net Zero Sector Plan, they all face different pathways to decarbonisation, different timeframes, different investment trajectories, different benefits also that will arise. And we know that it won't be linear as a result. So for concrete and cement, as I mentioned, it is one of the harder to abate subsectors. There is vigorous work going into R&D. We are seeing very strong examples of innovation. In fact, I was just being informed that our team was meeting with Smartcrete this morning. We haven't had a readout, but I know that they're doing excellent work. And the CBAM would be then about trade fairness and protecting industry during the transition, recognising that there is variability across these sectors. It's about getting out in front, seizing that foothold in global markets, and countries, particularly as we see in some of those other subsectors that are also hard to abate, like green steel. There's a lot of work and effort going into R&D, and the sense is, what are the enabling settings that need to be put in place? What are the investments that need to be put in place to support that transition for our industry?
Just, I think I might just take the opportunity. Could I try and table that? I think I had distributed it earlier. I don't know if you still have it, Sean. But I didn't get a chance to.
Is that this one?
Not that one. There should have been another one. Oh, yeah, well, you can do both of them. The graph there on the bottom is the one I'm referring to. So, it has been tabled, has it?
Yeah.
Oh, great. Because I didn't get a chance to refer to it. Ran out of time before. But this is that graph on the bottom, I think, of your page is from the Statistical Review of World Energy, showing Indonesia's coal production this century. In the last 12 years, Indonesia's doubled its coal production. I don't know if you've seen. You mentioned that. Just responding, you mentioned that the rest of the world's heading to net zero. Well, Indonesia's special envoy for climate change and energy earlier this year was quoted as saying, and I quote, if the United States does not want to comply with the international agreement, why should a country like Indonesia comply with it? He says this is a matter of justice. Indonesia produces just 3 tonnes of carbon, while the US produces 13 tonnes. Yet we are the ones being told to close our power plants, reduce our steam power plants. So where is the sense of justice here? It certainly doesn't seem like Indonesia's following that. This comes on the back of an OECD report in recent weeks, which says that the action on climate change has ground to a halt around the world. I'm just wondering what you base the idea that other countries are going to net zero on, when, I mean, I know they're committed to it, like Indonesia is this graph. I put the dot there. The dot is mine. Everything else is from the Statistical Review of Energy. They did sign up to net zero. They're now sort of saying, oh, well, we didn't really mean it, guys. They're clearly not acting on it. So why would this even matter to us? Because we're told coal is more expensive. So why can Indonesian concrete undermine us, undercut us? To the extent we need to put a tariff on them when they're apparently using the expensive and unreliable coal.
Well, the question that you're asking really is veers very clearly into asking an official to express an opinion.
It's not opinion on policy,
which she's not, able to do. I can.
Okay.
I can. And I wouldn't cherry pick the statement of some individual in Indonesia in terms of what their policy settings are. And, I suspect that Indonesia's approach will be very much like Australia's in this regard. Their coal production may increase. Some of it will be for domestic purposes. Some of it will be for export. Australian coal is largely for export. And we're not building coal-fired power stations here because they're too expensive and they take too long and they're too unreliable. There is, I think you started this new journey on these questions over the issue of the future of the cement sector. And that sector does face some challenges, which they are meeting squarely. The safeguard mechanism is helpful for them to provide some certainty, finally, about government policy settings. We're working with them in relation to that. Mr Jotso's review is being considered by government, and don't want to telegraph any particular approach to how we deal with that, but that is an industry that has, of course, wants certainty around the energy questions. It is, as you say, in its production process itself, the chemistry of that process is hard to abate. So that represents a set of challenges. We're working very closely with them as our colleagues, Minister Bowen and colleagues in DQ. And of course they face what is a volatile trading environment where there are like a number of our large industrial facilities, very significant behind-the-border subsidies. We are attending to all of these questions, and will continue to do so. In finally, for industry, over the course of last term, developing and implementing a cohesive approach to all of this.
We're at 9 minutes.
Okay. Well, look, you've also got on that, I've also tabled there the prices. And you can see Indonesia's electricity prices are a third of ours now. We used to be about half what we are today, so we would have been pretty comparable to them if we'd kept that. Given the competitive risk, and I haven't raised yet the fact that Indonesia's effectively stolen our nickel industry already. Their new president is explicitly targeting copper and bauxite. To industries that are important to us as well. Is anyone doing any work on why Indonesia is able to deliver electricity to their industry at a rate at a price 3 times lower than we can?
Well, if I was in your shoes, Senator, and I was asking a question about electricity prices, I'd start by apologising. I'd start by apologising for a decade.
Minister, I've said sorry that I didn't. I've said sorry many times. I didn't succeed in building a coal-fired power station.
And I'd apologise for what you're doing now.
I tried. The good people's department tried to help me.
Which is creating more disruption and more sovereign risk. Every time you wreck, blue-collar workers pay.
When are you going to say sorry?
Every time you wreck, ordinary Australians pay.
Well, the data's there, mate.
Let's try and wrap up.
As a consequence of your wrecking,
you're in government.
Blue-collar workers pay.
Let's swap sides, because apparently I've got all the power and you don't.
We're almost...
As a consequence of what Mr Morrison and Mr Abbott and Mr Turnbull...
Can I get back to the
Minister, yep.
When he answers the question, we can go.
Yep, we're almost there. Last question, and then...
Has the Minister asked the department, or has the department on its own volition sought to investigate why Indonesia's industrial power prices are less than a third of Australia's? Have they?
We're very focused on the competitive position of Australian industry and Australian energy.
Have you done that? And if so, if you've done it, what are the conclusions?
If the officials have got anything to add about Indonesia in particular, I'm sure they will. But we are very focused on achieving the lowest cost, most reliable electricity system for Australia, even if the so-called alternative party of government wants to continue wrecking jobs in the process.
Senator Canavan, we haven't done anything directly on Indonesia and linking to cement and concrete. And as I said before, I'm happy to take on notice a bit more about the Indonesian situation. I do have some information here which makes it interesting for me, which indicates the top exporters for concrete and cement are China 24%, Germany 8%, Italy 6%, Spain 6%, USA 5%, and I don't see Indonesia here.
Is that globally though?
That's globally. Yeah. So I am interested.
Presumably our concrete
said.
Demand is very low.
Yes, so
compared to the global.
We'll look into that.
Okay. All right, thank you.
Okay, thank you, Senator. I think that concludes our session for program 1.1. We can now welcome representatives from the National Reconstruction Fund Corporation. If they could make their way to the table as quickly as possible, that would be appreciated. Thank you. Just as the officials are coming to the table, just to let people know that the committee has agreed to release NOPSEMA. So for those watching at home. The committee welcomes representatives from the National Reconstruction Fund Corporation. Just to let people know, we will be stopping for a dinner break at 6:40. Would any of the representatives from the National Reconstruction Fund Corporation like to make an opening statement?
Thank you, Senator. David Gall, CEO of the National Reconstruction Fund Corporation. No, we don't have an opening statement today. Thank you.
Thank you. I will go to the Deputy Chair, Senator Hughes.
Thank you, Chair. Minister, at the last round of estimates, we examined in some depth the appointment process of Mr. Thompson, who's a friend of yours, and you stated that you were very confident in the board. Minister, are you aware of how many board meetings Mr. Thompson has attended in the year 24-25?
No.
The answer is 8. There were 11. There were 11 board meetings. I'm concerned, Minister, why your friend Mr. Thompson might have only attended 70% of the board meetings, and that's the lowest out of any of the full-time board members. Is that something that concerns you?
Oh, I'd like to see board members attend every meeting, I'm sure, but I have no. It's not something that I've given any consideration to in terms of the individual attendances of board members. It's a board that I've been engaged with. I talk regularly to the CEO and the chair. Have some confidence in their operations. If you've got questions about board governance and how those meetings proceed, I'm probably. I've attended a few of them, but Mr. Gall and colleagues are probably in a better position to answer those questions.
Have you attended any of the subcommittees as well, Minister?
No.
There is one subcommittee, the investment subcommittee, which obviously is a very important one for the National Reconstruction Fund. And again, Mr. Thompson is a member of that. He's only attended 7 out of 10 of those meetings. Again, the lowest out of all board members. Minister, in the private sector, a board member who only attends 70% of board meetings is unacceptable. This would raise questions about his commitment and performance to the role. Does it raise issues for you about commitment and performance to the role? No, I expect if there are issues that went to any individual board director and there was concern at the board leadership level, that would be brought to my attention. Minister, I was reviewing the estimates transcript and I asked you about whether you had lobbied the Prime Minister or Minister Husic or Minister Gallagher about appointing Mr Thompson to the NRF board, and you correctly stated that it was a cabinet appointment process, but you didn't actually answer my question. So I'm just going to ask you again, did you lobby either the Prime Minister, Mr Husic or Mr Gallagher for Mr Thompson to be appointed to the board of the NRF?
As you correctly indicated, Senator, it was a cabinet process, and while I was an assistant minister at the time, I'm still bound by those requirements.
How did Mr Thompson's name be included in the mix for the role?
It's a cabinet process.
Well, he wasn't shortlisted by the recruiters, we know that. He was appointed 2 months after the rest of the 8-member board. He wasn't subject to due diligence by the recruiters. The due diligence that he was subject to was done by the department but has mysteriously been misplaced, and the auditor has noted that the department warned the government that the appointment may attract some scrutiny. There was only a desktop check done of his for his due diligence. Theoretically, that said that it didn't pose a significant risk. That does sound like an unusual appointment and a very unusual appointment process. So I don't think it's an unreasonable question to ask how Mr Thompson's name appeared on the radar of Cabinet.
Well, as I say, it's a cabinet process. All I can say about Mr Thompson is that he has a very strong track record and...
of what?
Well, if you'd allow me to finish, Senator, he's got a very strong track record, including with previous Conservative governments, of working on industrial investment questions, including and in particularly in the shipbuilding sector and in the rail sector. So he's, as you say, known to me, but it's a cabinet process. There has been, I think, the ANAO report did make some observations about the appointment. They don't go to his capacity to perform his function on the board. It's good to see, I have to say, somebody who's got a trades background and experience in manufacturing on that board. It might not be. It's having diversity on that board, as far as I can see, is a very good thing.
So you are confident that Mr Thompson has always conducted himself in a professional manner? Yeah.
Well, I mean, I haven't been told any different, and I would expect if there are issues in relation to board directors, that it would make its way up to me in the normal course of events.
Mr Gore, can I ask a question about social media, the use of social media for the National Reconstruction Fund, and how important social media is for the awareness of the National Reconstruction Fund?
Yes, Senator. We're quite extensive users of LinkedIn, so that's the specific social media that we tend to use, and we have promoted the NRFC site on LinkedIn quite heavily through the course of this year. One of the things that we do look to promote on LinkedIn is investments that we make, and obviously have that opportunity too, when those investments do something, to be able to congratulate them and promote that more broadly as well.
And when you use LinkedIn and you're dealing with the investments, I'm assuming you tag in the names of the organisations in which you're investing and tag in the names of the people that are involved in, if there are photographs or CEOs or whatever it might be.
Senator, not necessarily. Sometimes you mightn't tag in the name if that was the specific entity that put the LinkedIn post in the first instance, because you'd know that was actually in there. And obviously, if people aren't on LinkedIn, you can't tag them in either.
All right. So, Mr Gore, Mr Thompson was tagged in various LinkedIn posts made by the official account, the National Reconstruction Fund Corporation account. And the last example of that, he was tagged and pictured as standing at a formal event in the Hunter region. And Any interested citizen, I'm assuming, would easily be able to visit the unlocked page of Mr Thompson, having noticed his presence on the National Reconstruction Fund's pages. Minister, do you expect that your public board appointments should conduct themselves in a professional manner on social media?
I haven't. I sense that there's something that you're going to ask me, Senator, so ask it.
There is a series of social media posts, and I'm going to draw your attention to them, that Mr Thompson has made on LinkedIn while he was a board member. And I am happy to table those. What would you like me to do, Sean? But just for your information, so we're not waiting for them to be tabled, there was a series of them where Mr Thompson made some rather critical remarks about my colleague Angus Taylor, that he has never built anything that builds at all. The LNP has never built anything that builds at all. He has reposted some posts by the ACTU that support the Labor government's, oversight of a piece of legislation that was already in place under the coalition, but whatever. He's also reposted, with comments, this is what real leadership looks like, under one of Anthony Albanese's posts. He's written one that says, don't risk Dutton, that has a cartoon underneath it. There is one that says, only one party is committed to a future made in Australia, and it's the Australian Labor Party. That was a direct quote by Mr Thompson. He's also reposted an attack on me, which I was pleased to see. Do you think it's appropriate, Minister, that a public board member is using their profile to make political comments?
I don't think there's any... I'd be very surprised if there was a restriction on people who are on boards.
Not after whether there's a restriction. It's not a legal requirement. It's just an expectation of behaviour.
Yeah, that's what I mean. What I mean is, I thought he must have done something dreadful, Senator. I'll have a look at the posts.
So that's acceptable. I just want to know if that's the sort of standard of behaviour.
Having a view about Mr Taylor's capability, it's not.
Or mine.
He's not the only person in Australia to think that that guy's not up to it.
If you had known that he was making these posts or going to make these posts, do you think that you would have appointed him to the board still?
Well, as I say, it was a cabinet appointment. All of the relevant checks were made. Very confident in the appointment.
Do you think that you'll have words with Mr Thompson now that you know that he has been making social media posts on LinkedIn that are politically motivated and at the same time being tagged into the National Reconstruction Fund board's
I won't be rushing out of here to ring him up. No.
You don't think that that's worth the conversation?
Well, I'll have a look at the posts. I don't spend time. You've gone well beyond my knowledge of social media posts. Mr Gall's talked about how people get tagged and all that sort of stuff. It's not my scene really.
Is your scene the Briggs Review?
My scene is doing the job that I'm tasked with doing.
Have you read the Briggs Review yet?
Yeah. And
do you think Mr Thompson's appointment to the National Reconstruction Fund board is consistent with the recommendations in the Briggs Review?
It's an appointment of government, an appointment of the cabinet.
I know, but is it consistent with the Briggs Review that you withheld from public scrutiny for 2 years?
I know that there are different views out there about within the opposition about the role of trade unions and
nothing to do with trade unions, just to do with board appointments.
Whether blue collar workers should be on these kind of outfits, but I've got no difficulty with the appointment. It's a cabinet appointment. I'm just reviewing these now. He's not. On the basis of these, you would draw the conclusion that he's, not a supporter of the Liberal Party. He doesn't. That's not a qualification for office.
No, but an apolitical approach to his role on the board of the National Reconstruction Fund, I would imagine,
We've got a former Liberal assistant treasurer on.
I don't see any posts from her.
Yeah, but I wouldn't be troubled. I wouldn't be troubled by people having different views. It's a board with some diversity and some capability.
I know. It's not particularly professional, though, is it?
I don't single her out, but because, you know, she is just one of a very capable board.
Who was put through appropriate due diligence by a recruiter, not some sort of desktop due diligence that somehow magically ended up in the bin.
Yeah.
Do you think that a desktop due diligence would have uncovered a preponderance to political social media posts from Mr Thompson?
Well, I don't know about that, but it was a cabinet process, and I've told you as much as I can about it.
Okay. Mr Gall, I want to ask you a couple more questions, please, specifically about how much the NRF has invested so far.
Thank you, Senator. We've invested $1.02 billion.
1.7, did you say?
No, 1.02 billion.
02, sorry. And to date, how many jobs has the National Reconstruction Fund created?
So the 17 investments that make up that $1.02 billion, we believe in the work that we've done will create approximately 850 additional jobs.
850. Okay, thank you. So you've invested 1.02 for 850 jobs. Is that right?
I think...
And that's potential jobs, that's not actual.
That is potential jobs which we will continue to monitor and measure over time. I should say that is one of the factors that we're looking at in terms of the, if you like, the public policy outcomes that the fund is looking to achieve, and of course that's in addition to the commercial returns that the fund, we expect the fund to produce.
Okay. The opposition put in a Freedom of Information request, Mr Gall, for your estimates pack for October, and at page 20 under the section titled Jobs Created, save for 2 sentences, the entire section is redacted. Now, why is that?
Senator, I don't... There must have been more information in there. I can't answer why some of the specifics have been redacted, but I'm sure that was the advice that we got at the time when that submission was made.
Okay. It's a legislative requirement for the NRF to be creating jobs through its investment activity. That's a very, very specific requirement, creating jobs. Can I just get a sense from you what your interpretation is of what it is that creates jobs? Is it a wholly new job through the investment, or is it how many jobs the investment supports?
Senator, so I think there is a range of factors here. There's certainly the jobs that have been created directly from the investment that we're making. I think some of our funding will go to the sustainability of the business as well. So some of our investment may prevent jobs being lost. So there's a sort of, you know, if you like, an opportunity cost associated with that. I think the important thing is we want to measure and see over time the results of what the fund is able to achieve in terms of jobs, and not just any jobs. You know, we're talking about well-paid, sustainable jobs off into the future as well.
So I want to ask you specifically about that idea of the opportunity cost, because I want to talk to you about one investment that you've made into Paddy's Food Group. And I'm assuming that's one of the ones that are supporting existing jobs rather than creating new jobs. Is that right?
In terms of Paddy's Food Group, we expect that to support existing jobs, but of course they are and going to continue with our support investing in plant and equipment. And I think that should give us confidence that over time that will see a very efficient plant that is enabling jobs to be sustained over the long term.
Yeah, don't get me wrong, I'm not criticising Paddy's Food Group. I think that they are a terrific organisation, you know, big employer down in the southeast of my state. I'm scratching my head as to how they form an agriculture priority investment.
Senator, Paddy's Food Group and businesses like that, they're manufacturers, and they're manufacturers of agricultural products. And if you look at our priority area, it's about agriculture, forestry and fisheries value add. And so we believe, and total understanding is that Paddy's Food Group is absolutely consistent with that. You're talking 4 and 20 pies, that's meat, that is the value add on beef product.
Yep, I agree. I'm happy to save our economy one pasty at a time, but I would like to know vaguely, and you don't need to tell me exact numbers here, what the profit was, if anything, of Paddy's in FY 2025, and whether that was considered, obviously understanding that this is a company that's owned by an international parent, when the application for National Reconstruction Fund money was made.
Senator, when we assess any of our investments, whether in Paddy's case that was debt that we put into that company, but it could be equity as well, we work through, obviously our credit processes, which include serviceability analysis and understanding of, liquidity, solvency, etc. And that all was factored into our, decision, our credit decision to approve that facility. So I can't go into specific details. I don't think that is appropriate, and it's certainly confidential in terms of the relationship that we have with our customer, but that process we went through in the normal course.
Do you have to do an assessment as to whether that debt facility could have been raised through the private sector as opposed through the National Reconstruction Fund when you make that decision? Do you have to be a kind of, particularly for a debt facility, like a lender of last resort?
Senator, we do look and do an analysis around what is the need for, what is the role of the NRF there. And fundamentally and consistent with our legislation as well, we want to be not, if you like, crowding out or displacing private funders, private capital, but actually acting as a catalyst to hopefully crowd in other funders as well.
Have you crowded in other funders here?
Senator, I believe that we have. We are part of a group of funders that have gone into Paddy's.
So there's a consortium approach to it, or is it just...
It is there, Senator. There is a syndicate.
Right.
I think what's important here is it's not just the money either, and I think one of the important roles of the NRF is to provide stable and patient capital as well. One of the attractions, particularly for a big manufacturer who's buying and investing for the long term in their business, is to have some longer term funding that matches off well against those long-term assets. And that's a specific role that the NRF has been able to play.
I realise, last question, I promise.
Okay. 5 minutes to
Oh, excellent. Right, last 3 questions then. I was speaking to the Minister earlier about some potential changes to the investment mandate for the National Reconstruction Fund and how that might affect changing the risk appetite might potentially affect its ability to deliver that return objective over the medium to long term, and we were sort of dancing around what medium to long term actually meant. I'm interested because the other National Reconstruction Fund investments, say for one, have all been equity investments. Does a debt deal make it more or less likely that there will be a return on investment?
So, Senator, we, in terms of the portfolio construction and the investments that we're looking to make, we have a plan around a significant portion of the fund being in debt deals, and we've factored that through in terms of the overall medium to long term view of achieving the 5-year government bond rate plus between 2 and 3%.
Can I just be clear with you that medium to long term, because the Minister didn't really say what medium to long term meant. In investment parlance, it's normally sort of like somewhere between 5 to 10 years is medium term and beyond 10 years is long term. Is that the way you think of it?
Senator, that's exactly right. I was going to say over 5 years. Yep.
Yep. Okay, terrific. Can I ask you, with the debt deal, you said it's long-term patient capital, and I understand that too, but there is an expectation that the debt will be repaid. Yes. Okay. All right. Okay, that is very helpful. Are you considering any further debt deals for other proposals that have reached phase 2, past those initial checks? Am I allowed to ask that?
You can absolutely ask that question.
The question is, can I ask it and get an answer?
So the answer is yes.
Right. Okay. Good to know. All right. And can I just for my own sake, when you say modernised production facilities, what is it's actually being reconstructed at Paddy's facilities? What are they building?
Back at Paddy's, you're talking about? So my understanding is Paddy's will continue to invest in production lines that enable them to increase capacity and output.
Okay. I'm thrilled to know that there is an enormous demand continuing for pies and pasties and sausage rolls everywhere. Thank you. Thank you very much, Mr. Law. Thank you, Chair.
Okay. For the footballs. It is 6:37. We will now suspend for our dinner break and be back at 7:22. We've caught up 3 minutes. 7:22. We're winning. Thanks, everyone.